UK's response to this? What are the Europeans doing about all of this as they look at this play out and see these innovative ways of coming up with new ways to raise money? How are they thinking about this situation?
Well, I would say, to Secretary Bessent's point about Japan, the Bank of Japan being behind the curve, I would imagine that some Japanese officials would say, that the Trump administration is behind the curve on delivering the actual fine print of these deals that they're trying to negotiate. The UK still doesn't have clarity on steel. The EU is still waiting for the actual executive order to carry out the 15% auto tariffs that it was promised. At the moment, it's paying the 25% still. Same with Japan, same with Korea. So these countries that think that they got a deal with the administration are paying those higher sectoral tariffs at the moment and waiting for the follow-up from those negotiations that took place 2 or 3 weeks ago.
Interesting final point, Brendan. We've got to leave it there. Appreciate your time. Brendan Murray there on trade and the effort to do a whole lot more to raise money here in the United States.
How do you get clarity if you're a trading partner, if this is a type of bespoke deal? Wasn't this supposed to be a national security issue? Where does national security begin and raising revenue pick up?
It's not a national security issue anymore, we were told yesterday, just to confirm.
Well, I guess some people say the H20 chip is 5 years behind where you are in terms of the B200 or whatever the latest chip is that people are selling in the United States. That said, it sort of is a fungible measure that we're looking at to really understand what's allowed and what isn't.
To your point, we're certainly blurring the lines pretty quickly on this side of the world. Equity futures on the S&P, if you're just tuning in, we're doing okay. Back-to-back all-time highs on the S&P 500, just a little bit softer, negative by 0.06% on the S&P. With a look at our top stories worldwide with our Bloomberg Brief, let's cross over to Yahara for more. Hey, Yahara.
Hi, John. The UK economy grew at a faster pace than expected in the second quarter. GDP rose 0.3% in the 3 months ending in June, maintaining positive growth for the third straight quarter. That growth was led by services, while construction also increased, but production did fall slightly. Meanwhile, Treasury Secretary Scott Bessent has been granted an extension to fully divest all his assets in compliance with an ethics agreement. Bessent said the remaining assets represent 4% of his required divestitures and that much of them are farmland. According to documents reviewed by Bloomberg, Bessent was given until December 15th to complete the divestiture. And Deere shares are falling nearly 6% in the pre-market after the tractor maker trimmed its full-year outlook. The results indicate that farmers are holding back on spending with grain prices under pressure. The sector has been expected to bottom out this year, but uncertain crop demand amid President Trump's trade wars is throwing that timeline into question. That's your Bloomberg Brief. John?
Yahara, thank you. Appreciate it. More from Yahara in about 30 minutes' time. Up next on the program, looking for the Fed to go big.
I do think we could go into a series of rate cuts here, starting with a 50 basis point rate cut in September. The rates are too constrictive. We should probably be 150, 175 basis points lower.
That conversation up next with Aditya Bave of Bank of America, live from New York City. This is Bloomberg.
Welcome back to the circuit. This time, we're taking you to the frontier.
Do we have a camera, or do we? We don't want to lose you, Emily, in all of this.
Stargate, put that name down in your books.
What we're undergoing right now is sort of the largest infrastructure build in human history.
To meet the people rewriting the rules of code and culture.
How do you personally grapple with the pace of it all?
It does feel like it's going very fast.
When did you realize, oh my gosh, my life is never going to be the same?
The day I got engaged, I was like, whoa, what have I bitten off here?
Where the future gets real.
How confident are you that AI's promise will outweigh the perils?
I'm not confident.
So the tech companies are lying or fudging.
And a little weird.
What's the point of this?
What is the point of any of this?
Tune into Season 3 of The Circuit with me, Emily Chang, Thursdays at 6 p.m. Eastern on Bloomberg Originals and Bloomberg TV.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Check out the market. All-time highs at a close yesterday. Futures pulling back, not even 0.1%. No drama there. That's the stock market. In the bond market, the 2-year yield at the lowest level since the end of April, down for 3 consecutive days. We're back to 367 at the front end of the curve. Under surveillance this morning, looking for the Fed to go big.
We could have had rate cuts in June and July. So that tells me that there's a very good chance of a 50 basis point rate cut. I do think we could go into a series of rate cuts here, starting with a 50 basis point rate cut in September. The rates are too constrictive. If you look at any model, that we should probably be 150, 175 basis points lower.
Here's the latest this morning. The Treasury Secretary, Scott Bessent, making the case for a jumbo rate cut next month. Aditya Bhaver, Bank of America, doesn't agree, writing markets are pricing almost a 90% chance of a 25 basis point cut in September. But we aren't yet convinced, in part because we think the economy might be re-accelerating. Aditya joins us now for more. Aditya, good morning.
Thanks for having me.
You've got a good story to tell about this US economy, so let's spend some time on it. Why do you believe we could be seeing a re-acceleration in the months to come?
Well, it's partly what we're seeing in our internal card data. So we look for a pretty solid retail sales print tomorrow, slightly above consensus. And what we learned on Tuesday is that that won't be largely because of tariffs, as it was in June, right? So you'll see a pickup in real spending. You're seeing strong auto sales for July. Air travel really picked up in July, and it's continued into August. And our card data have actually accelerated in the first 2 weeks of August. So there's a few things going on there that suggest that at least the consumer is picking up here.
And this is one reason why people shrugged off the higher than expected core CPI that we got on Tuesday, because it was largely due to airfares. People are flying more and prices are going up, and people said that's a very volatile indicator. Can this be expansion without inflation? Can this be acceleration without some sort of material price shock that does continue?
There doesn't need to be a huge pickup in inflation, but the point that we've been making is that even X of the tariff shock, we can debate the tariff shock endlessly, but even X of that, I think the core PCE, headline PCE, probably stuck around 2.5%. And that's the concern that we have for Fed policy. We think they're meaningfully away from target and even further away in the other direction than they were before the pandemic, when they were obviously very concerned about the undershoot.
Is that wrong? I mean, is this maybe the appropriate inflation rate that we should be targeting? Is 2.5%? And shouldn't the Fed maybe allow that to be the case if that means a healthy labor market and an economy that keeps on going?
That's reasonable, but then they'd lose credibility around their 2% target. So if they want to change their target, that's fine. I think it's a little bit dangerous to change your target when you haven't hit the target yet, because then it becomes a slippery slope. But if they do that, then we'll adjust our forecasts accordingly.
That's your take on inflation. I want to build on your take on the labor market. Yep. We've seen a real step down in payrolls growth. Have we seen a move in slack? Have we increased slack with that step down in payrolls growth? Because I think that's the more important question for this Federal Reserve.
That's what's really interesting, and I think the answer is not entirely obvious. The unemployment rate has been range-bound for a year. The ratio of vacancies to unemployed workers has basically been range-bound for a year. So it is possible that a lot of this slowdown is because of labor supply rather than labor demand. And consistent with this idea, what you're seeing in wage inflation, total income growth is actually quite solid. And that's really important. Because what happens typically in a downturn is that you get this snowballing between job losses and therefore lower income growth, and then slower consumer spending. But if income growth's holding up, then you might not get that knock-on effect on job losses.
Do you think we're confusing a cyclical term with a structural shift then? Is that ultimately the source of confusion at the moment?
Yes, and that's what can happen with supply shocks. We're being hit by so many supply shocks right now that it makes forecasting very difficult. And we think folks like, let's say, Governor Waller, are not putting enough focus on the labor supply shock. So the slowdown in the labor market could just be a supply story, and as you say, slack hasn't really increased.
It's very hard to understand this labor market. It's even harder when there are questions about the integrity of the data in terms of just the responses to surveys and recently the firing of the head of the BLS, the Bureau of Labor Statistics. What are you looking at in terms of secondary and tertiary sources of data to fortify your view in absence maybe of said labor market report that we get every month?
Right, so on the labor market, you could look at jobless claims. I think that's a super useful indicator. You could look at you could even look at just consumer spending data, right? Again, going back to our BAC card data, you see that live, and it's very unlikely that folks are going to keep spending on discretionary activities if the labor market is holding up. And then you could also look at ADP.
Typically, it would be hard to make an argument that the economy has fallen off a cliff with jobless claims expected to come in at 225. Later on this morning. 225 historically exceptionally low.
This is the sort of surprising aspect of this. When people look at jobless claims, it's supposed to be the most real-time indicator, and yet it's been basically range-bound or flat for a number of years now.
With an expanding labor market. So we've been looking at the level of jobless claims and comparing that to where they were, 10, 20 years ago. But if you scale that to the labor market, claims are actually extraordinarily low. There are some structural reasons for that. Folks are doing gig jobs instead of applying for claims, but that's actually good for the labor market, right? It's good for the economy.
Aditya, appreciate your take. Constructive view on the US economy. Aditya Bhavid there of Bank of America. Still looking, I believe, for no cuts this year, is that right?
That's right.
No cuts for 2025 and looking for a step up in economic activity.
Yeah, for all the right reasons, to your point that you just said there, that essentially the economy is doing just fine, in his view, going forward, even with rates where they are. So this is the competing view. Can you have an economy that's doing just fine and still justify 50 to 75 basis points of rate cuts like the market is expecting? Or is there a dissonance that's not getting priced in either with respect to the rates picture or the equities picture?
Market wants its cake and wants to eat it too, basically, right? Wants the rate cuts that come with the kind of deceleration in the economy that is usually associated with a market that's not doing well.
This administration wants its cake, it wants to eat it too. And so the question is, will policymakers agree with the economic rationale behind that?
Equity's doing all right this morning, just about unchanged on the S&P, slightly softer. Up next, we'll catch up with Ed Yardeni of Yardeni Research. We'll speak to Ed Mills of Raymond James, the former World Bank president, David Malpass, and Sonal Desai of Franklin Templeton. The second hour of Bloomberg Surveillance, up next.
In case you missed it, on Bloomberg Open Interest.
When we look at our portfolio, we see an IPO pipeline that's the biggest since it's been in 2021.
In M&A and IPOs, we've actually had close to record performances in that space. We're going to have an interesting year.
We're having a lot more conversations around putting dates on calendars. I think we could see a very active second half of the year.
Don't miss Open Interest live weekdays.
You have had a number of games overseas in recent years, and in fact, you opened the season going to the opening game in Brazil. So do you expect to do more overseas games, and is that a part of your strategy?
It is. We had 5 last year. We expect to have 8 this year, which will be the highest we've ever had. Our hope would be at some stage to get to 16 games in the next few years. We think we can do that. I think it's an indication of the popularity of our game. Every time we take our game to a new market, Brazil's a great example of it, the fans go crazy for it. They sold out the tickets in less than 90 minutes. People had a wonderful time. It was the talk of the town. And I think it will be the basis and the sort of the match that lights the excitement and the popularity of the game in that market, as well as what we're doing around the world. So we're very excited by it. It's just one element of that strategy. You need to have television, you need to have activity and participation in the sport, and flag football is a big part of that. So all of those factors, I think, are going to be what we think will be a very successful formula to be a global sport.
Or do you ever envision having a team that's based overseas in Mexico City or in London?
Listen, we've talked an awful lot about it, and I think there are markets that could, without question, support an NFL franchise.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency. Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
All right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
What we've got is a tortoise of an economy and a hare of a market.
There's a lot of optimism baked in.
Global equity markets are overvalued.
It's all about large caps and tech.
If the market continues to do well and momentum is on the market side, I think the pain trade is still probably higher.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning to you all. The second hour of Bloomberg Surveillance starts right now. In your equity market, your scores look like this. We're down by 0.1% on the S&P, following back-to-back all-time highs on the benchmark stateside. On the Nasdaq, we're down about 0.1% also. A series of days now, too. Outperformance on the Russell. The small caps making a comeback. We're down 0.33% this morning. In the bond market, switch on the board. 2-year, 10-year, 30-year. Focus on the front end of the curve. 2-year yields back to since late April, 366.79. We're down another, let's call it a basis point this morning as we start to lock in some rate cuts.
Yeah, on the heels of the conversation that you and Anne-Marie had yesterday with Scott Bessent, Treasury Secretary, calling for a 50 basis point rate cut next month, followed by additional rate cuts down 150 to 175 basis points below where we are currently for the Fed funds rate, raises a question. Is the Treasury Department, Scott Bessent, someone who's known the markets for a very long time, seeing something in the labor market that really is concerning and prompts the Fed to play catch-up? Or is this something that is trying to put forward a political message to whoever will come in, who he will select to the Fed?
And I say both because it feels like both. We might get something different, though. Aditi Bave of Bank of America was on the programme just moments ago. Let's just pick out the data points we get later this morning. 8:30 Eastern, PPI, jobless claims. Jobless claims at the moment, 226. We're looking for 225 this morning. And Aditi Bave is basically saying this labour market is better than you think it is, one. And two, we're looking at the credit card data, the card data at Bank of America, and we're seeing a step up in spending and we're looking for a re-acceleration.
자, 잠시 후 개장 브리핑 시작하도록
Some of the
하겠습니다.
most discretionary parts
자,
of the economy,
2025년
talking about
8월
things like
13일
airline spending, which has been one of the
장마감
components
개장
of
브리핑
CPI that came in hotter
시작하도록
than
하겠습니다.
expected in Tuesday's report. A real question here also about those initial jobless claims that we're going to get in about 90 minutes' time. We've been talking about how they haven't really moved. They've remained around 220,000. Aditya's point, the overall labor base has expanded so much that that's an even lower number than it has been traditionally. Are we measuring the labor market correctly, either to the upside with some sort of reacceleration or to the downside, akin to what we saw in the labor market report 2 Fridays ago?
Its basic message is you can have a step down in payrolls growth without an increase in slack. that just because you're seeing this step down in payrolls growth, it doesn't mean the labour market's falling off a cliff. In fact, he's got very different views on that. What I find amazing about this moment is that we've actually got some real debate on Wall Street, away from the market. The economics debate at the moment can break either way, which I think begs the question, is the jury still out? Without a doubt. Can you draw firm conclusions by the time you get to Jackson Hole? Can you draw firm conclusions by the time you get to mid-September, even with an extra CPI, an extra payroll sprint?
And to build on your point, can you have your cake and eat it too? Can you have a Federal Reserve that cuts rates by as much as this administration says that they should be, while keeping inflation expectations under control and
자, 잠시 후 8시 5분 개장 브리핑 시작하도록 하겠습니다.
Is that a feasible goal at a time where this economy seems to be on a razor's edge, breaking one way or potentially another?
This market's just breaking one way, up and away. All-time highs again in yesterday's session. Futures this morning just a little bit softer. Coming up this hour, we'll catch up with Ed Yardeni of Yardeni Research as stocks look to build on record highs. Ed Mills of Raymond James on a new model for US sales in China, and the former World Bank President David Malpass on the race to be the next Fed chair. We begin this hour as rate cut bets send bond yields lower and help send the stock market back to back-to-back all-time highs. To discuss, Ed Yardeni of Yardeni Research joins us now for more. Ed, welcome to the programme, sir. Can this market, as we've been discussing, have its cake and eat it too?
자, 잠시 후 AI 개장 브리핑 시작하도록 하겠습니다. 8시 5분 시작하도록 하겠습니다.
October of 2022, and really it hasn't stopped. We had a correction at the beginning of the year related to uncertainty about Trump's employment policies for the government with Doge and uncertainty about tariffs. And so naturally, if you're an employer, you're going to hold off on hiring and not necessarily fire anybody. And so I think a lot of the soft patch, which is I think what it's been, is related to uncertainty. And I think the markets are starting to conclude that, you know what, uncertainty is going to be with us here for a while. Let's move on with our businesses. And I think the economy is in good shape.
The enthusiasm is starting to spread beyond the big tech story. 2 days of really decent days of gains for small caps. Now, Ed, whenever this market participants get a sniff of
자, 개장 브리핑 시작하도록 하겠습니다.
개장 브리핑
시작하도록 하겠습니다.
Real deal?
Well, you know, we've had lots of head fakes in that regard, really.
2015년 8월 14일 장마감 AI 모닝 브리핑입니다. 간밤 뉴욕 증시는 그야말로 금리 인하 기대감 하나로 뜨겁게 달아올랐습니다. 기자님, 오늘의 핵심 이슈 무엇부터 봐야 할까요?
네, 오늘 시장을 한마디로 요약하면 금리 인하에 대한 과감한 베팅입니다. 9월 금리 인하 가능성이 사실상 100%에 가깝게 점쳐지는 가운데 이제 시장의 관심은 인하 폭으로 옮겨갔습니다. 여기에 인공지능, 즉 AI를 둘러싼 빅테크들의 야심찬 계획들이 더해지며 시장의 열기를 더했습니다.
금리 인하 폭에 대한 논쟁이라면 구체적으로 어떤 이야기들이 나왔습니까?
스콧 베센트 미 재무장관의 발언이 결정적이었습니다. 그는 블룸버그와의 인터뷰에서 9월에 50bp, 즉 0.5%포인트 금리 인하를 시작으로 총 150bp에서 175pp까지 내려야 한다고 강력하게 주장했습니다. 최근 수정 발표된 고용지표가 예상보다 훨씬 약했다는 점을 근거로 들었죠.
이 발언의 파급력이 컸던 이유는 트럼프 행정부의 의종이 보다 명확하게 드러났기 때문입니다. 시장은 이를 연준에 대한 강력한 압박 신호로 해석했고, 골드만삭스는 올해 3차례, 내년에 2차례 추가 인하를 전망하는 보고서까지 내놓았습니다. 그 결과 S&P 500과 나스닥 선물은 사상 최고치를 경신했고, 변동성 지수 VIX는 연중 최저치로 떨어졌습니다.
시장은 거의 축제 분위기인데 연준 내부에서도 같은 생각인가요? 행정부와 연준의 시각차가 중요해 보입니다.
정확한 지적입니다. 연준 위원들의 생각은 다소 다릅니다. 오스탄 골스비 시카고 연은 총재는 관세가 인플레이션에 미치는 영향을 일회성 충격으로만 보는 것은 불안하다며 신중론을 폈습니다. 인플레이션이 다시 확산될 가능성을 경계하는 거죠. 라파엘 보스틱 애틀란타 연은 총재 역시 견조한 고용 시장을 고려하면 정책 조정을 서두를 필요가 없다고 말했습니다. 이것이 왜 중요하냐면 시장은 가장 낙관적인 시나리오, 즉 큰 폭의 금리 인하를 가격에 선반영하고 있지만 정작 정책을 결정하는 연준은 데이터에 기반한 신중한 접근을 고수하고 있기 때문입니다. 이 간극이 향후 시장 변동성의 잠재적 요인이 될 수 있습니다. 금리 이슈 외에 시장을 움직인 또 다른 큰 축은 역시 AI였죠.
네, AI는 이제 단순한 테마가 아니라 기업의 실적과 미래 전략을 좌우하는 핵심 동력입니다. 가장 주목받은 건 애플의 소식입니다. 블룸버그 보도에 따르면 애플이 AI 로봇, 스마트 디스플레이, 홈 보안 카메라 등 야심찬 신제품 라인업을 준비 중인 것으로 알려졌습니다. 이는 AI 경쟁에서 뒤처졌다는 평가를 뒤집고 아이폰을 넘어선 새로운 성장 동력을 찾으려는 필사적인 시도입니다.
애플의 AI 전력이 구체화된다면 시장 판도에 상당한 영향을 미치겠군요. 다른 빅테크들은 어떻습니까?
중국의 텐센트가 예상을 뛰어넘는 2분기 실적을 발표했습니다. 매출이 15% 증가했는데 강력한 게임 실적과 AI 기반 광고 및 서비스가 성장을 이끌었습니다. 이는 중국 거대 기술 기업 역시 AI를 통해 성공적으로 수익을 창출하고 있음을 보여주는 사례입니다. 한편 미중 기술 전쟁의 상징이었던 반도체 분야에서는 트럼프 행정부가 엔비디아와 AMD의 중국향 AI 칩 판매를 일부 허용하는 거래를 맺었다는 소식이 전해졌습니다. 이는 글로벌 공급망의 또 다른 변수가 될 수 있습니다.
다만 AI 관련주라고 모두 웃지는 못했습니다. AI 데이터 센터 운영사인 코어위브는 매출은 급증했으나 그보다 더 큰 폭으로 손실이 확대되면서 주가가 10% 넘게 하락했습니다. AI 인프라 구축에 드는 막대한 비용이 수익성을 압박할 수 있다는 사례를 보여준 사례입니다. AI 외에 주목할 만한 개별 기업 뉴스는 어떤 것들이 있었습니까? 유통 공룡들의 경쟁이 다시 불붙었습니다. 아마존이 신선식품을 포함한 당일 식료품 배송 서비스를 연말까지 미국 2,300개 도시로 확대한다고 발표했습니다. 이는 월마트와 인스타카트에 대한 정면 도전으로 이 소식이 전해지자 인스타카트 주가는 10% 넘게 급락했습니다. 소비자에겐 희소식이지만 경쟁사들에겐 생존의 위협이 되는 셈이죠. 또 다른 흥미로운 소식은 네이버 웹툰의 모회사인 웹툰 엔터테인먼트가 디즈니와 파트너십을 맺었다는 소식입니다. 마블과 스타워즈 캐릭터를 웹툰 플랫폼에서 볼 수 있게 되면서 주가가 하루 만에 81%나 폭등했습니다. 강력한 IP의 힘을 다시 한번 증명했습니다. 실적 발표 시즌도 막바지인데 장 마감 후 나온 주요 기업들 실적은 어땠나요?
네, 장 마감 후 발표된 기업들 실적은 대체로 긍정적이었습니다. 먼저 네트워크 장비의 거인 시스코 시스템즈입니다. 주당 순이익 0.99달러, 매출은 1,467만 달러로 모두 시장 예상치를 웃돌았습니다. 특히 AI 수요 증가에 힘입어 다음 분기 매출 전망치도 월가 예상보다 높게 제시하며 시간외 거래에서 주가가 상승했습니다. 이는 기업들의 AI 관련 투자가 견고하게 이어지고 있음을 보여주는 지표입니다. 광통신 부품업체 코히어런트 코프도 주당 순이익 1달러, 매출 10억 3천만 달러로 예상치를 상회하는 좋은 실적을 기록했습니다. 반면 자율주행 라이다 센서 기업인 이노비즈 테크놀로지는 주당 순이익은 예상에 부합했지만 매출이 975만 달러로 예상치인 1,024만 달러에 미치지 못하며 아쉬움을 남겼습니다. 위조방지 기술 기업인 버리파이미는 EPS와 매출 모두 예상치를 상회했습니다.
오늘 정말 많은 이슈가 있었네요. 기자님, 오늘 시장은 금리 인하 기대감며 환호했지만 연준 내부에서는 여전히 신중론이 나오고 있습니다. 투자자 입장에서는 이 간극을 어떻게 해석해야 할까요? 시장의 낙관론을 따라야 할까요? 아니면 연준의 신중론에 더 무게를 두어야 할까요? 아주 좋은 질문입니다. 현재 시장은 위험보다는 기회에 초점을 맞추고 있습니다. 하지만 연준의 신중론은 관세로 인한 인플레이션 재발 가능성이라는 합리적인 근거를 갖고 있습니다. 따라서 투자자들은 시장의 낙관적인 분위기를 즐기되 포트폴리오 한편에는 연준의 경고처럼 예상치 못한 인플레이션 데이터나 지정학적 변수가 발생할 경우를 대비하는 균형 잡힌 시각이 필요해 보입니다.
그렇군요. 그럼 마지막으로 오늘 시장의 핵심과 다음 관전 포인트를 짚어주시죠.
오늘의 핵심은 금리 인하 기대감이 모든 악재를 압도했다는 것입니다. 시장은 연준의 신중론보다 행정부의 강력한 인하 압력에 베팅했습니다. 동시에 AI라는 강력한 성장 스토리가 시장을 뒷받침했습니다. 다음 관전 포인트는 명확합니다. 바로 내일 발표될 7월 생산자 물가지수와 주간 신규 실업수당 청구 건수입니다. 이 데이터들이 시장의 금리 인하 기대를 더욱 강화할지 아니면 찬물을 끼얹을지 확인해야 합니다. 또한 금요일로 예정된 트럼프 푸틴 정상회담의 결과도 중요한 변수입니다.
장마감 AI 모닝 브리핑 오늘 순서는 여기까지입니다.
자, 여기서 장마감 브리핑 마무리하도록 하겠습니다. 여기서 개장 브리핑 마무리하도록 하겠습니다. 자, 잠시 후 8시 30분 약 15분 뒤부터 트레이딩 이어나가도록 하겠습니다.
Technology, and then the U.S. taxpayer gets a share of that.
Unique. Just how unique is it? Ed Mills of Raymond James joins us next.
Jumpstart your trading day with 2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
Bloomberg Open Interest.
Every trading day.
Only on Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
In 1 hour and about 15 minutes, we'll get some economic data. So let's call it 8:30 Eastern Time. You'll get another read on inflation with PPI data and another read on the labour market with jobless claims. And jobless claims data is set to look pretty good based on the estimates in our survey. We're still looking for something close to 225, which is better than pretty good, actually. It's pretty phenomenal, given what's happening elsewhere. So that's the story for the data later on this morning. Here's the story for the market. Equity futures at the moment on the S&P 500. Pulling back just a touch. We're down by not even 0.1% following yesterday's all-time highs. Under surveillance this morning, taking a slice of corporate America.
This is a very unique solution, allows NVIDIA to expand into China. It can make NVIDIA chips the bellwether for Chinese technology, and then the U.S. taxpayer gets a share of that. We could see it in other industries over time. I think, right now, this is unique, but now that we have the model and the beta test, why not expand it?
It's the latest this morning. The US Treasury Secretary Scott Bessent telling us the deal allowing NVIDIA and AMD to sell chips in China for a share of their revenue could be replicated in other industries. Joining us now, a man who follows these stocks and this industry is Bloomberg's Tom McKenzie. Now, Tom, you and I were talking about this earlier this week, just how unique is it? And talking to the Treasury Secretary yesterday, maybe not that unique.
what a remarkable line that you and Anne-Marie managed to get out of the Treasury Secretary, of course, saying that this could be applied to other sectors and other industries. So you have to wonder, if you're a Boeing, if you're a Qualcomm, if you're a Ford selling into that second largest economy, of course, do you have to start to think about or put in place some mitigation, start to factor this in as a potential price to pay to play if you want to get access to that Chinese market? Or do we need to think about it more narrowly in terms of national security? And even if you do that, what about the jurisdiction when it comes to the US? Do you need to start to think, if you're ASML in the Netherlands, in Europe, or if you're Tokyo Electron over in Japan, with that feed into the semiconductor industry of China, do you need to start to think that maybe the US is going to start putting pressure on you in terms of not just those export licenses, but maybe even if you do get some easing there, what does it mean in terms of the revenue hit? Potentially, where does that revenue go? Maybe that's taking it too far, but I think in terms of the national security concerns that you addressed with the Treasury Secretary, they're clearly still there. And if you're in other spaces with significant exposure to that Chinese market, even where growth is looking a little challenged, it's got to be a question for you going forward.
Tom, I'm really glad that you went there. How can we understand national security and how much it's offset by some sort of fee that a company pays the U.S. government?
How does it get offset? I mean, the key thing to think about is that both sides, China and the US, and this came through in the first Trump administration, and you felt that on the ground in Beijing, both sides putting extra focus on the question of national security. I remember then the Secretary of State, Mike Pompeo, making an overture around potential regime change, making a nod to that in the first Trump administration, and you saw a significant change in terms of the posture of the security apparatus in China as a response to that. You go all the way back to then, and that continues to weave through the narrative right now. They are acutely aware, of course, in the US and in China, that this comes down to national security, whether it's semiconductors or the broader picture around the economy and the trade relationship between these two nations. And it's a tension, clearly, that lies at the heart as well of how things accelerate on the innovation and AI story. China's got its competitors in the race when it comes to AI and these models. They're key competitors that they lent into. They've had the flesh pressing with Xi Jinping, the likes of DeepSeek and Alibaba and others. They're the golden children, but equally, China wants them essentially to run on the track, the 100-meter track, with their arm tied behind their back, because they want them to be using Huawei chips and not NVIDIA's.
Strong point, Tom. Appreciate it, sir. Tom McKenzie there, the host of Bloomberg Technology out of Europe, joining us this morning out of London. Ed Mills of Raymond James joins us now for more to extend this conversation. Ed, welcome to the programme. We spent so much time talking about taxes on inbound trade. Do we now need to start thinking about taxes on outbound trade?
I think you do. John, I think this is pretty remarkable because what we are talking about here are things that were restricted for national security reasons. Now, if it's restricted for national security reasons, it should be restricted regardless of how much you pay. So just because you're now willing to pay 15% of your profits should not oversee those national security concerns. I think the good thing so far is that what we're talking about are chips that were otherwise allowed before President Trump started to ramp up things on China. Those were things that I think a lot of national security officials thought were okay to go into China. If it were to expand and it go to some of the chips that are at the leading edge with a profit sharing there, that's where you get a lot of concerns from Capitol Hill and other national security officials. If this is a model going into the future, this will be a huge concern for investors. I can tell you at Raymond James, I've gotten a couple questions about this week, but it hasn't been as overwhelmingly as a concern as the other tariff stories, especially the 232 on semiconductors. But if this builds, this will be big.
I imagine after those comments, you might get more questions, Ed, over the next several days. How are you thinking about things? Are there other industries that require export licenses that might be vulnerable here that perhaps we should be thinking about more?
Yeah, I think it is mostly within tech. And I think what has been the story since the first Trump administration is that we are looking at our technology as a national security asset. And so if we are allowing others to get access to that national security asset, we need to put restrictions around it. Or apparently we need to make sure that we get part of the profits around that. Going forward, I do think the semi-cap equipment is the most likely next step because where we've seen the biggest restrictions are in semi-cap equipment. And there's a lot of leverage in negotiations that we've been trying to put on the Dutch and Japanese governments as we are trying to get those standards that the United States has put on harmonized globally.
There's a very simplistic way of looking at this, Ed, which is that money can't compensate for national security concern if it truly is a national security concern. There is a more nuanced take on it that we were talking about earlier, which is that this national security risk is two ways. There's the risk of China getting U.S. chips and using them to exceed the capabilities of the United States when it comes to technology. There's also China becoming dominant and creating their own Belt and Road type of structure, using their own technology in the world and wanting to maintain a foothold. Do you get a sense that that aspect of national security is gaining clout in the administration and is part of why there has been this shift in this profit-sharing agreement?
Yeah, I think, Lisa, the two things that were probably the biggest arguments by NVIDIA and AMD is that if we do not allow these chips to be sold, these companies will be left out altogether, and that Huawei could take over. And maybe in the near term, the United States can keep this global dominance and kind of work with others to maintain that lead. But if we don't, if we're not part of the conversation, if we're not part of what is being used, will it be left behind? And are we going to see a complete divergence where there's going to be a China set of technology and a rest of the world set of technology? And if the China technology ultimately gets better, 5, 10, whatever number of years from now, if that supersedes the United States, that's a national security concern for the United States. So from that perspective, you can say, all right, let's make sure our technology is at least part of the conversation to maintain that dominance, because it's a bigger national security concerns if we don't have that in the long term, Lisa.
How much is this going to be a template for some of the U.S. trading partners that might be looking at some of their key resources and wondering how they can monetize that with exports?
I would be surprised if others really get involved here. I think Trump is unique in his willingness to be transactional, his pay-to-play aspect to this. I would be looking to see if there's other parts of the trade agenda. If you remember, all of the trade deals so far are MOUs. We don't have all of the details fleshed out. One of the key components of almost every one of those MOUs are huge purchases from other countries. Do you have the Trump administration going to those countries and saying, all right, we will let you buy some of these things only if we get a cut of the profit? So as we look at some of the agriculture, the oil and gas, the aeronautics that are being sold globally in these trade deals, when we get those final details, is that going to be something that there's going to be a percentage that goes to the United States government, in addition to the taxes and to the economic benefit we get to pay down the national debt? You've seen a lot of this kind of go on with the conversation about a sovereign wealth fund and a desire to bring down the debt and the deficit. If they can do that, then that gets pretty interesting from a debt and deficit perspective, but very concerning from a kind of U.S. government injecting themselves into corporate America conversation, Lisa.
Becoming increasingly interventionist, that's for sure. Ed, thank you, sir. Ed Mills there of Raymond James. I loved your question. As you were asking it, I was already looking at ASML over in Europe and thinking about the same thing.
I mean, how much do you just say, okay, well, ASML can't ship over some of their chip production equipment to the United States without giving the Netherlands, 20%? I mean, at what point does this become a self-fulfilling prophecy in terms of the way to do business in the chip wars of 2025?
Bottom line, there's a lot of governments that need to raise some money.
100%.
And they're coming up with new ways to do it. Equity futures on the S&P 500 just about unchanged this morning. Conversation continues. Up next, we'll catch up with the former World Bank President David Malpass on President Trump's search for a new Fed chair. Plus, Danny Berger with your morning movers. As tariffs weigh on Tapestry's outlook, that name is down by more than 7%. Live from New York City this morning. Good morning.
자, 잠시 후 약 3분 뒤 트레이딩 이어나가도록 하겠습니다. 트레이딩 진행하도록 하겠습니다. 3분 뒤 트레이딩 트레이딩 진행하도록 하겠습니다. 자, 금일은 PPI, 주간 실업수당 청구 건수, EIA 천연가스 재고 등 예정되어 있습니다. 자, 2시에 백악관에서 트럼프 대통령 연설이 있고요. 그리고 3시에 연준 박힌 총재 연설이 있습니다. 이후에 올려드리는 뉴스 꼭 부탁드리겠습니다. 자, 잠시 후 트레이딩 진행하도록 하겠습니다.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Bringing you up-to-the-minute energy news whenever and wherever it happens. I'm Joanna Bersecci in Vienna, and this is Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Two days of gains on the S&P 500, just about unchanged so far this morning. We're going nowhere on the S&P 500. On the Nasdaq 100, unchanged also, not unchanged in the bond market. 3 days of lower yield to the front end of the curve. The 2-year this morning at 366. 2 Fridays ago, following payrolls, 368 at the close. So we've held on to these levels post-payrolls, and we're looking for those big rate cuts.
With job owning from the administration, but also a couple of different Fed officials signaling a willingness to potentially cut rates, at least by 25 basis points, not 50 basis points. Looking at what the market's pricing in, Fed funds futures looking at a full 25 basis point rate cut baked in for next month, and another one by year end, but starting to push in maybe a little bit more than that.
A lot of this is going to hang on what happens in early September when we get that next payrolls print, and a week later when we get another read on CPI. Later this morning, 60 minutes from now, another read on inflation with PPI and jobless claims for a look at the labour market. With 2 hours until the opening bell, let's get you some morning movers with Danny Berger. Hey, Danny.
Hey, John. Tapestry getting hit pretty hard in the pre-market. They were just out with earnings. Those shares down 8 1/3%. The aspirational goods maker, Kate Spade, among them. They gave an outlook for the year that looks pretty bad compared to last year. Only 4% growth. Last year was 7% growth. And within those estimates, it would appear that their EPS is taking a 60-cent hit from tariffs and higher costs specifically. So it's a new incorporation that the street has to put into their share price, and you see that underway. We also heard from Deere, those earnings also out. Also a negative reaction there. For their outlook, it was a cut to their outlook. On one side of the thing, it's supply. There was a record American corn harvest. And then there's the demand side, with that being uncertain given the trade wars undergoing in the United States. Because of that, farmers buying less equipment, shares down 5.5%. Just want to end on the positive thing taking place in the market, and that's the continued hype around crypto and an IPO yesterday from bullish. This thing rallied 84% yesterday. The crypto exchange, when it debuted, shares move higher yet again this morning, up 15.7%, John.
Danny, thank you. What a name. And with a name like that, does that just become the proxy for the broader market? Bullish?
Yeah, it's either bullish or it's not. And ultimately, if it falls by more than 10%, you know where you're going to be.
Ridiculous performance. OK, let's move on. On our radar this morning, President Trump issuing a warning to the Russian President Vladimir Putin, saying he would impose very severe consequences if a ceasefire agreement isn't reached. The leader set to meet for high-stakes talks tomorrow in Alaska.
A lot at stake here from a humanity perspective, given how many lives have been lost in this conflict and how much this really has strained the economies of the entire region. That said, and to take a more sort of markets perspective, and I apologize because it seems somewhat harsh, but have people priced in too much in terms of expecting a ceasefire coming out of this when it comes to the oil market? We've seen oil prices come in, yes, because of oversupply, but how much does this include oversupply coming from potentially Russia? Should there be some sort of ceasefire or normalization of ties? And how much could that bounce back if you don't get some sort of deliverable from this meeting?
It's a good question to ask. This is the appropriate forum to ask it, I think, is what a lot of people watching this programme are thinking about. What I'm thinking about when the president engages in these talks over the weekend, does he walk into the room with a carrot or a stick, or does he try and achieve both?
Yeah, and is it enough of a stick to say your economy is falling off a cliff? Norman Rule saying not so much. And that's really the issue. What is the stick that he has if he doesn't have the Europeans on board to really engage with secondary sanctions? And so ultimately, how high are hopes in markets versus in diplomacy circles?
And what's the carrot? If he doesn't have permission from the Ukrainians to have a conversation about the integrity of Ukrainian territory, which based on what we've heard over the last 24 hours, he certainly does not.
Yeah, how much leverage does he have? And this is another way of asking a really important question, which is he walking in, I'm talking about President Trump, with cards that can really achieve what he's looking to set out to do?
The message is set to get, based on what we heard from Norman Rule, so not my opinion, basically what he was saying, get a guy that comes into a room, who knows a lot about business, who turns around to the Russian president, points to his economy and says it's doing dreadful. We can make this perform a whole lot better. Let's do some trade deals. Let's do this, let's do that. The problem with that is that's not really the guiding light of President Putin right now. Otherwise, he wouldn't have engaged in this war to begin with.
Economic rationale has never been the lodestone of Russian imperialism. So it's hard to see how it would be right now.
Those talks are going to play out over the weekend. As I mentioned in the previous hour, Anne-Marie on the road today. She'll be over in Alaska following those talks for you, bringing you all the headlines Friday and through the weekend. Wanted to squeeze in this story. Chinese startup DeepSeek, remember them? Delaying the release of its latest AI model. Sources telling the Financial Times that DeepSeek struggled to train systems using Huawei chips. So at the start of this week, we had this deal with NVIDIA. Then we had this report here at Bloomberg that the Chinese were telling some companies that you should not be using those chips, use Huawei, and this is what we're hearing from the FT. I think this is really interesting stuff.
And it goes to the point that you made earlier. Deep who? We talked about how DeepSeek was transformative earlier this year, that China could do so much with so little and really create these sophisticated OpenAI types of chatbots. Question here, could they actually have achieved that without using some of the more advanced U.S. technology, number one? Number two, how much does DeepSeek really rely on that ongoing U.S. technology, and how much can this really inform President Trump's decision to levy some of these chips and the exports over into China? It does raise a question, though, also about just how far ahead China is when it comes to their tech development and whether they are as close to the United States as so many people have said.
I mean, to clarify, not to throw too much snark at a company that has done something pretty phenomenal. DeepWho, based on the rebound we've seen in tech stocks in America, has just been absolutely phenomenal.
They had been driving everything earlier. Remember the huge swoon in U.S. tech because people said, oh, it's over. People are going to stop investing. You could do the same thing with a little chip here as you can with a whole room of chips. And then maybe not so fast. And now we're back to the AI trading.
There was a phrase that NVIDIA CEO Jensen Huang used, export compliant. Still rattles around my brain sometimes. How export compliant were the successes, the achievements of that company earlier this year?
And can they continue with these types of successes with the H20 chip, given the fact that it is, what some people have said, years behind the latest and greatest from NVIDIA that's sold into U.S. and its trading partners?
That's the latest on tech. I wanted to turn to this, the latest on trade. The Port of Los Angeles seeing the highest container volume in its 117-year history in July. The port's executive director, good friend of this program over the years, Gene Soroka, attributing the spike to traders front-loading cargo before President Trump's import duties take effect. So what is Gene Soroka telling us this morning? Gene Soroka is telling us that we've got a lot of pre-tariff inventory still working its way through the economy last month and potentially this month and the months to come?
That is exactly the point here. Essentially, how much can we take a look at how much inflation's been passed along from the goods that have been imported so far since some of the tariffs have gone on, and said that's what will continue? Because guess what? A lot of that inventory did not receive the same kind of tariffs that some of the future inventory will, because it was brought forward. People are trying to take advantage of any windows that they possibly can. It just shows how messy it is to categorize the inflationary impulse from some of the policies that have taken place.
It's really difficult for any of us to draw conclusions, including officials over at the Federal Reserve. The president, by the way, saying he'll name the next Fed chair earlier than perhaps as expected. The Trump administration announcing he's down to 3 or 4 names after previously floating as many as 11 candidates. Joining us now to discuss is the former World Bank president, David Malpass. David, my good friend, welcome back to the program, sir. Let's talk about the leader of the Federal Reserve and the next Fed chair. What are the characteristics that we're looking for here, David, in the next Fed chair?
Hi, John and Lisa. I think what is needed is a lot of change at the Fed. So the characteristics are someone that will bring change and really confront the PhD economists that have been running the Fed. You heard some of that in your previous guests talking about the bond market vigilantes and the parent we all need. So I think that getting the Fed out of the way of the market and creating the rationale for a much lower interest rate curve along the curve, I think that's what's critical. I was very happy to see Secretary Bessent yesterday talk about 2 things. One is the 50 basis point cut possibilities, and also the need for foundational change at the Fed. That, to me, means more loans for small businesses. So that's going to be one of the opportunities for the U.S. as we change the supply chain.
You said in some of your previous comments that the Fed is using old models that are wrong on economics. Which models in particular do you think are incorrect?
매수 진입 사인 드렸습니다.
There's a long list. How long do you have? The Phillips curve doesn't work. The idea of ample reserves doesn't work. The idea of inflation targeting using backward-looking data doesn't work. There's a big opportunity there. If you used forward-looking price-based data, you could get lower interest rates and the market would welcome it. That's what we saw yesterday, I think, when the Secretary said foundational change. There are better ways to do this than what the Fed has been doing. They lean against growth, Lisa, and that's been part of the problem, that when the economy gets going, they say, oh, that's overheating, when actually that's what we want. That's the goal of economic policy, to have non-inflationary growth.
David, a lot of people would say that when they don't tamp down on inflation, it's been asset price inflation that's really run away, and that has led to a number of pretty significant crashes. What are you pointing to in particular in terms of practical consequences that point to some of those policies? I mean, what do you think the growth rate should be in the United States right now if the Fed were using the models that you would like to use?
I think the growth rate can be comfortably 3% real GDP growth, maybe 4%. The Fed has a potential GDP speed limit. They just published on June 18th the idea that it should be 1.85% per year. So that just doesn't make sense given the possibilities of regulatory change, the recent tax stabilization. So they took the tax cut, the tax increase that Biden was planning and Biden-Harris were planning, and took it off the table. So that allows businesses to begin investing for the future. Lisa, the Fed has perpetuated this idea ever since Paul Volcker that high rates are the way to bring down inflation. The reality is more production is the way to bring down inflation. And Trump's doing that with all the changes going on in the economy.
David, I'm happy for people to make the accusation that perhaps this Fed chair has been reckless with monetary policy, but I'm far more sympathetic to the idea that he's been recklessly dovish. This is an individual that led a Fed that let inflation absolutely rip. This is an individual that saw markets doing okay, equity still close to all-time highs, and cut interest rates 100 basis points. David, can we really make the argument that they've been recklessly hawkish?
Yes, they're hawkish right now. And look at the difference in the environment they were cutting into. It was politicized in 2024. There were heavy regulations stopping business. There was no investment going on, and yet they were cutting, thinking that inflation was transitory. What we have now is a big change going on in the economy, and I think the opportunity for capital to flow into the U.S. As you make the economy stronger, you're going to get support for the dollar. And again, we have to look at how the markets reacted yesterday favorably, whereas when the Fed was cutting during 2024, markets reacted unfavorably. So there's a huge difference.
Look at the difference between the market right now, though, and what the Federal Reserve is ultimately projecting. David, I don't think there's too much daylight. This is a market and a Federal Reserve that seems to be on course to cut interest rates somewhere between 100 and 150 basis points. What we heard from the Secretary of the Treasury yesterday was they need to cut from 150 to 175. David, I understand this should be a healthy debate, but is there really that much controversy between what the administration would like to see and what's ultimately being projected by both markets and the Federal Reserve alike over the next 18 months?
I think that's useful. The markets are looking at what's going on in the economy and realizing that there can be a lower interest rate environment for the United States across the whole yield curve. I think that's important, and that adds to growth. Look, the goal here is a virtuous circle where capital flows in, where growth goes up, and production goes up, and that brings down prices. So then you can keep doing interest rate cuts. You get a virtuous circle. I think that's possible. It's going to be really important for the Fed and PhD economists to get to realize that their models haven't been working over the years. We've had these wide swings in inflation and deflation and interest rates because the Fed's looking backwards. And so we need new models, sweeping change in the models. That's been what I've pointed out, and it will benefit small businesses. That's the key.
David, looking forward and using your models, what do you think the neutral rate is?
I think the neutral rate is lower than lower than where we are now. You know, the Fed keeps saying that the interest rates are appropriate right now at 4.4%. How do they know that? They're the ones setting that rate and paying banks, a lot of them international banks. 40% of the money payout by the Fed is going to international banks, and they've paid $1.3 trillion since they started paying interest to banks. So they're affecting the markets, and they don't know what the neutral rate or what the bearable rate is.
Well, to be fair, David, no one knows, as you know, but they're taking a stab at it. They think the longer-term rate's something close to 3. So what do you think it is? Close to 3 is like 150 south of where we are at the moment. What do you think it is? How much lower than that could it be?
I think the strength of the U.S. economy justifies lower rates across the curve, substantially lower, and the market is looking at that and already beginning to price that in. And it's part of the favorable environment being created.
I think we've lost the connection with David Malpass. I was quite enjoying that, and I've known David was too. A spirited conversation with the former World Bank president, David Malpass.
Yeah, talking about how different models are required to really adequately look forward at a time when he believes that the neutral rate should be a lot lower. He said that there seems to be some sort of speed limit to the GDP that the Fed has in its mind, and it's sort of this debate of how you modulate these two mandates, both of unemployment rate as well as inflation, and it will continue to be a robust academic
Cue the controversy. Who killed the line? Who cut
yeah,
the
exactly,
interview?
totally. Some people are going to say
Apologies for
that.
the technical problems there. Let's get you an update on stories elsewhere this morning with your Bloomberg brief. Here's Yahara. Hey, Yahara.
Hi, John. The U.S. is open to discussing the use of NVIDIA chips with China. Speaking to us yesterday, U.S. Treasury Secretary Scott Bessent said they're open to that since a lot of Chinese tech is already piggybacking on the U.S. And as you guys have been talking about this morning, Bessent also noting that the U.S.'s deal with NVIDIA and AMD to get a 15% cut from its China chip sales can be used to pay down the U.S. debt. Meanwhile, a U.S. appeals court says the Trump administration can block billions of dollars in foreign aid already approved by Congress for distribution. Separately, a Maryland federal judge has rejected the Trump administration's attempt to throw out a lawsuit that accuses Elon Musk of unlawfully directing the closure of USAID. And Amazon plans to offer same-day grocery delivery in 2,300 cities by the end of the year, more than doubling the current number. It says customers will be able to order perishable items alongside frozen foods and household goods. The same-day grocery delivery service will be free in most cities for Amazon Prime subscribers on orders over $25. That's your Bloomberg Brief. John?
Yahara, thank you. More from Yahara in the next hour, in about 30 minutes from now. Up next on the program, looking for the Fed to go big.
I do think we could go into a series of rate cuts here, starting with a 50 basis point rate cut in September. The rates are too constrictive. We should probably be 150, 175 basis points lower.
Coming up, we'll catch up with Sonal Desai of Franklin Templeton Fixed Income. That's up next. This is Bloomberg.
Our applications have been received positively both in Kenya and UAE, and we are optimistic that we should be able to open the office in the fourth quarter. We think
현재 시간대에
the
거래량이 저조한 관계로 조금 대응이 길어질 수 있는 점
sources.
참고
It has
부탁드리겠습니다.
strong logistics for trade, and it is a strong center for investment. And we are seeing increasingly the global GDP is increasingly becoming overweight in Asia and Middle East. So that linkage with the middle income segments growing in India and China, they will provide a very strong market.
It's the countdown to the market open as we bring you the first trades across Europe.
자,
We'll
트레이딩을
debate the most
나오면서
important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna
이
Edwards.
의약품
Join us every
관세
weekday
발표
morning for the
수주
opening
연기
trade,
전망을
live
보여주고요.
at 7 a.m. here in London.
Only on
트럼프
Bloomberg.
행정부의 의약품 수입에 대한 주가 안보정 결과와 그에 따른 신규 관세 부과 발표가 당초 예상보다 며칠 더 늦을 전망이라고 합니다.
Bloomberg brings you breaking news 24 hours a
트럼프
day.
행정부가 미뤄
Powered by more than 3,000 journalists and analysts in more than 100 bureaus across the globe. Bloomberg Television. Context changes everything.
Bringing you up-to-the-minute news
이번
whenever
조사는
and wherever it
무역
happens. I'm Matt Miller at the Circuit de la Sarthe in Le Mans.
검토
And
중이며
this
트럼프
is
대통령은 최대 250%에 달하는 단계적인 관세가 부과될 수 있다고 경고한 바가 있습니다.
Live from New York City, welcome to the program. Under surveillance this morning, looking for the Fed to go big.
We could have had rate cuts in June and July. So that tells me that there's a very good chance of a 50 basis point rate cut. I do think we could go into a series of rate cuts here, starting with a 50 basis point rate cut in September. The rates are too constrictive. If you look at any model, we should probably be 150, 175 basis points lower.
Here's the latest this morning. The Treasury Secretary Scott Bessent calling for a 50 basis point rate cut as traders fully priced in a quarter-point cut in September. Son of Desire Franklin Templeton writing, the scope for rate cuts is extremely limited, barring a sharp slowdown, because we're very close to my estimate of the natural policy rate. Son of joins us now for more. Son of, welcome to the program. Some real daylight then between you and the Treasury Secretary and solar market pricing. Just build on some of that and explain as to why.
골드만삭스는 최근 7월 소비자 물가 CPI가 중화된 것을 근거로 연준이 올해 3차례, 2026년에는 2차례 더 금리를 인하할 것이라는 새로운 전망을 내놓았습니다.
Perhaps also listening to some of your previous guests, the Fed has done itself no favors. It really hasn't by what it did last year across any metric. If you look at the different metrics of unemployment, NFPs, CPI, core CPI, the Fed actually would have had a 50 basis point rate cut would arguably be more justifiable this year than it was last year. Didn't agree with it last year, and I still don't think they should be doing 50. They have said in their SEPs that they will be 15 more.
둔화로 전환되고 있는 점은 인정하며 현재의 긴축적 통화 정책이 향후 경제에 부담이 될 수 있으므로 점진적인 금리 인하는 지지할 수 있음을 시사하였습니다. 자, 데일리 총재는 6월에 전망했던 올해 이외 금리 인하가 여전히 한정이라고 보면서 향후 고용시장이 더 악화되면 연내 3회까지 인하할 수 있고 반대로 인플레이션이 강해지면 인하할 수를 줄일 수 있다고 덧붙였습니다. 자, 또한 최근 관세 인상에도 불구하고 기업들이 비용을 공급망 내에서 분산시키며 상품 물가에 미치는 영향이 제한적이라고 평가했습니다.
Us falling into a significant recession, the Fed doesn't really need to cut that much more.
자, 금리 시장 영향을 줄만 한 가지 뉴스
And the market will price what the market hopes for. And yeah, you know, if we're talking about kids at a party, well, the Fed kind of gave us the punch bowl when it's, you know, that's what. They haven't given it to us, but that's what the market is hoping for right now.
So Ed Yardeni, who we were speaking to earlier, was talking about how he could see a repeat of what happened last year when they cut 100 basis points. If they cut 50 basis points this year, he could see some sort of steepening in the yield curve, long-end yields rising substantially. Do you agree with that?
So, you know, the only part about that where I'd say, I think that long-end yields, you know, look, I've been saying for a long time that I could easily see long-end yields at 475.5 by the end of the year. I haven't changed that view based on the volatility we've been seeing. You know, we go down to 420, we go back to 440. I think that long-end yields could comfortably go to 475.5, given that I think that the neutral rate for the Fed is at around 4. Now, could we see a steepening just on the back of this? Yes, with one caveat, and that is, I would agree with what Mr. Besant was saying yesterday in terms of the additional revenues coming into the fiscal picture. We haven't really, I think, in the market paid sufficient attention maybe to the fact that none of us last year were anticipating any narrowing of the fiscal deficit. And you know, it could even happen. And that would be quite stunning. And that would be one thing which would perhaps prevent us from going much beyond that 475.
This is something the Treasury Secretary was talking about, so I was absolutely right. When we asked him how much money's been raised, he was talking about, initially I thought something like 300 billion in a year. Maybe we've got to upward revise that number to something a whole lot bigger.
Which is the reason why yesterday some people were suggesting that was why you didn't see a selling off in longer-term yields because of your conversation and what Scott Besant said. This would offset some of the deficit concerns that people had heading into this year.
Deficit concerns internationally, though, are not going away. And that's the issue they've got, which is why I keep coming back to this 30-year piece. It's a question we've got to ask authorities around the world right now. What's your incentive to issue a 30-year when, based on some of the price action, the auctions that we've seen worldwide, not many people seem to want to touch it.
Right, because this is going to be an international issue. That said, it's very hard for the United States to take the moral high ground on that, given the fact that they haven't exactly been fiscally responsible. And it's not exactly as if Germany is just completely overloaded in debt. So there is a very difficult discussion to be had here when the United States starts.
개인 투자자 민주식에서 대형주로 이동.
As always, so I'll design that Franklin Templeton fixed income on the bond market
골드만삭스에
worldwide and the
따르면
Federal
최근 몇
Reserve.
주간
Coming up on the program, we'll catch up with Tracy McMillan of Wells Fargo. We'll speak to Pierre a New Street Research on Apple's latest AI efforts. Nita Richardson of ADP looking for
개인
jobless claims
투자자
in
거래
about
상위
34
25개
minutes time
종목에는
plus. Scott
팔랑티어,
Cronin of
AMD,
Citi
EA
with
등과
a new
함께
price target on the
UPS,
S&P 500.
MSCI,
I'll give you a hint.
워너브라더스,
from New York
앨범
City.
등
This is
전통적인
Bloomberg.
우량주들이 포함되어 있다고 합니다. 골드만삭스는 이러한 개인 투자들의 참여 증가는 해당 종목들의 상승 비대칭성을 높여 향후 주가에 긍정적인 영향을 미칠 수 있다고 분석하고 있습니다. 자, 동일하게 블룸버그에서 나온 뉴스고요. UBS, S&P 500 완만한 상승세를 겨냥한 옵션 전략 제안. 자, 미국 증시가 4개월 넘게 완만한 상승 랠리를 이어가고 있으며 변동성 지수 빅스가 하락하며 하방 위험이 줄어든 상황에서 UBS 그룹은 맥스웰, 그린하코프는 콜비얼, 스프레드 콜 옵션 전략을 제안했습니다. 자, 이 전략은 시장이 완만하게 상승할 때 이익을 얻는 동시에 특정 수준 이상으로 급등하지 않는 것이라는데 베팅하는 방식입니다. 자, 등가에 가까운 콜옵션을 한 개 매수하고 그 비용을 충당하기 위해 행사자가 훨씬 높은 콜옵션을 2개를 매도하는 구조입니다. 자, 다만 8월 23일로 예정된 잭슨홀 심포지엄에서 제롬 파월 연준의 의장의 연설이 예상보다 매파적일 경우 시장의 변동성을 키울 수 있는 가장 큰 해당 부분이 가장 큰 위험 요소로 꼽았습니다.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
자, 그리고 미국 핵심 광물 대비를 위해 10억 달러 투입. 모의투자부터 기자이고요.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
자, 그리고 중국과 인도 관련해서
AI is definitely in the center of it, and we're looking for how do we spend time and which industries do you invest in. Invest is becoming more and more digital or AI enabled that actually adds value to economic growth. And this, we think, could be time because you have a strong hardware power, you have a strong software power, as we see. And it's accelerating significantly. But a very important another element, which is changes in demographics. More AI-enabled softwares and applications may improve the people's lives and actually increase productivity in times where demographics are decreasing everywhere around the world. So this, I would say, is a major theme. So digitalization and AI-related technologies. And we think of it technology, but in reality, a lot of the businesses coming up and claiming to be technologies that are actually cannibalizing a lot of traditional businesses.
채권 시장 관련인데요. 블룸버그에서 나온 뉴스고요.
In case you missed it, on Bloomberg Open
9월
Interest.
금리나 전망 속에도 강세입니다.
Our portfolio, we see an IPO pipeline that's the biggest since it's been in 2021.
In M&A and IPOs, we've actually had close to record performances in that space. We're going to have an interesting year.
We're having a lot more conversations around putting dates on calendars. I think we could see a very active second half of the year.
Don't miss Open Interest live weekdays. 일부 트레이더들은 50bp에
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Aquin for Portugal, and this is Bloomberg.
1년의 인하 사이클에 들어갈 수 있다고 직접적인 언급을 하면서 연준의 적극적인 금리 인하를 강력히 촉구하였습니다.
Inflation data, labor
자,
market
이제
data.
시장의
You
관심은
really need to
이번
dig
달
under the surface to get a true
와이오밍주에서
sense
열리는
of what the
잭슨홀의 파월
impact is.
의장에
Inflation is alive and
어떤
well.
메시지를 내놓을지 집중이 되고 있고요. 다만 9월 회의 전까지 주요
You'll still
고용
see, we
및 물가
think,
지표
some
발표가 남아
pass-through
있어
of higher
금리 인하가
tariffs
아직
onto
완전히
prices.
확정된 것은 아니라는 신중한 의견도 있습니다.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
The open and about 90 minutes away. The economic
자,
data
이후에는
30 minutes away.
기업별
Let's start with
뉴스가
your
있는데요.
scores. Let's start with the markets. Equity futures just about unchanged on the S&P
추가적으로
500.
힘든
Likewise on the Nasdaq 100.
말씀드리겠습니다.
In the bond market, not unchanged
자,
at all.
2차 CPO 대기해보도록
Multi-month
하겠습니다.
lows on two-year government bond
잠시
yields. Your two-year this morning,
2차 CPO 대기하면서
3.66. Going into this a little bit later this morning.
시장에
Data
영향을 줄 만한
in
뉴스
America. PPI and jobless claims, 8:30 Eastern
자,
time.
2차
So
진입도
are
내도록
bond yields
하겠습니다.
falling for the right reason? For the PPI report that could echo what we heard in CPI on Tuesday, which demonstrates that we aren't seeing the same kind of pass-through inflationary effects of tariffs that a lot of people had been worried about. Is that the reason why you are seeing bond yields fall and expectations for Fed rate cuts increase? Or is it because of the bad news, which is the labor market deterioration that some people saw in the non-farm payrolls report that could be echoed in jobless claims that haven't really done much? If anything, they're actually incredibly low.
Sitting in this seat, we often hear a lot of complaints about complacency. It's often justified. I'm not pushing back against that. Groupthink, often justified, not pushing back against that. But on this occasion on Wall Street, I'm seeing a lot of diversity of thought. We heard from Aditya Bhave at Bank of America in the last hour, who turned around to us and said he thinks this labour market's okay. Minutes ago,
다시 한번 매수 진입하도록 하겠습니다. 자, 매수 5개야 진입해보도록
you ask one economist
하겠습니다.
right now on Wall Street how the labour market's doing, they'll tell you one
매수
thing, ask another, they'll tell you something completely
있습니까?
different, looking at the very same economic data.
Because there are cyclical and there are structural changes, as you were pointing out earlier. You have demographic changes with aging, you have demographic changes with immigration, and you've got demographic changes when it comes to which roles are going to be most important with artificial intelligence, machine learning, changes in some of the structure of the labor economy. This is the reason why Jackson Hole is going to be so important. Does the Fed change the way they measure strength or weakness in the labor market at a time where that is part of their dual mandate? And it is so hard to understand exactly how much slack, as you said, there actually is, or whether we could still see wages growing at a healthy pace given the few workers to fill those roles.
Yeah, we've been framing this as follows. Are we seeing a cyclical turn in the economy or a structural shift? Are we seeing demand destruction or just a supply-side phenomenon? Are we seeing a step down in payrolls growth without the increase in labour market slack? And ultimately, the more constructive people on Wall Street right now think that's the case, that you can see that step down in payrolls growth, but because of what's happening on the supply side, you're not seeing an increase in slack and the labour market is still okay. The Fed chairman, by the way, in the last meeting, we were sat here by the table listening to the news conference, he was pretty clear. He was anchoring his view on the labour market around the unemployment rate. Now, we can have some debate about that. Maybe you think it's misleading. I don't know. But that was his view in the news conference. I'd like to know if it's changed.
And I would like to know whether people actually do think, as you said, this is a market that can have its cake and eat it too. Because right now you're seeing equities reach all-time high after all-time high on the heels of these rate cut expectations, even if this is a Fed chair, albeit in his twilight as Fed chair, who is watching the unemployment rate and will only cut rates to that degree if there is real substantive deterioration, which would suggest some sort of weakness of the companies that people are bidding up in value.
You'll hear from the chairman a few times over the next month or so in Jackson Hole. Lisa will be there. Then again, of course, in that news conference at the Fed meeting a month or so away. Lisa talked about the market, bond yields breaking down to new lows. This bond market rallying alongside this move in the equity market. New highs again this morning. Equity futures just about turning positive. Coming up this hour, we'll catch up with Tracy McMillan of Wells Fargo as stocks look for a third day of gains. Pierre Ferragu of New Street Research on Apple's latest AI push. And Scott Kroner of Citi raising his year-end price target on the S&P 500. We begin this hour with stocks steady as investors await the latest read on inflation. Tracy McMillan of Wells Fargo writing the S&P 500 is past surprises an economic slowdown to stall the equity rally in the intermediate term. Tracy joins us now for more. Tracy, welcome to the program. Let's just talk about why you're pushing back a little bit against these record highs we've been minting over the last few months or so.
Yes, we are pushing back a little bit. We are trimming and we're rebalancing the portfolios. We've had such a strong earnings season. There's a lot of optimism priced into markets, and we're going into a seasonally weak period. So we think it's time to trim some of the gains in our large cap positions, take our small cap position to an underweight, and take some of that overweight position that we held in the equities asset group all year, move that into intermediate term fixed income, and look for some chop as we move through the remainder of this year.
Tracy, just stick on the equity component of that call. Moving the small caps to underweight after a couple of days where the small caps have performed quite nicely. Now, Tracy, as we talked about this with Ed Yardeni earlier, trying to work out whether that breakout in small caps, small breakout over the last few days, is just another head fake. Why move the small caps portion of the equity exposure to underweight?
Sure, yeah. We do think that's probably another head fake, and that's been very consistent with small cap performance over really the past few years. We've seen hopes that interest rates will move lower and that will support small caps. We think that that's what we're seeing again this time. However, our expectations for interest rates differ from what the market is expecting right now. We do not see as many rate cuts as the market does. So we don't see that as a support for small caps. We see small caps as a part of the market where earnings potential is just not as strong as the large caps and the mid caps.
Tracy, you point to some of the tariff ramifications as one justification for why you're not as bullish for the remainder of this year when it comes to equity performance. And it seems like that's justified when you take a look at some of the earnings calls in terms of the absorption of these extra levies in profit margins. You see this across the board from Caterpillar, from Hershey, from Ford, with a $2 billion hit talking about that. General Motors, why do you think the market hasn't responded more to that already? Because we already have seen some concrete numbers of just how big these bills will be.
Sure. So we have already started to see some of those numbers. And, if you think about where we started the year at about 2.4% for tariffs, we're going to end the year probably at 18 plus is the projections that I've seen for that. So that is a big differential. As you said, companies are absorbing those into margins, which have been very strong at the moment. We think that that's going to also be a pass-through to the consumer when both companies and consumers benefit early next year from tax cuts, from potential additional stimulus, and from deregulation. So we think that's why markets keep powering ahead, because they see the potential for those things to mitigate some of the tariff negativity in the coming year. We agree with that. We just think over the coming months in 2025, it could be more volatile, could be more choppy as we see additional tariff surprises come to the fore.
By that same logic, Tracy, there is sort of this stagflationary element to what you're talking about, the idea that prices go up, but that growth slows down. And ultimately, that should be, over the longer term, pretty good for long-term bonds. Not necessarily if it's actually stagflation like the 1970s, but if that leads to a period of lower growth and you have the coffers of the Treasury Department getting filled by some of the tariff revenue. How much are you seeing this as a bull case for longer-term treasuries?
So we really aren't seeing this as a bull case for longer-term treasuries. Instead, we like the intermediate part of the curve because we think that rates are actually going to stay around the level where they are. Our midpoint for 2025 is 4.25 on the 10-year. We move that up to 4.5 next year. So a bit of a rise in longer-term rates is what we're anticipating as inflation stays firm and as U.S. debt continues to increase. Yes, there's some offset from tariffs, but we're just not convinced that that's going to be enough to really draw down the debt and the deficit.
Tracy, appreciate your views. Thanks for joining us. Tracy McMillan there of Wells Fargo on both equities and bonds. So this is the view. Equities bring down your exposure, small caps to underweight, position in the bond market in the intermediate part of the yield curve, which I think is actually pretty interesting because typically we might say, well, if you think there's going to be a slowdown, some risk aversion, go out further along the curve, take a piece of the 10-year. It's not what you're hearing at the moment, is it, from investors?
There isn't a belief that the tariff revenue can continue at a pace enough to offset the deficit in a way to really drive them into longer-term bond yields. And then there's the additional point, which we didn't talk about just there, which is the international backdrop and just how much yields globally are rising on that 10-year and 30-year denominations.
Kevin Gordon writes in. Did you get that email?
Yes, I did.
Charles Schwab, over the past 4 years, small caps, small performance, small gains. Russell 2000 up by about 5.7% over the last 4 years. The S&P up by more than 44. And every time we get these moves over a period of like 2 days, the excitement comes back all over again for small caps.
They're cheap. They're buy. It looks really good on a chart. That said, when you hear some of the profit reports, you hear Amazon having free grocery delivery in the same day. You see some of the technological investments that the behemoths are making. You wonder how much of a competitive edge some of these smaller companies actually have, let alone ability to compete in profitability.
The Russell is down by 0.3% this morning. Let's get you an update on stories elsewhere with your Bloomberg Brief. Here's Yahira. Hey, Yahira.
Hi, John. We are seeing the Japanese yen strengthen against the dollar this morning, and JGB yields are ticking higher as traders woke up to Treasury Secretary Scott Bessent's comments on our program yesterday that the BOJ is behind the curve and said Japan needs to get their inflation problem under control. Meanwhile, Oracle is cutting jobs in its closely watched cloud unit, taking steps to control costs amid heavy AI infrastructure spending. Sources telling us here at Bloomberg, impacted workers were informed this week that their roles were eliminated. More than 150 jobs were cut in the Seattle area, which comes as Oracle prepares to move its headquarters to Nashville. And rents on Manhattan apartments hit a record in July for the 5th time in the past 6 months. Prices surged more than 9% from a year ago, marking the second biggest annual jump since 2008. In Brooklyn, the median rent on new leases climbed to $3,850, the second highest level on record for the borough. That's Bloomberg Brief. John?
It's basically 4K, which is absolutely bonkers. Yahara, thank you. And it's going to play into the politics of this city over the next several months, given the election taking place at year-end.
Yeah, it already has. What's the best way to tamp down some of these rents? Is it to have rent control, where one of the mayoral candidates currently has a pad, or is it something like building more, and how do you do that in a way
현재 매수 진입권 실시간 대응 중에 있습니다.
Not a strong argument, is it, when you're sitting in a rent-controlled apartment yourself?
It depends, and I think people are trying to redefine what it means as a middle-class family and what it means to be affordable in this city, and I think that that's an ongoing debate and one that's increasingly fraught with emotion.
It's going to be a massive, massive emotional election in this city later this year. Up next on the program, the Morning Calls Plus, we'll catch up with Pierre Farragut of New Street Research on Apple's AI push. That conversation just around the corner from New York. You're watching Bloomberg TV.
자, 대응하면서 베센트 재무장관 폭스 인터뷰에서 나온 발언들 정리 한번 해드리도록 하겠습니다. 자, EU가 러시아 문제 대응에서 더 이상 이루지 말고 실질적으로 행동을 해야 한다. 발언한 게 있고요. 그리고 유럽이 인도에서 정제된 러시아산 원유를 구매하고 있다. 푸틴이 휴전에 동의할지 여부는 알 수 없다. 자, 트럼프 대통령은 푸틴과의 대화를 이어갈 의지가 있다. 라고 자, 베센트 재무장관이 발언한 사실이 있습니다. 자, 현재 보합권 진입하였습니다. 자, 매수 진입권 대응에 나가도록 하겠습니다.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency. Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question.
Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
It feels like a melt-up already. The market figured out and kind of agreed with me that the economy was resilient and we're not going to have a recession. And when it did that, suddenly, boom, we went right back up. So the market ain't cheap. And the reality is if the Fed cuts when there's still, as you said, a lot of ambiguity about whether it really needs a cut. It doesn't really need a 50 basis point cut, let a 25 basis point cut.
but it might get it. Ed Yardeni, if you had any research, basically said this market might get its cake and be able to eat it too.
Yeah, although it might cause some sort of melt-up that leads to a late 1990s type of situation that tends to lead to a meltdown. So that's the conundrum. At what point is it appropriate stimulation without causing some sort of exuberance that is unwarranted?
He said what Greg Peters of PGIM in the last week said on this program, basically word for word. The experience of last year when they cut rates 100 basis points and rates rose 100 basis points at the long end of the curve. Basically, they reduced interest rates and financial conditions tightened further out along the curve. He's saying you could see a repeat of that, and he's not the only one making that claim.
At this point, how much is that a concern of Fed officials who are raising some alarms about cutting so quickly? We heard Mary Daly talking in a Wall Street Journal interview yesterday that she doesn't see the case for a 50 basis point rate cut next month because ultimately that would send the wrong message to markets and isn't appropriate. The labor market isn't falling off a cliff. This is what we expect to hear more of in the coming weeks.
I think it's a massive disconnect. You've been repeating this for the last several months. It's huge. You're coming out and you're hearing this. I hear this all the time. We need to drop rates to the Federal Reserve. We need to get mortgage rates down. What's the relationship between the two right now? Right now, might not be that strong. You could come out and cut Fed funds. Let's say you're super aggressive. Come out and say, I think it's a problem. I'm going 50 again, 50 again. You could see this dynamic where the long end of the curve doesn't rally. You're not going to see mortgage rates come down.
This is the reason why we heard Ed Yardeni say that the bond vigilantes were the ones enforcing law and order on the rest of the bond market and stock market, because essentially the sheriffs of the town are going to ultimately set that mortgage rate, which is one of the linchpins of this administration. So you can expect that to be one big focus going forward.
Rick Reader of BlackRock said recently, this is the best time for investing that he's ever seen. I would say something a little bit different. I think it's the most interesting time for investing that I've seen in a long, long time. I find it absolutely fascinating right now.
I completely agree with you, and Rick Reader might have a very good time investing as Fed chair because evidently he is one of the names
so the same thing.
in the potential list.
Going to try and catch up with Rick soon. Guess what? He thinks we should cut 50 in September.
There you go.
So we'll get his thoughts on that. Let's turn to some morning calls. Our first call from Argus, downgrading eBay to hold, highlighting its rollout of new generative AI models. Our second call from Bank of America, lifting its price target on Cisco to 85, pointing to slightly better than expected results. And finally, Mizuho, raising its price target on NVIDIA to 205, saying the company's next-gen CPU is a tailwind into 26. Let's stick with tech. Apple looking to catch up in the AI race. Sources telling us here at Bloomberg the company plans to launch a slew of smartphone products in the coming years. Pierre Farago of New Street has a neutral rating and 220 price target on shares of Apple. Pierre joins us now for more. Pierre, welcome to the program, sir. Let's just start from the top. I just want your high-level views on what's happening at Apple with the shift and the big push into AI. What are they doing? What should they be doing? And ultimately, what aren't they doing?
I think they're doing a lot of things, right? It's a very, very long list, and I'd like to highlight like three things they've announced. The first one is they're going to redo Siri. So it's kind of a recognition that like they still struggle to create like a generative AI, very enjoyable voice user interface. They have to rework that. The second thing, so it's kind of an admission that getting into the AI era is difficult for Apple. Then the second one is about all these new devices they're talking about, like having like a tabletop robot, having like home cameras. And the way I read that is, in the last 7 years, Apple increased the average selling price of a phone from about $500 to $1,000. And so they've had like really like an open highway to really increase their share of spending of affluent consumers. And of course, they see the risk. They see the risk that if the smartphone is not the only device, the only personal device in an AI enabled world, they might lose share of wallet. So they need to place bets all around the place. And you know that they did that in the past with the car. They've tried for a decade to launch a car and eventually gave up. And then the last one is, of course, spending on infrastructure. For the first time in a very, very long time, we've heard Apple making comments about CapEx on an earnings call. And so they realize that AI doesn't go by itself. It requires gigantic infrastructure. And it's kind of interesting to see that now maybe AI, like Apple, in a couple of years, is going to be one of the very large spenders on AI infrastructure. We'll have to see how it plays out.
Pierre, there's a lot to unpack there. One of the key points here is this sort of threat, this existential threat to the likes of Apple, that the smartphone is on its way out as the dominant instrument that we all engage with the world with. I mean, this comes at the iPhone's 20th anniversary, which makes me feel very old. I'm just wondering, do you see that as being true, that the new model is going to be something like a tabletop robot or some sort of virtual glasses?
Well, the one thing I can tell you is that the search for the next product is a very, very slow process at Apple. Remember that Apple started working on the iPad maybe 10 years before they produced in large volumes the iPhone. And because they couldn't get the iPad together, they ended up doing a phone. And then once they made a phone in very high volumes, the economics of doing these products changed, and they eventually produced the iPad. So never try to bet, what the next product is going to be based on what's in the pipeline at any point in time. I think Apple's model is we want to do perfect products, and we don't mind working 10 years, 15 years on a product before it gets perfect. And what you've seen lately is the car, the headset, and these products are not working very well. And Apple just keeps going and keeps searching. And I have to admit, Lisa, I don't really have a strong opinion on what the next AI device is going to be, but I share the concern that the potential for the smartphone, and in particular the iPhone, to lose significantly share of wallet is very significant. So Apple has to be very active on that front.
Do you think, Pierre, that the leadership has been good at Apple? This is something we've discussed in this program, calls for maybe some change in leadership, given that the vision has been somewhat lackluster over the past few years, at least in the eyes of markets.
This is a tough question you're asking me, Lisa. So I would say two things. It's very difficult to be in the aftershock of a revolution like the iPhone. The iPhone created a new category. It was like a completely new product category. And of course, it's very, very difficult to be in the aftershock of the founder of Apple and to just be like the enabler, the man who helped make the vision, the product vision, an industrial reality. And so since, Steve Jobs passed away, what we've seen at Apple is a Tim Cook that has kept running the machine beautifully. I don't think you could have done anything better than what he has done in terms of maximizing the value of products, maintaining the very high level of product excellence, etc. But now, does that mean Apple is in a good place? Not necessarily. Apple is at risk of losing share of wallet, at risk of not being able to pull together a proper series. And, would have I done better than Tim Cook on this front? Probably not. And I wouldn't blame him. It's just that it's a very fast-moving world, and Apple is $1 trillion market cap in the core of technology, and technology is evolving very fast. So, no matter how good the management is, like Apple is facing challenges today.
They're in a tricky spot, that's for sure, a sticky one. Pierre, appreciate your views. Pierre Ferragut there of New Street Research, the latest on Apple. Dan Ives of Wedbush came on the program recently and said, BlackBerry moment for this company.
자, 중요 지표 금일 PPI 발표까지 약 5분 앞두고 있습니다. 자, 베센트 재무장관 인터뷰 추가적으로 나온 속보들 말씀드리도록 하겠습니다. 자, 제약 관세 관련해서는 앞으로 나올 소식을 주목해달라고 말한 사실이 있고요. 그리고 정부의 비트코인 보유액은 약 150에서 200억 달러 규모이다. 신규 매일 계획은 없으며 압류 자산을 활용할 예정이다. 라고 밝힌 바가 있고요. 연준에 150bp 금리 인하 요구한 것이 아니라 중립 금리 수준에 도달하려면 총 150bp 인하가 필요하다는 것이다 라고 밝혔습니다. 그 초기에는 25bp 인하로 시작할 수 있으며 이후 상황에 따라 금리 인하 속도를 높일 수 있을 것이다 라고 밝혔습니다.
3% on neutral is basically where the Federal Reserve is at the long-term neutral rate, so 150 basis points down from now. As we've said repeatedly through this morning, what he's saying is not controversial at all, but he's clearly pushing back against how some of this has been framed in the last 24 hours.
This is a semantics point because he had said originally that he's not going to tell the Fed what to do. And he's saying he didn't tell the Fed what to do. He's just saying that based on his models, neutral rate is about 1.5 percentage points lower than where it is now. And it would make sense to cut by 50 basis points. So parse the language, do what you will. That's sort of the latest today.
I keep saying this. What are we even arguing over?
I have no idea.
Like Federal Reserve's on course to cut twice this year.
Exactly.
And market thinks it goes another 100 basis points next year. Stocks are at all-time highs. Credit spreads are super tight.
Exactly. Crisis.
Apparently. Okay, up next, more data. PPI jobless claims just around the corner. We'll catch up with Nita Richardson of ADP.
자, 데이터 발표까지 약 3분을 앞두고 있습니다. 자, 지표 발표 이후에 빠르게 진입 사인 드리도록 하겠습니다. 자, 그리고 실업수당 청구 건수도 동시에 발표됩니다. 자, 고용 관련 지표도 동시에 발표됩니다. 잠시 후 2분 뒤 중요 지표 2개 발표됩니다. 자, PPI는 바로 발표되는 수치 이후에 이제 세부적으로 데이터 아니기 때문에 바로 나오는 그 실제 예측치와 예측치 이후에 나오는 세부적인 데이터에 따라서 또 다른 변수가 생길 수 있습니다.
All right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg. It's the world's 2nd largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think
예상보다 굉장히 높게 나왔습니다.
Right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
자, 매도 진입하겠습니다. 매도 진입 사인드립니다. 자, 매도 진입입니다. 시니까 860.25입니다. 자, 860.25. 자, 매도 진입입니다. 자, 매도 진입 사인드립니다.
Close to all-time highs, closed at all-time highs in yesterday's session.
예상보다 많이 높게 지금 발표가 되었는데요. 자, 매도 진입 사인드리도록 하겠습니다. 매도 진입 후에 발표치 말씀드리도록 하겠습니다.
Levels we have not seen come back to April, May time. Yields lower this morning, through much this morning. 368 on a 2-year. Let's get you some data. Here's a surprise, big upside surprise. PPI. PPI final demand coming in at 0.9%. The expectation in our survey was 0.2. I'll get you a breakdown of PPI in just a moment. I want to turn to jobless claims because this is the story in the labour market. Claims at 224,000. The estimate was 225. Previous number, a revised 227. So compare and contrast what's happening here in the labour market. That data looks okay. To what's happening with inflation. PPI's just come in much, much stronger than anticipated. Lisa, off the back of that, you're seeing a stronger dollar. I imagine we're seeing an unwind in the bond market a little bit, and we do. Yields up at the front end of the curve by 4 basis points on 2s, up by a single basis point on 10s.
It raises a question, why would the Fed cut rates if they do see signs of inflation? We have to look at the components to understand what goes
예측이
into
0.2인데
PCE,
실제 발표는
because that
0.9가
has been
나왔습니다.
a key consideration.
굉장히 높게
Nonetheless, just
발표가
at the
된
headline
거죠.
level, the fact that ex-food and energy PPI rose 3.7% year over year versus the expectation of 3%. You're seeing that across the board when you look at even ex-food and energy on a month over month, 0.6% versus the expectation of 0.2%. As you were saying, this just raises a question. Have we fully indicated what kind of inflationary impulse there would be from tariffs, given the fact that some of the goods are now coming in with those tariff prices in a way that they could have avoided with pre-orders and inventory maybe a month ago?
Equities pulling back by about 1/3 on the S&P 500 in response to this
실업수당
economic
청구건수는
data.
예상보다
예상치보다
하회하는 224K가 발표되었습니다. 예상치는 225K였는데요. 실제 발표는 224K가 발표되었습니다.
percentage point at the moment on Russell futures. In the bond market, not seeing a major move. I've got to say that. This is not a big move relative to the rally we've seen at a 2-year. If you think the 2-year's come down by, let's call it 30 basis points over the past few weeks, big move after payrolls, and yet still.
자, 여기서 수익 청산 끊어가도록 하겠습니다. 자, 수익 청산 사인 드리도록 하겠습니다. 자, 여기서 끊어가도록 하겠습니다. 자, 수익 청산 사인 드립니다. 자, 수익 청산입니다. 자, 예약 기준 약 30만 원 수익 청산 사인 드립니다.
And how much is the specific components? Again, I keep going back to that because the components are important. When I
자,
saw the
4차
core
진입표 대기하도록
CPI
하겠습니다.
on
4차
Tuesday, I thought,
진입표
oh, this is a
대기하도록
concern. And
하겠습니다.
then you look at the components, and they're more volatile, so people could dismiss them. Here, are people able to dismiss it in the same way, or is there something else at play? To your point, John, the fact that you're not seeing that much of a move at the front end, but you're also not seeing that much of a move at the long end, doesn't indicate that this is a market that thinks that this is going to be a protracted inflationary push that's going to really affect the Fed's policy and, frankly, bond policy going forward.
With us around the table, Neela Richardson of ADP, just to break down where we are in the economy. Neela, let's start with not just the data this morning, but the setup at the moment. As you look across your dashboard, what do you see?
Well, what we're seeing is an economy that continues to chug along. Hiring momentum has slowed. I think that's clear. There's been some stasis in the labor market. But overall, when you look at the things that I look at, like are companies cutting hours? No. Are wages plummeting? No. Actually, they're staying pretty well formed and really, really steady. And so even though we're seeing a slowdown in the momentum, the underpinning of the labor market continues to be solid enough to support consumer spending. Now, we'll get retail sales out in a bit. We'll get some confidence data out in a bit. This inflation surprise is something that should be considered with a whole bunch of other data that was leading up to this point showing no smoking gun when it came to tariffs and inflation. So the big picture is it's an economy that continues to perform. It's just not as dynamic as we're used to seeing.
Ira Jersey of Bloomberg Intelligence is just working through the details of that PPI report. I'm going to cross over to him in just a moment. Just to come to you just quickly on what we're seeing with inflation. Is it too early to draw conclusions here based on the data we've had so far? And will it be too early at Jackson Hole, too early at the next Fed meeting?
Some conclusions are going to have to be drawn because decisions have to be made, but it's really going to be a matter of perspective. So those components, as Lisa mentioned, of the PPI are going to be so important because when we looked at the CPI, the inflation triggers were all in the services. It wasn't like the goods sector was screaming inflation. Those final goods aren't showing it yet, at least yet. Those intermediate goods, the wholesale goods, that's where a tariff could bite in the, as the goods are being built and formed. And we might see that in the wholesale prices, in the producer prices, an increase. So maybe this is the first sign. Maybe it's just a one-off. We won't know, but we have to look at the complete complexion of the economy. economy. At least some people do, in order to make those rate decisions next month.
We're trying to do that right now. We can do that with Ira Jersey of Bloomberg Intelligence. Ira, you've been looking through the details, sir. What stands out to you? What's behind this big upside surprise this morning?
Yeah, so it's not necessarily the goods sector that's driving a lot of this. So you saw a big increase in the services PPI here with a 1.1% increase month on month. That was negative a little bit last month. So you had this big shift toward services increasing, in particular trade. So some of that could be from import prices. If you think about the pass through from shipping and things like that are going to be goods that are going to be tariffed. So maybe this is suggesting that there might be a little bit of margin contraction, and like you mentioned, not a huge move in the front end of the bond market, but it's still 5 basis points from where we were right before we received the number. I think retail sales tomorrow will wind up probably being even a little bit more important to the bond market than this particular number. But certainly, 50 basis point move in September might be taken off the table with worries about inflation ticking up a little bit here.
It's not just that, Ira, and I'm glad that you broke it down and understood to see that it's coming from services kind of mimics what we saw in the CPI. It's also the initial jobless claims coming in at the somnolent 224,000. Even continuing claims came in a touch. These are the people who keep receiving unemployment benefits. Where is the impetus for the Federal Reserve to need some sort of emergency rate cut, given the fact that this doesn't seem to point to any kind of massive dislocation in the labor market?
Yeah, keep in mind, the claims numbers have been relatively steady for years now, but so remember, that's only one side of the equation, right? That's the firing side. So it's really how many new people are entering the workforce and are going to be then hired by firms too, because at this kind of pace, you'd wind up with pretty massive layoffs actually, if there's not someone hired on the other side of those initial jobless claims. And you have seen a slowing in that. So it has to be the job market, right? The Fed to cut more than 25 basis points in September would require a really disastrous kind of non-farm payroll number, I think. Now, that being said, just the slowdown in the hiring process without consumer prices ticking up quite a lot, that could mean that, hey, the Fed could ease just a little bit to kind of placate the market, make sure that the job market doesn't completely fall out of bed. And I suspect that that's the thinking of those members like, Governor Wallers and Bowman, who have seen this slowing in the job market and are concerned that it could get worse. So let's be a little bit proactive here. Now, that being said, do they have to do that? I don't think so. Like we had always had penciled in based on our forecasts in October as the first rate cut. But realistically, September versus October, it's not going to matter that much to, 10-year Treasury yields, quite frankly.
Ira, just before you go, I've just got a brief question, and it's to build on what Lisa and I were talking about at the front end of the curve. Why is this market looking through firmer services inflation, both in CPI and PPI this morning? Why are we only up by a basis point or two? If you told me these numbers earlier on this morning, I might have guessed, might be up double figures, double figure basis points off this, maybe up 10 basis points, 11, I don't know, but not a single basis point.
Yeah, well, I think that the CPI report wasn't nearly as bad as I think the market thought, and the market is certainly pricing in for a modest easing of monetary policy over the next couple of quarters, and and again, like as long as you wind up having a slowdown in the economy, the Fed is going to try to right size things, and there is this idea that within the market, and I've talked to a lot of market participants about this, where is neutral, right? I actually think we're pretty close to the neutral rate, but a lot of people disagree with me and believe that the neutral rate is closer to 2 or 2.5, which is where headline inflation more or less is right now on a CPI basis. So people do think that rates are still restrictive. Again, I'm not as convinced of that, but that's where the market is, and that's why the market thinks that the Fed is going to be cutting rates in the very near future.
Don't fight the market. It's always the lesson. Ira, thank you, sir. Ira Jersey there of Bloomberg Intelligence breaking this down. Lisa, services again. Again, firmer.
This isn't necessarily a good thing for the Federal Reserve because typically services is something that's more discretionary and tends to be more fungible. It raises this question about where the weakness is coming from. Neela, I have to say the ADP report's taken on a lot more import recently, especially with some of the questions around the BLS, and I just wonder what kind of hiring you see in services and wage increases to edify the sense that that's an area that's actually been benefiting of late.
You know, I think the issue with the labor market is that the structural and the cyclical are kind of colliding in this moment because we are still in a labor market that's being impacted by the pandemic. We're being impacted by an aging workforce. We're still being impacted by the Great Resignation, which means the turnover, that dynamism is missing in today's labor market. So when you look at something like services, what are you seeing? Well, first of all, you're seeing certain pockets of services slow down tremendously. We saw a dip over the summer. It's rebounded according to our data in the last month. New entrants into this market is very slow. If you talk to any parent of a college-age student, it is, my student is still looking for a job, even though they just graduated. If you look at ADP data, if you don't like the anecdotal, you want to look at the hard data, we pay over 25 million workers in the United States, and what we're seeing is that new higher pay hasn't budged from $18 an hour for the median in more than 13 months. So there is a stagnant part of this labor market when it comes to onboarding new people. That's going to be reflected in productivity numbers, and it really is going to impact services more than goods. Goods sector, that talent tends to be more specialized, fewer new hires, less affected by the people dynamics that underpin the labor market.
Can I ask you a provocative question? Is the new BLS chief good for business? Which I think is what Lisa was trying to ask. Is the new BLS chief good for business over at ADP?
Well, until they're confirmed, we won't know. But what I can tell you what's good for business is good data.
Leila Richardson of ADP.
Very diplomatic.
Thank you. I expected it to be diplomatic.
It was very well done.
That was basically what you were getting at.
Well, it's just, you know...
We'll be looking to ADP a little bit more, right?
I mean, that's what people are saying, is that ADP is going to matter that much more because it isn't changing its methodology in any capacity, and there are increasing questions around BLS.
Stocks are down. We're down by about 0.4% on the S&P. Not trying to get anyone in trouble. The Nasdaq 100 is down by about 0.5%. Big move lower on the Russell. We're down by 1.3. Again, just to go back to the bond market, so big upside surprise on PPI, and yet bond yields are higher by just 2 basis points at the front end of the curve. Irish Jersey said it. Don't fight the market. This is the market pricing in cuts. One way. We're moving lower. That's the view of the market at the moment.
And it seems like Fed officials are on board with that. When you look at the components, though, I don't understand how we're looking through services inflation to such a great degree, especially if it is edified. It really puts more import on tomorrow's retail sales. If you see the strength that Aditya Bahave of Bank of America was talking about that they're seeing in their Bank of America survey, do you get the same sort of confidence that this is really just a one-time kind of head fake and that the labor market report really was the real story?
We've said it on repeat, and I know it's a bit of a cop-out, but it's just how we feel. Jury's still out. Got to wait for the data, and it's so hard to draw conclusions about where we are.
Anyone who says that they know the answer to that, I would like to see what they eat at night. But, you know, I think a lot of people would agree.
Let's get you an update on stories elsewhere. You were thinking of something different. I know you were. OK, all right. Let's get your Bloomberg brief with Yahara Anand. Hey, Yahara.
Hi, John. Recapping the latest economic data, July PPI coming in hotter than expected at 0.9%, way above estimates for an increase of 0.2%. Core PPI also coming in well above expectations. Meanwhile, 224,000 people filing for jobless claims benefits in the week ending August 9th. That's just 1,000 less than estimates. Meanwhile, on to Russia as President Trump prepares to meet with Putin tomorrow. Trump warning he would impose very severe consequences if the Russian president does not agree to a ceasefire with Ukraine. He said he hoped to use the meeting in Alaska to set up a quick second meeting with both Putin and Ukrainian President Volodymyr Zelensky. And Amazon plans to offer same-day grocery delivery in 2,300 cities by the end of the year, more than doubling the current number. It says customers will be able to order perishable items alongside frozen foods and household goods. The same-day grocery delivery service will be free in most cities for Amazon Prime subscribers on orders over $25. That's your Bloomberg Brief. John?
Yahira, thank you. Appreciate it. Thanks for this morning. Up next on the programme, we'll set you up for the day ahead and the rest of the week going into the weekend. Plus, we'll speak to Scott Kroner of Citi after lifting his year-end price target for the S&P 500. All of that still to come. Live from New York, this is Bloomberg.
자, 현재 4차 진입이 대기 중에 있고요. 그 나온 PPI에 대해서 세부적으로 설명 한번 드리도록 하겠습니다. 자, PPI 서비스가 비용급등으로 3년 만에 가장 큰 폭으로 상승을 했다고 보여지고 있고요. 기업들이 관세로 인한 수입 비용 증가를 흡수하지 않고 가격에 전가하고 있기 때문에 도소매 업체의 마진이 2% 증가했다고 판단이 되고 있습니다. 자, 관세 부담 전가가 일시적일지 장기적으로 이어질지가 중요하다고 판단이 되고 있습니다. 자, 지표 발표 이후에 큰 하락세 보여주고 다시 반등 보여주고 있는데요. 자, 여기서 추가적으로 눌림 및 반등 여부 살펴보고 4차 진입 사인 드리도록 하겠습니다. 자, 전일 리스크가 있다 보니 금일 좀 더 면밀하고 신중히 분석 후에 진입 사인 드리도록 하겠습니다.
You've said 25% last year, I believe, of Google's code is AI generated. You have over 180,000 employees right now. Is it half that in the future?
I expect we will grow from our current engineering base even into next year, right? Because it allows us to do more, right? I think the opportunity space is also increasing. I just view this as making engineers
본전까지 약
productive.
40분을 앞두고 있습니다.
Getting a lot of the mundane aspects out of what they do, allowing them to spend on higher value-added tasks. But that means it's an accelerator. People will be able to do more.
자, 다시 한번 매도 진입 사인 드리도록 하겠습니다. 자, 매도 5개야. 연관 동일하게 5개야. 자, 매도 진입 사인 드립니다. 자, 진입가
you know, we will expand engineering velocity.
838.25입니다.
And that doesn't mean we're constrained in what we will do. We'll end up doing more as a company as well.
838.25. 매도 진입 등 이어나가도록 하겠습니다.
A region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizon Middle East and Africa for the stories, newsmakers, and insights from this exciting region. Now weekdays, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
There doesn't need to be a huge pickup in inflation, but the point that we've been making is that even X of the tariff shock, the core PCE, headline PCE, probably stuck around 2.5%. And that's the concern that we have for Fed policy. We think they're meaningfully away from target and even further away in the other direction than they were before the pandemic. We're being hit by so many supply shocks right now that it makes forecasting very difficult.
That was Aditya Bave of Bank of America weighing in on the inflation data and the labour market data as well. He still believes this Fed won't be cutting interest rates through the rest of 2025. PPI just moments ago coming in firmer than expected. The pass-through to PCE, though, may be fairly limited and unchanged in the minds of a lot of people on Wall Street, yet still equities down by 0.4% on the S&P and bond yields that little bit higher at the front end of the curve.
Looking at the breakdown right now, what stands out to me is we're paying more for our bundling. When people want entertainment, all of those price increases from Disney and Hulu and Paramount, that's going into cable satellite subscriber services and wireless telecommunication services, bundled wire telecommunication services, all going up significantly. And I wonder, you know, this speaks to the moment we're in.
Bills are getting more expensive.
Yeah, and it just...
I love that rant.
I think that this, basically is the embodiment of that rant, is that is single-handedly, it's not single-handedly at all. well. But it's part of the reason why.
Go after them. You've got some more time. Just keep going.
Look, to me, I think that it's notable to mention that 4.2% of an increase in costs for cable satellite subscriber services. I think that's important to point out.
You know, I'm on board. Let's get those prices down. Hulu.
Yeah, it's like the sports. Well, you're annoyed about the sport.
Every time I get that email from Hulu and it's like, it's gone up again.
But you pay it.
Yeah, unfortunately,
yes, here we go. And that's factoring into this.
Stocks are down this morning on the S&P, retreating following that PPI.
현재 수익권 계속 길게 보고 이어나가도록 하겠습니다.
Hey, John, here's one of the companies that's eating higher costs. It is Tapestry, and shares plunging in the pre-market, down 12%. Their outlook incorporated a new tariff hit that appears to be about 60 cents eating into their EPS. And with that new information, the market incorporating that into the price with a weaker outlook of about 4% growth for their fiscal year. Meanwhile, Deere also under pressure. It's both supply and demand. A record corn harvest plus demand looking a little bit more sketchy with some of the tariff and trade concerns seeping in. So they cut their outlook, shares down 6%, more than that this morning. Meanwhile, space companies getting a lift. They were getting a lift, but just in a sign of how much that PPI number changed things around. Trump had signed an executive order allowing them to make it easier to launch rockets. All of these were up about 2%. Post-PPI report, they are down at least 1/3%. John.
Danny, thank you. Appreciate it. Thanks for the update and the market reaction there. Just the day ahead for you, going into the weekend at 1 p.m. Eastern Time. President Trump delivers remarks into tomorrow, Friday. The President of the United States and the Russian President, Vladimir Putin, meeting in Alaska. Plus, retail sales and new consumer sentiment. If you want a sneak peek of next week, Tuesday, Home Depot earnings. Wednesday, Fed minutes plus results from Target. Thursday, Walmart results. And then we've got Jackson Hole. In Jackson Hole, Wyoming, the Federal Reserve annual get-together. Retail in focus, though. Big one going into that.
Does it edify this sense of strength that we've seen currently, at least in PPI, with travel and entertainment taking such a big portion of some of that increase?
I'm pleased to say we've got some time now to break down a recent call from Citigroup and Scott Kroner. Bullish on the S&P 500, raising his price target to 6,600. Scott joins us now for more. Scott, welcome to the program, sir. Great to get a few minutes with you. Just walk us through what's behind the upgrade over the past week, particularly when it follows that dreadful payrolls print from a few Fridays ago.
Yeah, Jonathan, great seeing you. Hi, Lisa, as well. So look, I think it's about fundamentals and earnings, right? So what we've been navigating for several months now has been, things such as tariff concerns, ongoing concern regarding the state of the consumer. We can perhaps come back to that in terms of services versus goods. But all told, what's unfolded here is that we went into the Q2 reporting period with an expectation that, yeah, we'd see a normal positive surprise. And we got a little bit more than that. What we got also was a little bit more confidence that the worst case around tariffs is probably mostly behind us at this point. And going forward, it does look, in our opinion, that some of the tax reform measures of the recent budget bill will play through in a positive sense. So generally speaking, what we're looking at here is a really, really solid earnings backdrop for the S&P 500 that we think persists in the back half of the year and has legs to run into 2026 as well.
Scott, your
자,
book
이제
is
실시간 대응 중에 있고요. 자, PPI 총 수요를 보게 되면
to make that your base
6월에
case.
0.0.
Yeah, so Lisa, this is where we're going to get back to the topic du jour in terms of where the Fed's living here. So what I would
3월에
say
0.2,
is that
4월에 0.2,
when you look at the
5월에
setup
0.4,
right now, our
6월에
work is
0.0,
that literally
7월
half of
금일 0.9가 나왔습니다.
the S&P market cap is associated with this AI influence. Okay, you have the other
굉장히
half
높게
though, that's
나왔죠.
going to be
이번에
more
발표가요.
traditionally economic sensitive, and where a lot of the metrics that we're discussing today are going to come into play. To get to that 7,200, what you need is a massive Goldilocks environment where you have ongoing persistence in economic activity, an okay labor market, the Fed in position to ease because inflation is coming down. Right? And that, I think, is the bull case for U.S. equities. Some of it has begun to get priced in. I think that's what we're looking at with the more recent move in U.S. equities. But to get to that massive melt-up mode, that's, in our view, where you have to get.
Scott, a lot of people are saying things like, I'm seeing complacency. I'm worried about narrow breadth and concentration. Scott, we've heard those worries for the last decade or so. Are they valid this time around?
You know, we always get concerned. Like we pointed out in our recent note that our sentiment index, the Levkovich index, is clearly in euphoria. And so we have to be attuned to that. What we pointed out, though, and this is, I think, the topic du jour on this notion of where sentiment lives, is that historically, when you're in these euphoric readings, you tend to see a bigger volatility impact. So as we go forward from here, given where valuations are, given where a lot of the noise around Fed trajectory and other policy measures are, you need to see this, as I kind of mentioned, threading the needle dynamic. But what ends up happening is that anything that appears to distort that, which may be the PPI data today, is going to trigger that
7월
bit
생산
of
물가 전월 대비
volatility response.
0.9% 상승하면서 3년 만에 가장 큰 폭으로 상승했다고 보여지고 있고요. 그리고 서비스 비용 급증이 주요 원인으로 확인이 되고 있습니다. 자, PC에 들어가는 구성요소 항공료가 플러스 1%, 포트폴리오 관리가 5.8%로 크게 상승한 게 확인이 되고 있습니다.
Scott, appreciate it. Thanks for the update. Thanks for jumping on before the opening bout.
잠시 후
Scott Cronin there
국토실권
of City. That opening bout about 35
하겠습니다.
minutes away. Got back from all-time highs in the equity market.
현재
Having a rethink
수익권에서
about
대응이
inflation in
이루어지고 있습니다.
America. I imagine we'll have a few rethings going into that Federal Reserve meeting about a month or so away. Live from New York, thank you for choosing Bloomberg TV. This was Bloomberg Surveillance.
Day 7 at the Cincinnati Open. World number 1 Yannick Sinner had to beat the rain and Adrian Manarino to punch his ticket into his 5th quarterfinal of the season. The defending champion closing out the win in the second set breaker after just under 2 hours on court. And don't forget, you can watch all the action live daily on Tennis Channel.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Let me break down our CapEx into the buckets that we spend. Big part of it is to expand our reach of fiber. You cannot wait until there is certainty to build that. These have long lead times that require you to have conviction about where demand is going. Another bucket is, as more people are on our network, we also have to add more coverage and capacity. It's almost like a variable expense. Third, we are modernizing our wireless network right now. Through the investments we're making, we are driving down our unit costs over time and providing more capacity to serve the demand that we think is coming.
Do you have less confidence in that 3-year plan now than when you first came out with it, given that some people are having trouble deciding how things are going to look in the next 3 days?
No, I really don't. I look at the nature of our business. It doesn't matter the economic cycle. It is a critical goods or service, and we have every confidence demand for it will remain. Will it be harder in a more challenged economic environment if that ends up being the case? Of course, but remember, we are investing at record levels. Slight moderation to that would allow us to deliver a lot more incremental cash to the bottom line. So I have every confidence we're going to be able to deliver our guidance.
Welcome back to the circuit. This time, we're taking you to the frontier.
Do we have a camera, or do we don't want to lose you, Emily, in all of this?
Stargate, put that name down in your books.
What we're undergoing right now is sort of the largest infrastructure build in human history.
To meet the people rewriting the rules of code and culture.
How do you personally grapple with the pace of it all?
It does feel like it's going very fast.
When did you realize, oh my gosh, my life is never going to be the same?
The day I got engaged, I was like, whoa, what have I bitten off here?
Where the future gets real.
How confident are you that AI's promise will outweigh the perils?
I'm not confident.
So the tech companies are lying or fudging.
And a little weird.
What's the point of this?
What is the point of any of this?
Tune into Season 3 of The Circuit with me, Emily Chang. Thursdays at 6 p.m. Eastern on Bloomberg Originals and Bloomberg TV.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Michael McKee in Victor, Idaho. and this is Bloomberg.
Inflation finally hits 30 minutes until the start of trading. I'm Matt Miller.
And I'm Katie Greifeld. Bloomberg Open Interest starts right now.
Coming in hot, futures fall as producer price inflation unexpectedly rises by the most in 3 years. From industrials to tech to retail, we'll dig into what the latest corporate reports say about the state of the economy after earnings, and to the moon with Bitcoin. It briefly hit an all-time high, over $124,000 a coin as investors snap up riskier assets. Katie?
Let's talk about tractors.
자, 여기서 수익 청산 사인 되도록 하겠습니다. 자, 수익 청산입니다. 자, 수익 청산 하도록 하겠습니다. 수익 청산 사인입니다. 다섯 개 기준 약 200만 수익 청산 사인 드렸고요.
And Cisco was out with lukewarm guidance last night for its AI progress. The outlook assumes that current tariffs remain in place at the levels that they are through the end of 2026. But of course, those could and likely very much likely will change. You can see Cisco shares down 2% in the pre-market. Katie?
We'll dig into that earnings
자,
report.
5천
Let's get back to this morning's info
더 면밀히
data. U.S.
분석 후에
wholesale inflation
진입
accelerating in July
하겠습니다.
by the most in 3 years. ADP chief economist Neela Richardson spoke to Bloomberg Television earlier on the print.
This inflation surprise is something that should be considered with a whole bunch of other data that was leading up to this point, showing no smoking gun when it came to tariffs and inflation. So the big picture is it's an economy that continues to perform. It's just not as dynamic as we're used to seeing.
For more on the data surprise, we're joined now by Michael Ball. He is macro strategist for Bloomberg Markets Live. So you look through the details of this report. What sticks out to me is that it was this surge in margins. What does that say about who is actually eating higher costs here?
Yeah, it looks like it's still being split about third each way. So the actual people who are exporting are taking a good chunk of it now. Wholesalers then are starting to, accumulate what they have to add in. And then finally, it's going to push on to the consumer. And we're all waiting to see kind of how that trail goes and how long it takes to finally hit the end guy. Because we saw in CPI, it's really not going all the way to the end yet.
If you look at ECAN is a fantastic function on the Bloomberg terminal, ECAN Go. And you can look at this PPI report through that lens. It shows a huge jump in services, which I'm not exactly sure if I understand why services shows through in producer price inflation. Here's the chart, by the way.
Well, I mean, it's a good question. I think services still are the more sticky part of this. We still see a lot of discretionary spending there, and the consumer is willing to eat that up, and that's why it's being passed on. Now, to your point, we saw initially that a lot of the exporters took the initial hit from the tariffs, and then we saw the inventory builds. So there hasn't been as much pressure now for wholesalers to then absorb that. And that's going to change now as inventories come down, and effectively they're going to have margin pressures of their own that'll need to be passed on.
And it's interesting to look at this market reaction here. You see equity futures really plunge in reaction. You also have 2-year Treasury yields rising right now because it feels like we had all coalesced around the idea that the Fed is going to cut rates next month. Some of that logic being questioned right now.
Yeah, I think yesterday's rally was very interesting, and it was a little bit of a continuation from this week's general theme where we are starting to price in a bigger September cut, a 50 basis point cut. Besson clearly was out on our show saying some things that indicated that that may be the pressure the White House is putting on the Fed again. But what happened is, of course, now with this, we have higher inflation again back in the forefront. We also saw Mary Daly from San Francisco Fed push back on that. And I think all that expectation is kind of the froth that brought into the market with small caps outperforming. We saw Bitcoin hitting new highs. All of that now has subsequently sort of faded in this morning's open. We'll see where it goes. Everything, things are minute by minute. We're getting lots of headlines. Besson did walk back those comments this morning, which were interesting because, again, Treasury Fed Accord was, again, talked about all night. We covered it in the MLive blog, and he crossed the line that we hadn't seen crossed in quite some time.
We're still seeing overnight index swaps pricing in a 95% chance of a 25 basis point rate cut. So in September, that hasn't fully unwound. Michael Ball of Markets Live, thanks so much for joining us. You can type MLIV GO to follow his work. Let's turn to the earnings news of the day. For that, we have team coverage across sectors, from industrials to tech to retail. Starting with Deere, the world's biggest farm machinery maker, cut its outlook again as demand dries up. Bloomberg's Michael Hertzer reports on farms and fleets. Michael, what do we know?
This year was supposed to be the bottom of the kind of farm economy, and we're starting to look for a rebound next year, but that's starting to look a little unclear now. We have a massive corn crop looking coming to us in the next couple of months, and China has not bought a single soybean from the U.S. for next season. So Deere kind of trimmed the top end of their guidance a little bit, and we're kind of waiting to see when farmers might start spending again. It was a hope to happen soon, and we will look to learn a little bit more details from Deere coming up on their call.
Yeah, and we'll see if that does anything to
자, 본장 개장까지 약 24분을 앞두고 있습니다. 자, 현재 진입권, 수익권 마무리 위해서 최대한 길게 보고 대응하도록 하겠습니다.
But the forecast seen as cautious by analysts. Bloomberg Tech co-host Ed Ludlow joins us now. And Ed, talk to us about this caution coming through and what that means for this company's stock.
Yeah, the story for Cisco is they're starting to see like real money from AI, $1 billion in the fiscal 25 year, but they're not also promising any sort of boom. So the outlook is being seen as cautious. And I think, Matt earlier said tepid, but the street also doesn't believe that there's going to be some kind of delayed growth from what's happening in AI. So the sales outlook is $59 to $60 billion for fiscal 26 through July. Consensus was 59.5 billion, so that's bang on. But as always in technology, there are corners of the street that has much more bullish forecasts. Cisco's involved in big projects. The Stargate version of that's happening in the UAE. They have a humane contract in Saudi Arabia. But no one expects any of that to materialize for some time. And Chuck Robbins and Cisco have pushed much deeper into security and services, software. But those elements also missed as well. One area that Cisco gets a lot of credit is how it's communicated about tariffs. So this outlook for fiscal 26 assumes that current tariff conditions as they are now carry on to that point at the end of the fiscal year. And the street likes that because they're basically saying, well, at least Cisco's being honest. They just don't have the sexy AI story in the near term, nor do they brag about one either.
I also think it's interesting that this is or was the poster child for overhype and overspend in the fiber build-out during the dot-com bust. Ed Ludlow, thanks very much. We will watch your interview with the Cisco CEO, Chuck Robbins. That's on Bloomberg Tech at 11 a.m. Wall Street time. Finally, in retail, Tapestry's outlook missed estimates as tariffs eat into margins. Bloomberg's managing editor for global business in the Americas, Shelley Banjo, has the details. Shelley?
Yeah, you've got a few stories emerging here with Tapestry that's pointing to some bigger themes going on in the rest of the industry. First is tariffs. They're starting to take a bigger hit. Companies that, the rubbers hit the road here. They're actually looking at how is this impacting our business right now. All of the things, all the inventory we built up beforehand is starting to run out, and we are trying to figure out what to do here next. But it's not just a tariff story for this company. They took a huge write-down on their Kate Spade brand, and they're starting to see double-digit drops in sales of Kate Spade. Meanwhile, you're seeing Coach sales do pretty well for them. And so there is this bifurcation, or it points to this bifurcation in the market that we're seeing among consumers, where the higher end is doing much better than the lower end here.
And it's worth pointing out that Tapestry, prior to this print, was up 75% on a total return basis year to date. So there's certainly plenty of room to fall there. That is Bloomberg's Shelley Banjo with the latest on those earnings. Let's get a check on equity futures right now. We have just over 20 minutes until the bell rings. You can see the S&P 500 lower by about 0.4%, a similar magnitude when you take a look at big tech as measured by the NASDAQ 100. It's the small caps really bearing the brunt of the losses today, with the Russell 2000 down by 1.3%. Following that hot PPI print, the question that comes out of this is do we see this get passed on to consumers? When do these numbers that we're seeing at the producer level start to show up when it comes to consumers?
Yeah, absolutely. I think, my question to Michael Ball when he came on set here was, does this PPI number feed into CPI next month or the month after? It seems like waiting for Godot, right? We haven't seen that tariff play through into consumer prices to any large extent, and it looks like what they're doing is they're making their suppliers pay some of it, they're eating some of it into their own margins, but eventually they're going to pass it on to you and me, Katie.
Yeah, just trying to track that daisy chain of higher costs. Certainly investors, analysts, and economists, and everyone else.
Coming up, Apple is planning its big return to artificial intelligence. The details on the company's ambitious slate of new products. That conversation coming up next. This is Open Interest.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
I think with the new world reorder, it means that there will be regional clusters of excellence. It will be regional clusters of great companies. And so it's okay to be number two, because you could be number two in every single region and still command that premium. Because today we talk about AI, we talk about data, we talk about processes that's going to be very specific to industries, specific to countries, specific to regional challenges that needs to be built and addressed. And therefore, the good of it is that now it's not just going for that one company and overpaying for that company until the returns goes to zero. It's actually about finding regional champions, which could also be huge category leaders for us as funds as well. And I think it's actually good for the world to have multiple pots of excellence that can be localized to its own niche.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jumana Bersachi in Tehran, and this is Bloomberg.
Bloomberg brings you breaking news 24 hours a day. Powered by more than 3,000 journalists and analysts in more than 100 bureaus across the globe. Bloomberg Television. Context changes everything.
Let's get now to high interest. Look what's making headlines around the world. U.S. listed shares of JD.com rising in the pre-market on better than expected earnings. The results getting a boost from government-directed consumer subsidies and an aggressive drive into new arenas. Remember, we're talking about a Chinese company here. Shares of Bumble getting hammered ahead of the opening bell. Sources telling Bloomberg that the company's CEO and Blackstone are offering over 18 million shares at a significant discount to yesterday's closing price. And of course, that doesn't bode well for existing shareholders. And Apple is planning its AI comeback, featuring a host of new devices, including robots. That's the exciting part, and other smart home products. That's the super boring part. Sources telling Bloomberg a tabletop robot that serves as a virtual companion is the centerpiece of the strategy, and I am very excited, Katie, to see this.
Well, let's talk about it with Mark Gurman. He broke that Apple scoop, and he joins us now, very early for him. So, Mark, we appreciate it. Let's talk a little bit about that tabletop robot. It's targeted for 2027. Will feature a lifelike version of Siri. Is this the answer to Apple's problems? Because you're not seeing too much of a reaction in the shares right now.
Yeah, I don't think it's a long-term. I think it's a hardware answer. Obviously, Apple is a hardware company at its core. That's how they make their money. So they've been looking for some hardware-centric ways to bring artificial intelligence to life. How do you get people to pay for AI, so to speak? People are not really paying a lot of money for chatbots, right? But they will pay for AI hardware. And so this robotics initiative is one. The idea is to have a virtual companion in your space, whether that's your living room, your desk, or your kitchen, basically an iPad on a robotic arm that you can talk to it, it'll talk to you. If you have conversations, if you're having a conversation with a spouse, a friend, or a roommate, and you're in the vicinity of the robot, it could jump into a conversation. It can help you get tasks done throughout your day. It could help you with work. It could help you organize calendars. It could help you with media consumption. Basically everything Siri can do today, plus conversational ability.
I mean, I already pay $20 a month for ChatGPT, and I would much rather have Siri doing that because she could be integrated into the whole ecosystem that I'm and my family are invested in, right? So for me, getting Siri up to snuff is the most important aspect of this, Mark. How close are they to doing that?
It's really a stretch. Another thing that I get into in this story are the struggles that Apple has had with Siri. Now, as we know, these voice assistants, these AI projects, at their very core are large language models, or foundation models as Apple calls them. The Siri today uses Apple foundation models. Obviously, ChatGPT, they use OpenAI foundation models. Google has their own Gemini models. They all have their own models. The models are where Apple is struggling to some extent. And so what they're doing is they're taking a deep look at replacing the Apple models with third-party models. They've talked to OpenAI. They've held very advanced conversations with Anthropic to use Claude models. My belief is the sooner that Apple abandons its models and goes with third-party models that are obviously extraordinarily proven, that's why we've been talking about AI for the last 3 years, right? The closer they'll get to releasing a product that consumers are going to be able to use, enjoy, and want to pay for. You know, most customers, they don't care how the technology works. They just want it to work. And so that's what Apple's taking a very close look at right now.
Yeah, that's a very fair point. I want to talk about the other portion of this story that you put out yesterday. That is home security. Matt mentioned that was maybe boring, but he also mentioned the ecosystem that he, and it feels like many other people, have invested in. And when it comes to the home security portion of this, this is all part of Apple trying to make that ecosystem much, much stickier.
Yeah, to your point.
Oh no, Mark.
Mark is frozen.
Come back.
I feel like Apple needs to make a good router, you know, so that we could, because whatever gear that Mark's using, I'm going to say Cisco.
It is very early on the West Coast. I don't know. Maybe the gremlins got in there. But
let me just say that I think, so I don't mean to say the home stuff is super boring, but these speaker products don't seem to have caught on with everyone yet, and certainly not the one from Apple. That will be greatly helped if they develop a better Siri. And frankly, for me, I would be happy if Siri just used ChatGPT. I don't care who provides the LLM, as long as it's her voice on the Apple products. The other really interesting thing is blood oxygen tracker coming back, and if they can crack the blood pressure issue on watches. Like, you're a Garmin gal.
I am a Garmin gal.
But I imagine if Apple would come out with a watch that tracks your blood pressure as well as your blood oxygen, you might be tempted to switch over.
Well, we have some breaking news. I think Mark is back with us. And Mark, let's talk a little bit more about blood, because news coming out this morning, Apple introducing a redesigned blood oxygen feature for some Apple Watch series out there. What does this mean for Apple overall in the entire landscape of their product universe, which we've been talking about?
So here's the story. 2 years ago, Apple was sued by a company called Masimo over patents related to blood oxygen saturation. Apple, a few years ago, launched the blood oxygen app for its Apple Watches in the US and elsewhere. The US Customs Agency made Apple pull the feature at the end of 2023 from new models sold in the US. So what Apple is doing now, because of a new US Customs ruling this week, is a workaround. The sensors will be able to capture that blood oxygen data, and you'll now be able to read that on your iPhone. So the Apple Watch blood oxygen app is still not going to work, but at least you're going to get that data. So it's a clever workaround, And it's very important. In less than 1 month from now, Apple will be introducing the new Apple Watch models, a new Series 11, new low-end SE Apple Watches, and a third-generation Apple Watch Ultra. And now they're going to be able to market those watches as including blood oxygen in the US for the first time in 2 years. So this is a huge and significant development for Apple's health efforts in the US.
Mark, when will they be able to give us blood pressure readouts from the Apple Watch?
You know, they've been working on that for some time. They've targeted 2024. They've targeted 2025. There have been some regulatory issues, patent issues, measurement issues. You know, we had a story this morning out about Whoop. If either of you use a Whoop, those are those screenless but very popular wearable devices that have been out for quite some time. They added a blood pressure tracking feature actually in May. The FDA sent them a letter a few weeks ago saying, this does not qualify. Your watch is not regulated. You can't do this. So we put out an article this morning saying Whoop is refusing to remove the feature. So there are a lot of regulatory concerns when it comes to blood pressure on the wrist, and I think Apple's still trying to figure that out. But in a little bit under a month, we'll see if they ended up getting it to market this year.
Got it. Really cool stuff. Mark, thanks so much for joining us. Bloomberg's Mark Gurman talking to us about the Apple promises. We'll see if they deliver. Coming up, New York Life's Lauren Goodwin says the rally in stocks is sustainable until policy effects show up in the economic data. Are we seeing that this morning?
That's
with
the question.
PPI.
We should ask Lauren about it next. This is Open Interest.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Alberta, Canada, and this is Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizon's Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
I don't think that cutting interest rates is going to solve these problems. All cutting interest rates are going to do is try to inject what we have with steroids, and it's just going to produce more inflation.
That was Jim Bianco of Bianco Research speaking on interest rates and inflation. And let's keep that conversation going now with New York Life Investments economist and chief market strategist Lauren Goodwin. Lauren, great to have you with us. I want you to put on your economist hat right now because we need to talk about PPI. Coming in hot at 8:30 this morning, seeming to suggest that companies are passing along higher input costs related to tariffs, import costs, that is. We didn't see that necessarily in the CPI. When do we actually start to see that show up?
Well, good morning, Katie, and hi to Matt as well. Thanks so much for having me on what is turning out to be a fascinating macro day. This PPI data, I don't see it as necessarily mistimed with the CPI data. I think we were already beginning to see the impacts of these higher producer prices in the consumer prices we saw on Tuesday. And the reason I say that is that investors have gotten used to the idea of thinking about tariff impacts related to goods. What we saw on Tuesday was stickier prices in services, especially related to areas of medical services and transportation. Those are the very areas of the economy that are impacted by the price increases that we've been seeing today in the PPI data. Trade, warehousing, really everything except for energy is seeing pretty significant cost pressures as a result of trade and tariffs. And so I think these price increases are already here. And probably most importantly, it's going to be difficult to assess what we maybe would have relied on. How does trade impact goods relative to how does the economic cycle impact things like services? We are seeing trade impact to both sides of the data here.
Lauren, I got to ask you about Scott Besson's comments yesterday on surveillance that any model shows that Fed funds rate should be lower by 150 to 175 basis points. John Authers today says this is breathtaking. He says that with current effective Fed funds rate at 4.3%, Besson is suggesting it should be around 2.6. Over the past 70 years, the rate has never been that low, with inflation as high as it currently is. We had core CPI at 3% yesterday. So apparently any model now shows the U.S. monetary policy has been misguided throughout that entire period and needs to be changed. What do you think as an economist?
Well, for starters, I have to congratulate Anne-Marie and Jonathan on that interview, which was fantastic. Such an interesting interview. And when it comes to the neutral Fed funds rate, it's a matter of hot debate among economists, really any time in the economic cycle, but times like these are so much more interesting. I think regardless of where inflation is today, we have to think of the neutral rate related to,
Lauren, let's pick it up on the other side of this break because we have the opening bell coming up. This is Bloomberg.
A cidade estava sitiada.
Nisso eu começo, eu tremia, não sabia o que fazer.
Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home there, they are suffering. And someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being a billion-dollar business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Nisho tanya ki kon ahna ta chuara panga ko ahna lepa manjang le ay kon mamanya.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
Jumpstart your trading day with 2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
Bloomberg Open Interest.
Every trading day.
Only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
자, 본장 개장되었습니다. 자, 본장
We are
개장
moments away from the start of trading on this PPI Thursday. This is Bloomberg Open Interest. I'm Matt Miller. That inflation number came in hot this morning, and that's driving markets down. It's not dramatic. Honestly, from an all-time closing high yesterday, I think we were at 64.46 or something unbelievably high on the S&P. We are down 0.33%, so not much. A little bit more than that on NASDAQ futures. The Russell taking the biggest hit, right? Because they're the most worried, those small caps, about cuts. They want to see 50 for sure, and 25 maybe a disappointment for them. You have... well, he's trying to whistle, which is cool. I hope that actually worked. This is like a Miami stock exchange kind of thing listed on the New York Stock Exchange. That's a little bit weird. I'm going to dig deeper into that. And then you have Dominati Holdings ringing the bell at the NASDAQ. It really doesn't matter because we're watching what happens to stocks when inflation finally comes in hot and a little bit of disappointment in earnings.
Yeah, especially when it comes to Deere. Deere falling after trimming its outlook as customers remain cautious. You also have those lower grain prices preventing farmers from spending. Deere, you add it all together, Deere is down 6% at the opening bell. This is disappointing because this is a company that had been building a bit of a rebound year to date, up about 22% through yesterday's close, following 2 tepid years in the stock market, but coming a little bit closer back to earth right now, Matt.
I love the word tepid. I'm going to use that for Cisco's guidance as well on AI progress. The company came out with earnings, actually some pretty strong numbers, but the outlook concerns the market. It also assumes that current tariffs remain in place through the end of 2026, and you know what it means to assume, right?
Yeah. I won't say it here, but yes.
I think you probably could, but I won't either. We're back with New York Life Investments economist and chief market strategist Lauren Goodwin. And Lauren, I'm sorry I had to cut you off into the break because the big news of the day is the PPI. The big news of the day is inflation. That looks like it's finally coming through to some extent from tariffs. Not shockingly high, but the core number was 3.7%. And Scott Besson thinks, and frankly, the market thinks as well, that rates should be lower than 3%. That's what we have overnight index futures pricing in for, towards the end of 2026. Where do you think the neutral rate is?
Right now, I believe that the neutral rate is closer to 3.5, maybe 3.75. So let's call it 75 basis points lower than it is today. And that's a function of several things. We've seen a major development in the economy related to artificial intelligence that's making the investment cycle much more capital intensive. And that's only reinforced by some of the longer term structural themes related to climate resilience, infrastructure, some of the spending that's happening globally. And so this is an environment where governments, while they're trying to spend less, are going to be forced to spend more on rehashing their economic and physical security. That's an environment where I expect the neutral rate is a little bit higher than what we're hearing from policymakers today.
Well, let's talk about how you invest around that, starting very broad. You mentioned the countries are going to have to spend more to maybe juice their economies a little bit more. Are those the countries that you want to be investing in?
We're taking a very asset allocation, broad approach when it comes to investment strategy right now, because with valuations where they are, especially in the US, I think you have to be patient, and I think that you have to be transition-oriented. And so as we think about, let's start with the international story the way you asked, there are different benefits, let's say, of the strengths of different countries in an environment like this. technology still a
일시적인
major strength of
반등이라고
the
생각이
United
되면
States and a source
충분히
of reliable earnings for
하반기만
investors
돌입
in U.S. equities. And so we
판단됩니다.
see
지켜보고 대응
the
이어나가도록
growth
하겠습니다.
equity in the U.S. as being particularly beneficial. If you look in Europe, it's a completely different story. Faster interest rate cutting cycle, benefiting cyclical sectors like financials and industrials, where those countries tend to be stronger and more entrenched. So we're actually seeing value equities performing much better there. And so taking a global approach like that, we think is prudent for not just diversifying, but also capturing the areas of the cycle that are transition-oriented the way that we think is intelligent.
You know, we had an MLive Pulse survey yesterday that showed, number one, markets love that Trump is trying to push rates down, and they don't care if he just puts a yes man in the seat, and that's how it works. And number two, markets think that the U.S. to rest of world valuation is going to continue to shrink. I think those things are related, Lauren, because this administration seems to me to want to weaken the dollar further, which may be good for our exports, but is going to be great for international stocks. Is that spot on?
It's part of the story. Dollar depreciation does help the earnings in U.S. dollar terms that come back here to the U.S. to U.S. multinationals. I think it's one of the reasons why we've seen a little bit of buoyancy in U.S. earnings this quarter or in Q2 relative to what we might have expected. But getting to the first point that you mentioned related to markets wanting the policy rate to move lower. In the near term, I expect that that's the case. We tend to see markets perform better when short-term interest rates move lower. But a big part of that story is many, many years, even decades, where Fed credibility hasn't particularly been in question. And it isn't in question yet. But if I think we saw political pressure related to policy interest rates, we may actually see long-term interest rates move higher. And the reason I say that is that if inflation expectations become de-anchored, something that hasn't been much of a problem in this cycle, but could become a problem in the case of political interference, then your things like mortgage rates, business borrowing rates actually move higher, even as the policy rate's moving lower. I don't think that's what the markets want to see.
It's interesting, that point that you're making, that if we start to see that political influence, that'll pressure long-end rates higher. I hear that as part of the logic for why some folks here like steepener trade. So let's talk about the first front of that trade, what's going on at the short end. It feels like people are just continuing to pile into shorter dated bonds, including paper, including the likes of money market funds. It just seems like that is a trend that will not be broken, Lauren.
So one of the reasons why I see this trend persisting has less to do with what's happening at the short end of the curve, because that would actually discourage investors piling into money market funds or even short duration bonds. If that is cutting, then you're potentially getting less income in those areas of the market. This is really about risk. See investors that with facing valuations in equities that are high, that might be looking to build some resilience. But where we like to be is staying invested in bonds. But there too, there's an element of short duration that makes sense. Again, less about interest rates and more about, if I think about the default horizon for a company, in the next 2 years for U.S. publicly traded credit, I am not concerned about a meaningful uptick in the default rate. I might be concerned about credit spreads widening, but when it comes to the ability of these companies to pay their debt, to pay a coupon, I'm not concerned about that, and that's an interesting income generation opportunity.
Yeah, absolutely. Even with spreads super tight right now. Lauren, we have to leave it there. Always great to speak with you. That is New York Life Investments economist and chief market strategist, Lauren Goodwin. Meanwhile, we're just about 7 minutes into this trading day, so let's get a check on this stock market. Only down about 0.2% on the S&P 500. But what's interesting here is that breadth is super bad right now. You only have 66 names in the green, well over 400 in the red right now. The companies that are trying to move higher today, you have Amazon, Apple, Netflix in the gainer seat, but very small moves overall. Take a look at the downside. This is where things really get interesting. NVIDIA lower by just 0.5%, but this company is so big that that is your biggest weight on the index. Deere, we know that they delivered some pretty disappointing earnings. You can see that reflected in the move today. Tesla, Meta, Home Depot, Tapestry, the list goes on. So this bad breath you're going to see it when we look at sectors as well. You have one lone gainer today. That is consumer discretionary. But take a look at all this red. Right down at the bottom, industrials, real estate, and materials fighting for biggest loser today. Materials currently in that position, down over 1%, Matt Miller.
All right, so some pretty decided moves to the downside coming, I will repeat, though, from an all-time high at the close yesterday. When we come back, we're going to talk about bullish, speaking of, extending gains as the crypto industry celebrates another stellar IPO and Bitcoin at $125,000. This is Open Interest.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with more episodes of our show, The Deal.
현재 매도진입권 실시간 대응 중에 있습니다. 현재 큰 손실가액이 있지만 최대한
The theme of this season, on the road.
상대를 위해서 노력해보도록 하겠습니다.
We're bringing you more behind-the-scenes conversations with the biggest names in sports, business, and culture, like Melody Hobson.
I started to study women's sports like an 11-year-old studies baseball statistics, and I got dangerous in seeing up arrows.
Susie Wolf.
When you're competing, you're not thinking about any fear or any worries of what could happen.
Josh Harris.
You can't do a good deal with a bad person.
Jay Batt.
At the end of the day, there's never been a better time to be a student athlete.
And more. Stay tuned.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacqua in Sintra, Portugal, and this is Bloomberg.
Our global headquarters in New York, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday only on Bloomberg. Context changes everything. Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Welcome back to Open Interest. Let's take a look at this stock market right now. The S&P 500 down less than 0.3%. We were down more when it came to the pre-market in reaction to that hot PPI data, but you can see that this is a market that maybe wants to go green, and we're just about at record highs. The NASDAQ 100 a little bit closer to positive territory right now, but the small caps really in the hurt locker. The Russell 2000 down about 1.3%. As Matt said at 9:30, this is an area of the market that really wants to see rate cuts. So some enthusiasm really coming out of the little guys this morning. But let's get to our top calls. Some of the analyst action in focus this morning. And first up, Bank of America upgrading Dow Chemical to neutral, saying that the current setup is clearly more favorable after recent declines. But you can see shares down a little bit this morning. Next up, Argus downgrading eBay to hold. The analyst seeing limited upside after gaining 30% since its last earnings report, down about 2%. And finally, we have Baird upgrading CVS Health to outperform, growing increasingly confident in the company's turnaround strategy. Shares up a little bit this morning, Matt.
All right, CVS up 1% this morning in a down market, so that does mean something. Let's turn to crypto right now. Bullish is still climbing after its IPO yesterday, and it almost doubled at the close. Let's discuss with Bloomberg's Bailey Lipschultz, who's been following the stock. Bailey, I think, first of all, you got to tell everyone what it is, because not everybody knows.
Not everybody knows, Matt. This is a company that operates an exchange catering to institutions, so their pitch is not to necessarily compete with the Robinhoods or the Coinbases of the world that are in retail traders' pockets through their phones, but really trying to partner up with some of the big banks, trying to push this notion that the future of finance is on the blockchain and is related to crypto. They also own CoinDesk. They have a few $1 billion worth of Bitcoin on the balance sheet, but really kind of a broader approach, trying to lean into kind of the institutionalization of cryptocurrencies and that niche.
It's a really interesting distinction because you have to imagine that the crypto retail space is pretty crowded at this point, but institutions, maybe there's some white space there still left. Talk to us a little bit about how this IPO was received. Clearly there was a one-day pop, and you can see it continuing this morning.
Yeah, Katie, there was a lot of excitement, at least from the buy side, about getting their hands on and getting allocated more shares in these newer cryptocurrency or cryptocurrency adjacent companies. We've seen kind of limitless demand for the likes of a Circle, which is up almost 5x from its IPO just a number of weeks ago. So when you look at this, over 20 times oversubscribed. Talking to the CEO yesterday, they actually kind of bragged about the fact that they allocated about 20% of the book to retail traders, using things like SoFi, Robinhood, and other kind of wealth managers, if you will, kind of like pointing to their underwriters. But this is definitely an area that investors right now, in a market that seemingly is only going up into the right. I know you mentioned we're a bit off those all-time highs, but with Bitcoin rallying, investors want their hands on some of these assets, and we're getting ready for what could continue to be a hot summer or hot start of the fall post-Labor Day, with more crypto companies, crypto-adjacent companies filing and launching those IPO processes.
It seems to be the right time. I mean, yesterday, two of the president's children were at the NASDAQ ringing the bell for some crypto-related issue. And, you know, normally when the president's family tries to make money with other ventures, they hide it. Now they're coming out in the open. We've got this legislation that's come through for stable coins. As you mentioned, Bitcoin at an all-time high. Is this company just going to be an exchange? Do they make money on, I know they own CoinDesk, or is it going to be a Bitcoin treasury deal like Michael Saylor's strategy?
The company CEO said, for all intents and purposes, they, by definition, are a Bitcoin treasury company, but they have no intention to sell shares, sell convertible debt, a la Michael Saylor's MicroStrategy, now known as Strategy. They want to really be a part of the institutionalization of Bitcoin. So they are talking about, you know, having these indexes that maybe can lump together the top 10, 50, 100 tokens and being kind of an exchange in that, a la MSCI, kind of trying to partner with some of those more traditional financial institutions and trying to bring it more broad as it relates to their exchange business. Talking with the CEO, they didn't rule out the fact that they now, as a public company, will have more currency, whether that's through selling shares or selling debt instruments, to be accretive in terms of striking M&A packs. But they definitely right now, according to the CEO, want to focus on organic growth, and they see a lot of blank space going forward. But as you mentioned, a number of companies in the crypto space leaning into that trade, leaning into the enthusiasm around it. And it does seem like, at least as it relates to convertible story, investors can't get enough of these convertible instruments and these preferred shares coming from Michael Saylor's Strategy and other companies kind of Me Too, Me Threeing that.
All right, Bailey, thanks very much. Bailey Lipschultz talking to us about the IPO of Bullish and really the rise of crypto behind it. Coming up, we're going to talk about a number of heavy hitters in the semiconductor space. They report after the bell, and we'll take a look ahead with Cantor Fitzgerald's CJ Muse. This is Open Interest.
bring you up-to-the-minute geopolitical news wherever and whenever it happens. I'm Anne-Marie Hordern in Buenos Aires, Argentina, and this is Bloomberg.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question.
Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
This is Bloomberg Open Interest. I'm Matt Miller. Let's get a check on what happened to stocks after the PPI number came out hot. You do see a bit of a drop here. It's not really that sizable. We're still at 64.56 on the S&P after closing at a record high yesterday. The NASDAQ right now is unchanged. The Russell 2000, the small caps and the mid caps faring the worst because they're the ones that need rate cuts the most. But we're still pricing in almost one full cut in September if you look at WIRP Go on the terminal. NVIDIA is up 0.25%. We're going to talk about chips with CJ Muse in just a second. And Apple, after its news yesterday, although that did come out before the opening bell, also getting a bit of a boost here in a down market. You had disappointment with JD.com. Deere, a bigger disappointment, down almost 7%. Cisco had a tepid outlook, and the shares are tepid today. And then AMAT right now down 1%. Let's talk about, Katie, some chip makers after the bell.
Yeah, let's do that. And we have a great guest to do that with. Cantor Fitzgerald, semiconductor analyst, joins us now, CJ Muse. And CJ, let's start with Applied Materials. That is obviously a big company coming after the bell. Interesting to hear a little bit about the numbers themselves. Also, they recently announced a $200 million investment in Arizona. What's your expectation for what we hear from the executives on the call?
Yeah, good morning, Katie. Thank you for having me. I think for Applied Materials, they'll echo much of what we heard from their peers, Lam Research, KLA. So I'm looking for a small beat and raise. And I think that is widely expected by the market. I think China will obviously be a core area of strength into the October quarter guide. And I think the real positive catalyst to look for are signs of a pickup in their Samsung business, which I think will absolutely occur. But, you know, I think visibility into that might be a bit early now. So, you know, I think that tonight's report will be, you know, in line with kind of buy side expectations, which, you know, will be good enough given the current valuation.
CJ, we saw, I know this isn't necessarily chips, but we saw kind of a tepid outlook from Cisco in terms of the, you know, AI investment. And I always think back to how much they spent to lay fiber down in the .com bubble and then burst. Do you see any of that, you know, overinvestment, overhype in AI right now leading to problems down the road? Or are we going to see a return on investment from this stuff?
I mean, there's a lot to unpack there. You know, I'd say that, you know, some of their peers like Lumentum put up big numbers. And so I think it might be just timing wise from a Cisco perspective. And then if you take a big picture view on AI, you know, I think you're seeing, you know, real signs of positive returns on investments, whether, you know, OpenAI and kind of the revenues that they're starting to talk about, as well as, you know, the big hyperscalers and even kind of sovereigns, enterprise, and you know, some of the folks who are looking at utilizing digital twins, Omniverse, as they build out factories. So I think it's there. And I would also say that I think we're still early, you know, in the build plan, right? So when we look to NVIDIA reporting next week, you know, they've told us that from wafer in to rack out takes 12 months. And so between that and their new product ramp late next year with Rubin, they have great visibility. And I think that, what we're going to learn in the next kind of 3 months is that this year is going to be a tremendous year for data center growth, and next year will only be stronger.
Well, let's talk a little bit more directly about NVIDIA here, because I feel like that's looming in the back of every conversation you can have about chips right now. Definitely a shocker at the start of this week, CJ, to see that the Trump administration plans to take 15% of the revenue that NVIDIA makes, and AMD for that matter, when it comes to Chinese chip sales. You didn't see too much of a reaction either way when it came to NVIDIA shares. I'm wondering how you are factoring this into how you're thinking about the company, because we know that NVIDIA, obviously, really, China is a very important market.
Yeah, no, so a lot to unpack there as well. So, I think number one, just first order effect, China's completely de-risked from the model, and therefore, any business there is just upside. I think the second order is that, half the world's AI engineers are in China. And I think the recent pivot in terms of re-granting licenses for the H20 and for AMD's product is a very positive sign, something I absolutely agree with, in that we want the world to standardize on a U.S. platform. And I think the alternative in terms of standardizing to Huawei is not something that we want. In terms of potentially paying an export duty of 15%, I'll let other legal minds discuss whether that is truly something that we can do. But more importantly, I think the concern I have is the net impact on China government and their willingness to allow their customers to purchase.
Absolutely, CJ. That's a great point. Running up against a hard break, so we got to say goodbye. Really appreciate your time. CJ Muse there of Cantor Fitzgerald. This is Bloomberg.
Let me break down our CapEx into the buckets that we spend. Big part of it is to expand our reach of fiber. You cannot wait until there is certainty to build that. These have long lead times that require you to have conviction about where demand is going. Another bucket is, as more people are on our network, we also have to add more coverage and capacity. It's almost like a variable expense. Third, we are modernizing our wireless network right now. Through the investments we're making, we are driving down our unit costs over time and providing more capacity to serve the demand that we think is coming.
Do you have less confidence in that 3-year plan now than when you first came out with it, given that some people are having trouble deciding how things are going to look in the next 3 days?
No, I really don't. I look at the nature of our business. It doesn't matter the economic cycle. This is a critical goods or service, and we have every confidence demand for it will remain. Will it be harder in a more challenged economic environment if that ends up being the case? Of course, but remember, we are investing at record levels. Slight moderations of that would allow us to deliver a lot more incremental cash to the bottom line. So I have every confidence we're going to be able to deliver our guidance.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Michael McKee in Victor, Idaho, and this is Bloomberg.
CBS News on the Hour, sponsored by Progressive Insurance.
I'm Deborah Rodriguez. The world watches as President Trump and Russia's Vladimir Putin gear up for their summit in Alaska tomorrow. Ukraine's Volodymyr Zelensky, who's not invited, shook hands with British Prime Minister Keir Starmer, and the two leaders hugged before a meeting in London today. As for the formatics in Anchorage, CBS's Nancy Cordes is there.
We learned this morning that Putin plans to join President Trump for a joint news conference after the meetings wrap up here tomorrow. That would be a rare event. And it's not that easy, frankly, for Putin to travel abroad right now at all, given the war crimes allegations he's facing and the sanctions that are crippling his country.
The president is facing more pushback back home for sending federal troops into Washington, D.C.
Why are you here? You're trying to arrest innocent people? What's your purpose? What's your goal? What's the motive? Why won't you show your face? Like you look yourself in the mirror and think I did a good job today?
The FBI is getting tougher with protesters who cite data showing crime's gone down in the district. Officials say they've made 45 arrests so far for offenses ranging from assaulting a federal officer to illegal firearms possession and drug trafficking. Tropical storm Erin is getting stronger as it moves closer to the East Coast. Meteorologist Craig Allen's keeping an eye out.
There is good consensus that the storm will turn northwest and then north and run through the area between the east coast of the United States and Bermuda.
Craig says it could become a major hurricane in the next day or two. He says landfall in the States is not likely. The American Meteorological Society has just released its annual State of Climate update. CBS's Michael Toscano.
The report shows 2024 shattered records for high greenhouse gas levels, global high temperatures, higher sea levels, and higher ocean heat. Ellen Seals, American Meteorological Society president-elect, says the numbers showing a crisis have been thoroughly validated.
Nearly 60 countries, data assessed by over 580 climatologists, meteorologists, that the trends of a warming planet on almost every measure are continuing.
Sue and Jim Dolan were in their townhouse in Gloucester, Massachusetts, when they heard a loud noise.
We just heard this bam, this pow, and I jumped up and I said, what the heck was that?
Sue came to her own conclusion.
There's no way a rock could have splashed up or come from anywhere else, so it must be a meteor.
A Boston geophysicist thinks so, too. The couple found strange-looking rocks that smelled like sulfur on their deck. They will undergo further testing. Dow down 170 points. This is CBS News. New research suggests human evolution didn't take place on a linear timeline.
Teeth fossils from 2.8 million years ago found in Ethiopia suggest two of our ancestors lived alongside each other. Some were from the genus we modern humans belong to, Homo. Others were from the group Australopithecus, which the famous Lucy fossil came from. Arizona State University professor Kay Reed.
It shows that evolution doesn't go this species, then this species, then this species. And I think that's very important.
Researchers now want to learn whether the different groups shared resources or fought, leading to one's extinction. Michael Wallace, CBS News.
A man arrested for hurling a hoagie at a federal law enforcement agent in Washington, D.C. is now facing more serious consequences. U.S. Attorney Jeanine Pirro.
He took a Subway sandwich about this big and took it and threw it at the officer. He thought it was funny. Well, he doesn't think it's funny today because we charged him with a felony, assault on a police officer.
Deborah Rodriguez, CBS News.
This is Bloomberg Intelligence with Paul Sweeney.
The real outperformance has been the U.S. corporate high yield. These are two big-time blue-chip companies. One person's chaos is another person's animal spirits.
Breaking market headlines and corporate news from across the globe.
Our view is that the economy is slowing down.
There is the possibility of a death spiral.
Both quantum computing and AI are going to power the future.
People are just buying everything with tech.
Bloomberg Intelligence with Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
Thursday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We are streaming live as well on YouTube. So head over to youtube.com, search Bloomberg Podcast Live or Radio Live. You'll find it to us. Lisa Mateo sitting in with me today on Paul Sweeney. We got a lot happening on the economic calendar. Some inflation data came out as well, so we'll get to all that. Ender Curran, he is Bloomberg Global Economy Reporter. He'll break down all that inflation data for us coming up just in a couple of moments. Brian Jacobson, chief economist at Annex Wealth Management, will get his market call. What's he discounting here in terms of potential Fed cuts going forward this year? Then Matt Sheltonhelm, he's a Bloomberg Intelligence media litigation analyst. Talk to him about those export tariffs on NVIDIA, on AMD. Are they even legal? And would anybody dare sue the U.S. government for that? Woo Jin Ho, Bloomberg Intelligence senior tech analyst. He's going to recap Cisco numbers. I thought they were pretty good. Stock a little bit off here today. We'll break it down with him. So a lot coming up on the company front, on the eco front, and on global trade, global geopolitics as well. But let's kick it all off here with Charlie Pellet and the Bloomberg Business Review.
Thank you very much, Paul Sweeney. Right now, Cisco shares, they are down now by just about 0.4%. This Bloomberg Business Flash brought to you by Interactive Brokers. Trade over 10,000 stocks and ETFs, U.S. equity index options, U.S. treasuries, and more on your timetable. Learn more at ibkr.com/around the clock. Equities lower across the board right now. We have got the Dow, the S&P, NASDAQ all declining. PPI Thursday with the S&P right now down 764.59, a drop of 0.1%. Dow down 77, decline there of 0.2%. NASDAQ, the composite index, down 0.1%. The NASDAQ 100 index down 0.1%. Small cap shares hit hard. We've got the Russell 2000 index of small cap stocks down now by 1.2%. Interestingly, on a down day for the rest of the market, our Mag 7 index is pushing higher. Right now, that index up by about 0.2%. NVIDIA, by the way, up 0.3%. 10-year at 4.25%, but the 2-year 3.71%. Gold down 0.6%, 33.35 the ounce. And West Texas Intermediate crude up 1.3%, 63.45 an ounce. Cannot ignore Bitcoin, lower now by 3.8%, $118,200 on Bitcoin. As for the market backdrop, Cameron Dawson is Chief Investment Officer at New Edge Wealth. She was interviewed this morning on surveillance.
This market continues to just power on, and we think it's driven by two key things. The first one being that liquidity remains very abundant. And the second thing is that earnings estimates are going up. Risk assets love it when earnings estimates and growth estimates are going up.
Cam Dawson of New Edge Wealth interviewed on surveillance. You can hear more of that conversation on the Surveillance podcast, and you can download it wherever you get your podcasts. Cisco Systems down 0.2% right now, lower after the maker of networking equipment reported earnings that were largely in line with expectations. The company did give a cautious forecast for the current fiscal year, and we're going to hear a whole lot more about that when we speak with Cisco CEO Chuck Robbins. We'll have that for you live at 11 a.m. Wall Street time right right here on Bloomberg Intelligence. Bottom line, stocks lower. The Dow, the S&P, NASDAQ, all in the red. S&P down 0.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie Pelleton, thank you so much. We appreciate that. The inflation news front and center here for the markets here, as Charlie was just reporting. A little bit of red on the screen here. But let's take a look at some of the stocks that are on the move today. I'm Paul Sweeney alongside Lisa Mateo. We're joined by Bloomberg's Red Brown. Red, what are you looking at today?
Yeah, first on my radar today is Tapestry. They are the worst performing stock in the S&P 500 right now. That's the owner of Coach and Kate Spade. Shares are down around 17%, and that's the steepest intraday drop since August of 2023. So that's really coming off the back of company issuing a new annual earnings per share forecast that came in below the high end. Came below what consensus was expecting. That new outlook includes 60 cents per share impact from tariffs, probably a little bit more than what Wall Street was expecting. So yeah, company has had a great year, up around 70%. Prior to today, but this kind of backs it down below the 50% range now for the year-to-date returns.
Man, it looks like Kate Spade was not doing well for them at all. Okay, let's go to the world's biggest farm machinery maker, Deere.
Yes, Deere, another one in the red this morning, another one due to the lowered full-year outlook for profits, falling around 6% right now at the moment, was down around 8%, so pairing a little bit of the losses. It's its worst intraday move since earlier this year, since April, so around the time when we first got the tariffs announced. And that is still kind of a lingering issue for the company, but this time it's just impacting the way that farmers are buying machinery. There's just this kind of lower sentiment among farmers right now that is having them delay and be cautious around some of these bigger expenses for them. Add on that some of the pricing that's falling for grain. Livestock prices are down, and that's really weighing on the demand for some of Deere's bigger equipment at the moment.
And that lines with what we heard yesterday on this program. We spoke to Brian Hefty, who is a farmer in South Dakota, and we're talking to him just about the state of the farmer, and he says it's tough out there because crop prices are down, commodity prices are down, but his costs are rising. Fertilizer, labor costs, even the interest rates hurt because they're all indebted. So tough times out there for the American farmer. Hopefully commodity prices will turn around here. How about Cisco?
Yeah, Cisco, the big one for today. It is kind of flat at the moment. Shares were down around 4% at the open. The move comes after it offered its new fiscal year revenue guidance, looking around $60 billion at the high end for the full year. And some analysts were looking around for $61 billion. I think with any company that has mentioned that it will have some AI exposure, that becomes a little bit increased expectations, higher optimism. So this may be just disappointed slightly. Again, shares are kind of flat at the moment, so we'll see how this plays out. It did report that they had $1 billion in sales related to AI for last year. Maybe that's not enough for some people to kind of jump into the stock at the moment. Couple that with a little bit of concerns around how competitive this space is becoming with Broadcom, Hewlett-Packard, also kind of taking aim at the same markets, and maybe that has kind of dampened some of the optimism around Cisco.
All right, Red, great stuff. Always appreciate getting your thoughts here on the earnings front. Red Brown, earnings reporter for Bloomberg News, joining us here in our Bloomberg Interactive Broker Studio. And for more conversations like this, subscribe to our new Stock Movers Reports. Listen for 5-minute radio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcast, Spotify, or anywhere you listen. PPI data today came in much hotter than expected. Initial jobless claims came in right in line with expected. But, of course, it's all about inflation. It's all about how this inflation may impact what this Federal Reserve does. Let's check in with Enda Curran. He's a Bloomberg Global Economy reporter. And we've had a little bit of time to digest some of this PPI data. On a headline basis, it looks like producer prices came in much higher than expected. What's happening?
It was the highest, 0.9% on month, which is the biggest increase in 3 years, as you're saying there, Paul. So on a headline basis, that's a big number. Under the bonnet, it's been driven by services. You have financial services margins pushing up that figure, probably reflecting the stock market boom. And on the other side, there's retail and wholesale margins. And this is where things get into the weeds pretty quickly. there are some views that perhaps that side of things is reflecting rising cost pressures linked to tariffs. Maybe those tariffs are starting to be passed on. So there's a little bit of something for everyone in this PPI reading, but I think the overall takeaway is that quite apart from yes on a headline basis, it's much stronger than expected. It also kind of leans into the idea that we don't yet know exactly how this tariff story is going to impact inflation. I've seen some economists say the Fed is correct to be holding onto this wait and see mode when you see a data set like this, because we don't yet have complete clarity. At the very least, we know there are price pressures from tariffs, no doubt about it. Economists are warning more is to come, more is expected over the months ahead. But it's very much almost at this stage, take it 1 month at a time to try and get a clearer handle on this.
Yeah, and then can you break down that a little bit more? What about the extent to which companies can pass that burden from tariffs onto consumers?
Yeah, well, it's obviously Lisa, it depends on the product, and it depends on their company margins and the sector. Broadly speaking, there had been, there are two camps on this. There's one camp that says, look, companies can absorb this in their margins. Either they're a seller on the other side of this trade can absorb some of it, and the company can absorb some of it. Margins have fattened, since the pandemic years due to inflation and everything else. There's that camp. And then there's a camp that's saying, no, companies can only absorb this for so long, and then they will have to start passing it along to the end customers. And I think that's probably where we feel like we are in the debate at the moment, that some of this is starting to leak through. It's a question now of how much of it is passed on. And remember this argument that with inventories having been stocked up earlier in the year, as those inventories come down, companies have to restock at higher prices and pass on those costs, pass on those goods at a higher cost to consumers. So the thinking is this tariff inflation will surface in the months ahead. Now the White House, of course, pushes back strongly on that. They don't see any tariff inflation in these figures. But I think if those sitting in the middle of this debate say it's going to take a few more months yet to get clarity on the extent of how tariffs are affecting overall prices.
Yeah, so the question is, what percentage of these tariffs is being, eaten by companies, by exporters even, by importers, and then by consumers. And that's kind of where the analysis seems to be now. And of course, Goldman Sachs came out a couple of days ago and said, it's not too bad now for the consumer, but they think throughout the year and into next year, it's going to get increasingly difficult for consumers not to be paying higher prices. The president called out that report as he did not care for that report, did not support that. And we even spoke to Anna Wong from Bloomberg Economics just a moment ago, and she says she does not believe that it will be rising too much more for consumers. So we'll have to see how that plays out. And we also had initial jobless claims. I don't know, kind of came right in line with the expectations, it seems like. So it seems like the labor market's kind of hanging in there. Is that your take?
In line with expectations. I mean, I don't need to relitigate the debate now, the contentious debate about the state of labour market data. But again, there are two camps in this. There are those who say, look, the labour data is clearly softening, as we saw with the revisions for the previous month in the non-farm payrolls, indicating a slowing economy. And then you have those saying, this could just reflect the immigration crackdown story, slowing population growth, slowing number of people entering the workforce, a slower number of jobs being added, and they point to the fact that companies aren't necessarily letting off staff in a wholesale way, at least in terms of mass layoffs. So again, complicated debate. It's going to take a few more months to get a cleaner read on the jobs market.
And all this data, of course, playing into interest rates. So what kind of information in the last 20 seconds or so will the Fed cut rates?
Well, the market seems to be keen that they'll go 25 in September. We do have Fed Chairman Jerome Powell speaking next week at Jackson Hole. That'll be a big one to watch.
And thanks so much. Appreciate it. And current global economy reporter for Bloomberg News down there in D.C. Coming up, we're going to check in with Brian Jacobson, chief economist at Annex Wealth Management, get his thoughts on this eco data. Matt Cheltenham, Bloomberg Intelligence litigation dude. These export taxes for AMD and NVIDIA, can you do that?
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 10:21 on Wall Street. We do check markets all day long here at Bloomberg. Most stocks lower. The NASDAQ 100 index back in the green. Barely. This Bloomberg Business Flash brought to you by Oracle. Attention growing businesses. Oracle's offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitments, see if your company qualifies at oracle.com/Bloomberg. A stronger than anticipated PPI reading this morning, driving stocks down, bond yields higher, traders trimming bets that the Fed will cut rates next month. Here's where we stand. S&P down 9 now at 64.57. Little change from a record, down 0.1%. The Dow is down 132, a decline there of 3. NASDAQ Composite Index down 19, drop there of 0.1%. Small cap shares hit hard today. The Russell 2000 down by 1.4%. The Bloomberg Mag 7 Index higher by 0.2%. 10-year at 4.26% with the 2-year 3.71%. Gold 33.43 the ounce, down by 0.4%. West Texas Intermediate crude up 1.3%, 63.46 for a barrel of WTI. Peloton Interactive planning its biggest product upgrades in years, including refreshed hardware, new accessories, and AI to introduce as early as October. Now, sources tell Bloomberg the company will introduce an updated bike, treadmill, new branded peripherals, an integrated AI platform, and major software features. Peloton shares down now by just about 1.7%. Coming up, 11 o'clock Wall Street time, we sit down with the CEO of Cisco. Cisco, after earnings, now up by about 0.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. Lisa Mateo and Paul Sweeney, we're with you live here in our Bloomberg Interactive Broker studio in New York City. We're streaming live on YouTube as well. We had CPI on Tuesday, PPI today. So whether we like it or not, we're all getting smarter about this whole inflation thing. And I think the question we're all trying to answer, maybe we'll get it with some more data going forward, is who's actually paying these higher tariffs? Who's paying for these things? Brian Jacobson joins us here, chief economist at Annex Wealth Management in Wisconsin. Hey, Brian, how do you kind of parse out, given the CPI and the PPI data we got just this week, how do you think these tariffs are being allocated between the various stages of the consumer cycle?
Yeah, that's a great question. And we're only getting really, I guess, an imperfect glimpse of that right now, just because of the detail of the data. It's really great, I think, during earnings season to hear directly from the companies about what's going on, and you can dig into their financials. But what it really looks like so far is that even within businesses that are absorbing the costs of the tariffs, that it depends on where you are in that value chain. When I was looking at the PPI numbers this morning, right, that final demand number, which is the big headline one, it was a big increase, but most of that seemed to be driven by an increase in margins from wholesalers and retailers, which is a little counterintuitive. But
so does that mean, Brian, that they're, I don't see how their margins could go up if the prices they're paying go up? Does that mean that they're raising prices to consumers?
Well, I think that really what it's telling us is that they're pushing the cost back along the value chain towards the suppliers and using this as an excuse perhaps to hike prices at least a little bit to final consumers. And so if you think about the pressure that they can apply, a company like Walmart, we know that they can lean on their suppliers. They have some pricing power. They have talked about passing on some of the cost increases. If you've gone there, you know that like produce prices, those have gone up, which can go up for a variety of reasons besides just tariffs, of course. But it does kind of seem like the closer businesses are to the final consumer, they can use tariffs as a cover for hiking prices at least a little bit, but then they can use their clout to push on their suppliers to maybe get them to eat more of the cost. And I think that's maybe some of the dynamic we're seeing here.
Well, you mentioned details. Okay, so we have retail sales tomorrow. So what details are you going to be looking for there? I mean, is it Amazon Prime Days? Are they going to have an impact? What will you be checking out for?
Well, yeah, I'm going to see whether or not I had an impact on those retail sales.
Yes,
from Amazon Prime Day.
exactly. Myself too.
It was nice to have a few extra days to log in and get a few deals. And I think that will affect it, right? We know that the government tries to seasonally adjust these. And if Amazon suddenly decides they're going to extend Prime Day and Target and Walmart are going to have their own specials, that will probably distort those numbers. And so it could actually be artificially high just because of these seasonal adjustment factors. But what are the specific types of items that people are really trying to stock up on? One of the things that I noticed during Liberation Day that month was that we had a decline in sales at food service and drinking establishment places. Almost like people decided that they needed to reallocate their budget to stock up on more durable goods. And so as a result, they didn't go to the bar or to the restaurants as much. How are they behaving now? And based on some of the reporting that Bloomberg has done with all the earnings releases, it looks like consumers are pulling back a little bit on food service, eating out, and still trying to maintain some of these non-durable good purchases. So I think that's some of the dynamic I'm going to be looking at under the hood there. I'm not that optimistic about the number, except for the seasonal adjustment factors in Amazon Prime Day, which is probably going to make it be one of these numbers that is almost like an outlier in terms of the upside surprise here.
Brian, I'm sure you're aware that Goldman Sachs came out a few days ago with their report saying that they believe while the consumers aren't getting hurt that bad now by tariffs, that rate that they will end up eating, if you will increase throughout time over the remainder of this year. And of course, President Trump pushed back on that. How do you think about that?
I think that they can both be right. It's one of those where it depends on the product, right? We know that with some items, it's all about supply and demand, right? About the elasticity of supply and demand. And we know that when businesses have pricing power and consumers, they really demand these items, that they can pass on more of the price increase to them. And so we've seen that with some items. I estimated at like maybe an 80-20 split where the consumer pays 80% and the business eats 20%. But then there's other items where it's basically the opposite, where maybe the consumer gets 20% and the business eats 80%. But the thing is, it all results in a dead weight loss to society as a whole. When you have a wedge between what the consumer pays and what the producer is sourcing it at, right? This tax, any tax, creates a dead weight loss. And I think that's really what we're seeing is the growth effect from the dead weight loss at first, and the price effect, it is going to be very product specific.
All right, Brian Jacobson, thank you so much. Chief Economist at Annex Wealth Management, talking about the markets and so much more. All right, we shift from the markets to tech. And some have suggested that President Trump's novel export arrangement with NVIDIA AMD paying the U.S. government 15% of revenue from some chip sales in China, well, it could violate federal law. And if it did, what would happen? That is the question of the latest article on the terminal. You have to check it out. Matthew Shuttleman, he's Bloomberg Intelligence media litigation analyst. Matthew, first question right off the bat is, does it?
Yeah, does it violate the law? It's an interesting question that I don't think people had thought about for a while, but there is this clause in the 2018 Export Control Reform Act that says that no fees can be charged for the processing of these export control licenses. There's also a clause in the U.S. Constitution, going way back, that says that taxes cannot be levied against articles exported from U.S. states. you put those two things together, and you start to see, some serious questions that could be raised about whether imposing a 15% effective tax on exports is actually legal or not. Now, no lawsuits have been filed yet, and there would be some hurdles to filing them, but I think there is a very plausible legal case that could be made.
If a lawsuit were to be filed, who would do it? What entity would do that?
Yeah, so that's a great question. I mean, if you're in NVIDIA or AMD, I don't think you want to run right into court after you negotiated a deal with President Trump and challenge it there. And so I think you would see a potential lawsuit come from a trade association that's concerned about the potential for this setting a precedent that goes forward after these particular deals. You could also envision shareholders of the companies who are upset about the company agreeing to something that might be inconsistent with federal law, potentially filing lawsuits as well.
And I like we keep saying if this were to happen, yes. What would be the timeline for something like this?
Yeah, so it's hard to say exactly. We haven't seen the final agreements here between NVIDIA and AMD, and just a couple days ago, the White House said that the Commerce Department was still exploring the legality of how to do this, probably because they're looking at this precise statute we're talking about here. So timing's very much in flux for all of this, and it's going to be a question of whether we see this sort of approach going forward. But lawsuits could be filed any time. They would be filed in federal district courts. Probably you would seek injunctions trying to stop the imposition of these taxes, and it could be litigated up through the court system from there.
But, I mean, to be clear, these were agreed to by the companies and the government. I guess the companies, Matt, the companies are just saying, hey, this is just the cost to do business in this country with this administration. Is that kind of what you think they were thinking?
That's exactly it. And I think there would be hurdles to these companies suing for that reason. I suspect these agreements are going to include waivers of their particular right to sue. And it's better to access these markets than to not access the markets at all, even if it comes at a 15% price tag.
Now that NVIDIA, this whole deal, it started to fuel some concern that the government could charge companies for a range of business activities with other countries. I mean, is that a viable concern? And then what questions could that bring up in the meantime?
Yeah, that is really, I think, the big question here. Is this a one-off, or is this how this administration is going to operate for all exports going forward? And if it's the latter, I think that raises much bigger concerns. Usually, you would look to Congress to set the standards here, and there is, as I said, a statute that says no fees for the processing of these export licenses. And so in a typical world, you would see Congress, explore maybe setting the legality of something like this. But right now, we have a law from 7 years ago that may or may not be challenged.
All right, Matt, thanks so much for joining us. You're the expert on this stuff, and we appreciate getting a few minutes of your time. Matt Cheltenham, media litigation analyst, Bloomberg Intelligence, who does not carry cash.
No, how do you know that?
A few years ago, I got him up here to see some clients in New York, and we stopped. We had time to kill, so we said, let's go get a bottle of water. So we go in. I go to the little dude on the corner, $1 for a bottle of water. Matt's got no cash.
Okay, see,
He's got no cash.
I relate to Matt because I carry no cash either.
Yeah, so these young people are killing me. So he was going to go into like a Starbucks and pay $5 for a bottle because you could charge. I said, no, I'll front you for the money. There you go. Matt Cheltenham, he does it all for us on the litigation side. We appreciate getting some of his time there. So anyway, but that's just how the kids roll. Looking at the markets here, still a little bit of red and green on the screen. We got NASDAQ actually turning a little bit positive there. So that's good. Woo Jun Ho's coming up. He's a Bloomberg Intelligence senior technology analyst. He's going to help us recap those Cisco earnings here. So we get a look at that on big tech, and is the AI story still intact? I'm looking at Bitcoin, a little bit off here today, off about 3% here. I'll have to report back to Tom Keene on that. 119,000 for the cryptocurrency. And for Alex Steele, I quote WTI crude oil, it's up about 1%, just still above $63 per ounce. And the dollar index is a little bit weaker. This is Bloomberg. Good morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 10:40 on Wall Street. We do check markets all day long here at Bloomberg. S&P 500 index back in the green. This Bloomberg Business Flash is brought to you by Oracle. Attention growing businesses. Oracle's offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure for new U.S. customers with minimum financial commitment. See if your company qualifies at oracle.com/Bloomberg. S&P 500 index higher, little change, looking at a record 64.67 right now on that index. The Dow, however, does remain lower, down 0.2%, lower by 82 points. We've got the NASDAQ Composite Index up 22, on track for a record close, up by about 0.1%. The Mag 7 Index higher by 0.5%. The Russell 2000 index, though, of small cap shares is lower, down 1.3%. 10-year, 4.26%, with the 2-year currently yielding 3.72%. Gold is down 0.4%, 33.43 the ounce. And West Texas Intermediate crude up 0.9%, 63.20 for a barrel of WTI. Next up for Wall Street, we did get PPI this morning, hotter than expected, but new numbers tomorrow morning on retail sales. Brian Jacobson is chief economist at Annex Wealth Management. Moments ago, right here on Bloomberg Intelligence, he told us look out for the Amazon effect on tomorrow morning's numbers.
We know that the government tries to seasonally adjust these, and if Amazon suddenly decides they're going to extend Prime Day and Target and Walmart are going to have their own specials, that will probably distort those numbers. And so it could actually be artificially high just because of these seasonal adjustment factors.
Brian Jacobson of Annex Wealth Management interviewed moments ago right here on Bloomberg Intelligence. Amazon shares, they're advancing now by 2%. Again, recapping, S&P 500 index now swinging between gains and losses, down now by 1 point, little changed. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, thank you, Charlie. We was talking about the markets. Let's go to earnings. We want to talk about Cisco Systems. So you had sales from its AI projects, right? They're beginning to pick up, But the problem was that its forecast for the current fiscal year, well, it was a little bit on the conservative side, and that investors didn't like that very much. Let's find out why. So let's go to Woo Jin Ho. He's Bloomberg Intelligence Senior Technology Analyst, joining us from Princeton. Woo Jin, thanks for joining us. I got to ask you right off the bat, what did investors, did they just think that they should be benefiting more from AI spending? What was the issue?
Yeah, I think a couple of things. AI was one of them, but also there's this big product refresh cycle that investors were hoping would drive better growth. But at the end of the day, the guidance was a reminder that they are still tied to IT spending. And I viewed it as more as prudent conservatism because they don't know what's happening on the second half of the year, given where we are, where we have little visibility in terms of rates as well as tariffs still.
So the company recognized about $1 billion in AI revenue in fiscal 2025. And I guess AI infrastructure orders from large cloud providers were over $800 million in the quarter. So where do we think these numbers can go?
Yeah, look, Paul, they forecasted $1 billion in orders for fiscal 25. They doubled that in fiscal 26, recognized $1 billion of it this year. I wouldn't be surprised if AI revenues grow at least another 50% from here. And they're penetrating multiple pockets, right? Not only into the cloud, but if you think about it longer term, when enterprise adoption really starts kicking in, there is going to be a growth driver. So we have to see where it'll be in 26 and 27 when enterprise grows. But the partnership with NVIDIA should be beneficial to them longer term.
Well, is the AI sector, is it just too competitive? I mean, who are some of their peers? How are they doing against them?
Well, if we think about it, well, they have multiple, they're in AI in multiple vectors, right? So from a networking space, Arista is one of the bigger competitors, as well as a smaller company called Celestica. They're also very, very big on optical components, and they're coming up against companies like Marvell, as well as Ciena. And they also provide AI servers, and think about Dell and HPE. So look, is it competitive? Yes, but they're one of the few American vendors that can actually supply components all the way to the system hardware.
Wooj, what are companies like Cisco and Dell and some of the other big American companies throughout the tech stack chain, what are they saying just about the environment in terms of demand from their customers? Are they sensing waning demand or wavering demand just to see how some of these, I don't know, tariffs or other economic policies may work out?
Sure. Paul, Cisco is one of the first hardware bellwethers that came out. I will tell you from the numbers that I've seen on the companies that have reported, the IT spending environment has actually been more resilient than I had thought. I went into the quarter with my mid-year outlook as being a little bit cautious and negative. And quite frankly, the results have come in better than I had anticipated. The outlooks have come in better than I anticipated. But the fact of the matter is, I don't know what's going to happen past December. And I think Cisco's guidance reflect that. We'll have a better sense in a couple of weeks from now when companies like Dell and then HPE after Labor Day when they report.
Did they talk about their guidance at all about the impacts? We mentioned tariffs quickly, but did the impact of tariffs? If so, did they intend how do they intend to lessen that impact from tariffs?
Cisco has been probably one of the better companies in terms of managing expectations of tariffs, as well as maneuvering the supply chain with the tariff. So in terms of managing expectations, they embedded tariff impact in their guidance. And because tariffs came in a little bit lower than we had anticipated, that actually helped EPS just a little bit. Going forward, all of the guidance includes the tariff impact. Now, the one thing I will add, we're still waiting for the semiconductor rulings as it relates to Section 232. We'll see where it stands. If we do have a negative ruling there, that could not only affect Cisco's guidance and margins, but also the rest of the electronic space.
So I'm looking at the stock, Wooj, Cisco that is, and it's up about 18% year to date, so certainly beating the market. And I look at the A&R function, I see 16 buys, 10 holds, and 1 sell. So kind of a little bit of a split out there on the street in terms of expectations. What do you think the bull case is for Cisco from these levels?
Yeah, the bull case is fairly easy, Paul. faster than 5% to 6% growth, driven by the product refresh cycle, security as a main driver for Cisco. That's going to raise multiples, and if it's going to raise multiples, it's going to you have a higher stock from where it is today.
So Chuck Robbins, Cisco CEO, is going to be speaking with BTV anchors Ed Ludlow, Karen Hyde just after 11 o'clock. So if you were in that room, what would you ask?
Yeah, what I would ask is, when does a security story really start to take hold, where it does affect the growth positively, right? Security offers faster hardware growth as well as software growth, as well as a high margin recurring revenues. So it's turning into security at the end of the day.
Wooj, thanks so much for joining us. Appreciate it as always. Woo Jin Ho, Senior Technology Analyst at Bloomberg Intelligence, joining us from down there in Princeton, New Jersey. And that should be a really interesting conversation with Chuck Robbins from Cisco. And that'll be on 11 o'clock in the 11 o'clock hour. So that's pretty cool. All right, I'm just looking here at the market here. Kind of not much happening here. We had that initial sell-off coming to PPI data, but then it's kind of come back. We've got S&P up a couple of points, the Dow down a couple of points, and NASDAQ up about 0.2%. So market's kind of stabilizing out here, so we'll have to see.
Yeah, and the dollar getting a little bit of strength. The Bloomberg dollar spot up about 0.2%.
And on the company news front,
yeah,
Peloton back in the news.
Oh, here we go.
They're talking about its biggest product upgrades in years in a bid to rejuvenate sales with refreshed hardware, new accessories, and artificial intelligence. So am I going to be upgrading the bike and the treadmill?
You have to, but they have to. I mean, they have to do something in order to get more people to get subscribers. I mean, they've been falling in that aspect. So you gotta up their game. There's a lot of competition out there.
The bike's just fine. It still works great.
But you need the AI add to it.
I don't need AI to it. I got my Jen Sherman. I'm all good. So, but anyway, Peloton. We'll see a new bike in the offing there. So we'll keep an eye out for that.
Maybe.
Market moving news here. All right, we're gonna have more coming up in this next hour. Lots happening here. Tony Halpin, team leader for the Russian economy and government coverage for Bloomberg News, give us the latest on his Russian big take story about the economy.
You're listening to Bloomberg Intelligence with Paul Sweeney on Bloomberg Radio.
All right, Lisa Mateo, Paul Sweeney live here in our Bloomberg Interactive Broker studio in Midtown Manhattan, streaming live on YouTube as well. Well, as President Trump and President Putin get ready to meet in Alaska tomorrow, one of the topics will be sanctions on each country, and particularly on Russia. And the question a lot of folks have is, do these sanctions we've placed upon Russia and European allies have placed upon Russia, do they have any real impact on the economy? Well, that's the subject of our Bloomberg Big Take story, and the answer is yeah, kind of. So let's get into it with Tony Halpin, team leader for the Russian economy and government coverage at Bloomberg News. So talk to us, Tony. Are the sanctions that have been placed on Russia, what types of impacts are they having on the economy?
Good morning. Well, essentially, they're accumulating over time, the pressures on Russia's economy. So people have grown old, frankly, waiting for Russia's economy to collapse during this war. But you can see now, particularly this year, that growth has slowed in the economy. Russia's budget deficit hit a record in July. Banks are showing the strains because the number of non-performing loans that they've given to companies and individuals is rising. And so overall, you can feel that the Russian economy is not doing as well as it seemed to do in the first 2 years of the war. Russia's had record high interest rates for a period of 7 or 8 months towards the end of last year and the first half of this year. Those are beginning to ease now. But the impact has been considerable on anyone with any kind of floating rate debt.
So, Tony, there's two ways this can go, right? The Kremlin can decide whether the war could continue or there could be a ceasefire. So what are the economic impacts of, let's say, the Kremlin were to decide to continue with the war?
Yes, and I think it's important slightly to divorce the two issues between the military and the economy, because the Kremlin, and Putin in particular, doesn't particularly make decisions on this basis. Putin has clear geopolitical aims, and from the Kremlin's point of view, it's the job of the economy simply to support those aims, however painful and however much damage is caused in doing so. But clearly, at some point, the economy does impact Russia's ability to make those decisions. So Putin is coming to the table actually quite confident in some ways, because his military is advancing in Ukraine and he feels he has the upper hand on the battlefield. And Trump is approaching the talks pretty much viewing the threat of secondary sanctions, particularly on oil sales to countries that buy Russian oil, as a kind of weapon that allows him to leverage Putin to finally agreeing to a ceasefire, because the pressures are growing on Russia's economy and because its income from energy sales is going down. Energy accounts for about a third of Russia's government income. So what happens to the price of oil is pretty critical. So the two sides are approaching it in many ways from different angles. Russia is coming to it from a military standpoint. The US is presenting the economic damage as a reason for Russia to stop the war. And in many ways, that's been the approach of the West all the way through, because they've relied on sanctions and the pressure of sanctions to try to get Russia to stop its use of hard power, of military power, because Europe and the US hasn't been willing to engage directly in Ukraine to try and prevent Putin from advancing on the land there.
Tony, is there any indication or any reporting that President Putin is facing or has faced or may face increasing pushback from his people of Russia because of maybe the challenging economic conditions, maybe because of the challenging situation in Ukraine? Has that had any impact, or is he just there until forever, I guess?
Well, I mean, it's always a concern for the Kremlin, and they monitor it very closely. They pay particular attention to it, for example, to food prices in supermarkets, because they know people will get upset and increasingly angry if they feel that they can't meet their weekly bills. But at the same time, they also know that Russians have a much higher pain threshold than Europeans for absorbing economic difficulties, right? And it's part of their recent history. They went through the collapse of the Soviet Union and all the economic damage that caused. There was a default in the late 1990s. They are used to feeling that their government will not really do anything for them, and therefore, in some ways, they don't really expect the government to come to their aid. But there's always a threshold, and the Kremlin is clearly very sensitive to that threshold, and they're keen not to reach that level that it produces protests on the street from Russians. But I have to say, for many Russians, the war has actually been a boon, because to encourage people to sign up to join the army, Russia's had to offer really quite generous sign-on bonuses and salaries. And that money has trickled down to particularly families in provincial Russia, and it's been much better for them in terms of what they could have earned during the peacetime economy. So in some areas of Russia, the war has been a boon, and people have felt that their incomes have improved.
Hey, Tony, in the last minute we have, talk about the banks and what their role is in all of this.
Yeah, many of these banks are state-controlled. They're headed by people who are close allies of Vladimir Putin personally, and their job has been basically to bankroll the war effort. Defense industry companies that rely on loans in order to produce the material that the army needs, they can qualify for preferential loans that are much lower interest rates than are available on the commercial banking scene. And those rates are essentially locked in, and even if they run into difficulties in being able to service those loans, the Bank of Russia has encouraged lenders to basically reschedule those loans rather than call them in. So they've had a very easy time of it in many ways, because they've got access to preferential funding. They're somewhat insulated from the threat of bankruptcy, and they've had really high levels of domestic demand to service.
Tony, thanks so much for your reporting. Really appreciate it. Tony Halpin, team leader for Russian economy and government coverage for Bloomberg News. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM channel 121 is presented by Oracle. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence starts right now.
This is Bloomberg Intelligence with Paul Sweeney.
The real outperformance has been the U.S. corporate high yield. These are two big-time blue-chip companies. One person's chaos is another person's animal spirits.
Breaking market headlines and corporate news from across the globe.
Our view is that the economy is slowing down.
There is the possibility of a death spiral.
Both quantum computing and AI are going to power the future.
People are just buying everything with tech.
Bloomberg Intelligence with Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
All right, Lisa Mateo, Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming on YouTube as well. Coming up in this hour, we'll check in with Mike McGlone, Bloomberg Intelligence Senior Commodity Strategist. Bitcoin briefly touched, higher here. We're down a little bit here, 119,000, but we were at 124,000. What's going on there? So we'll check that out. We're also going to bring you the discussion with Chuck Robbins, Cisco CEO, speaking with Bloomberg anchors Ed Ludlow and Caroline Hyde. We'll bring that to you live. It'll be a simulcast with Bloomberg Television. We're going to talk some Deere earnings. How's the U.S. farmer doing out there? We hear it's pretty tough on the farmer, and Deere usually gives you some good feedback. Chris Giolino, he's going to join us, Bloomberg Intelligence, senior U.S. machinery analyst. It's Thursday, which means we chat with Barry Ritholtz. We have no idea what we're going to talk to him about, but I guarantee you it will be interesting because he's Barry Ritholtz. So we got a lot coming up this hour. We're also going to speak with Tom Gallagher, Miami International CEO. This is the crypto exchange that is going public here today, and I think it's going to be a hot deal. It says it's well oversubscribed. So we got a lot coming up, and we'll bring that to you in just a moment. Right now, let's go to Charlie Pellet for Bloomberg Business Flash.
Hi, thank you very much. MIAX on that ticker for Miami International. We'll keep you updated as we get more information. This Bloomberg Business Flash brought to you by Oracle. Attention growing businesses. Oracle's offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure for new U.S. customers with minimum financial commitment. See if your company qualifies at oracle.com/Bloomberg. Right now, we have got stocks trading mixed. We have got the S&P 500 index down a point, little change there. NASDAQ also little changed, higher by 8, up 0.1%, while the Dow lower by 84, a decline of 0.2%. The Russell 2000 index of small cap shares, though, dropping 1.3%. 10-year 4.26%, with the 2-year 3.72%. Gold down 0.5%, 33.39 the ounce, and West Texas Intermediate crude up 1.2%. 63.42 a barrel. Cisco Systems after earnings and ahead of the interview with Chuck Robbins. Cisco Systems down by 0.7%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Charlie Pellet, thank you so much. We appreciate that, of course. Let's take a look at some of the stocks on the move today. I'm Paul Sweeney alongside Lisa Mateo, and we're joined by Bloomberg's Carmen Reinecke. Carmen, what are you looking at?
Yeah, the first thing that I'm looking at today is Coherent. This is ticker COHR. Shares are down 23% right now. This is on track for the worst day since August 2023 on a closing basis. Basically, what happened here is we have an earnings mover. It's a semiconductor device company. It gave an outlook that underwhelmed analysts, and some pointed out seem to imply an AI deceleration. Obviously, this is a buzzword. We, want to be seeing companies growing, AI sales growing, ROI from those business segments. The firm also said that it would sell its aerospace and defense business unit to Advent for $400 million, and this is to pay down debt.
All right. Now, Deere, the farmers not doing so well, so that reflects Deere.
Yeah, so Deere, ticker DE, is also down today, currently down about 7.7%. This is the worst intraday drop since May 2022. Also an earnings mover, the company paired its full-year earnings outlook. They said that lower grain prices are curbing farm. They also pointed out that tariffs ate into profits, and so seeing a negative impact there to the American farmer from the tariffs.
Yeah, and again, yesterday on Bloomberg Intelligence Program, we spoke to a farmer out in South Dakota, and when I asked him, how's the farmer doing, he says, it's tough out here. Commodity prices are down, so the price that for their crops are down, yet their costs are up, and he cited higher seed costs, higher labor costs, and higher interest rates, which is a drain for those folks who take on a lot of debt, which farmers tend to do, and fertilizer costs are up. So tough out there right now for the U.S. farmer, and hopefully it gets better, but you see that a little bit in the Deere results. Tapestry?
Yeah, last one that we're looking at. So Tapestry, ticker TPR. This is the owner of Coach and Kate Spade, so your luxury handbags. It's down 14% right now, on track for the worst drop since April of this year. Its annual outlook just missed analyst forecasts. They also cited tariffs, saying that they're not seeing as much demand because of that. This also sort of signaled that Wall Street is maybe not factoring in tariffs as much to their sort of outlooks for Tapestry. So I think we might see a little bit of an adjustment of analysts' estimates for this company going forward.
So what's up with Kate Spade? Don't we like Kate Spade?
It's all about Coach lately. I mean, they said that on their call, that they're seeing really strong demand for these handbags. I think you can see that on the street, right?
I was about to say, I do have a Coach bag, but I don't have the Kate Spade.
I don't have the, see? Exactly. So I think it's just sort of the brand that's resonating, right now.
All right.
It is so true.
You put Labubus on a Coach, not on a Kate Spade.
Oh, that's how you do it.
That's how you roll.
It's all about the bag chains, too. Yep. That's it.
Exactly.
Carmen, thank you so much. Carmen Reinecke, she covers all the equities for Bloomberg News. We appreciate that. Bitcoin retreats from record highs after markets get volatility jolt. I'm looking at Bitcoin here. It's 118,750, down about 3.4%. But in the last 24 hours, it did hit 124,000. So it is. You're going to cut rates. You're going to have the animal spirits like maybe yesterday. You buy the Bitcoin, and today you see the PPI data. You get a little nervous. Maybe you pull back. That's called volatility. That's called crypto. That's called Bitcoin. Mike McGlone lives it. Senior commodity strategist for Bloomberg Intelligence. Mike, did I just call that kind of correctly for Bitcoin?
Yes, I think you're right, Paul. The key thing to remember about Bitcoin is probably going to do well as long as the U.S. stock market keeps going up. And so far, that's the case this year now. It's backing off from record highs. It's becoming highly, I would say, leveraged at these levels. It's normal for that, and it's normal for high volatility. And right now, we're seeing a lot of pile-on speculation. But on the year, for a while, it was up about 30%. Gold's up about 30%. The stock market's up about 10%. Typically, Bitcoin trades about 2 to 3 times the volatility of the stock market, so it should be up about 30% if the stock market's up 10%. But the thing is, it's a highly volatile at-risk asset, new store of value that's got a very high correlation to the stock market versus gold, which is known as negative or zero, basically zero correlation to the stock market doing well. So I'm concerned that it's signaling there's a bit of a risk going on in the market. Also, remember, it's August, and the VIX yesterday dropped to 14.5, the lowest on the year. If that VIX picks up a little bit, we get back to some normal volatility, Bitcoin might be the first indicator to suffer.
Hey, Mike, you got to explain this for me. So what exactly is Bitcoin? Is it a commodity? Is it a currency? Is it a speculative asset? How would you categorize it?
I think it's all the above. Digital gold is where I started getting really bullish with Bitcoin back, 5-6 years ago. But now I find it just a highly speculative digital asset. So the good thing to remember about Bitcoin is in 2009, there was one cryptocurrency. Now, according to CoinMarketCap.com, there's 19 million of them. So there's an unlimited supply of these things. The key thing that's really been notable and delightful to see the Trump administration tilt from an antagonist to really understanding, well, this space is going to the dollar for its base layer, i.e. stable coins or crypto dollars. They're pushing almost 300 billion now, and they all invest in treasury. So the technology is awesome. Tokenization is awesome. That's happening. But the key thing is we're in that speculative frenzy now, and it's highly related to the stock market. I'll end with one key fact. Like I mentioned, there's unlimited supply of cryptocurrencies, and there's only 4 precious metals, gold, silver, platinum, and palladium. So I'm still kind of sticking with the rock this year.
All right. So what ongoing role are ETFs, Bitcoin ETFs, playing in the price performance of Bitcoin these days, do you think?
I guess they're just really a lot of income, a lot of demand, a lot of inflows, but a lot of it's just kind of catch up. Because remember, we've been waiting for these ETFs for 10 years. When we launched that big Bloomberg Galaxy Crypto Index in 2018, the idea was someday it's going to be tracked by ETFs. An index to track the space. Not just one, not just picking a winner. So massive inflows. The problem is, Paul, they're all expecting returns to be as good as they were in the past, and they're expecting the Bitcoin to beat the stock market, which it has. The key risk is it's basically leveraged stock market. So the stock market goes up, Bitcoin should go up more. The problem is now it's becoming mature, volatility is declining, everybody's piling on. Have we seen this before? It reminds me of 1999 in internet stocks.
Oh boy, I was there.
You were there, been there, done that. So you mentioned volatility, Mike. So how does Bitcoin's volatility compare to traditional commodities? I mean, does that change how investors treat it?
Well, I always compare it to gold. So the Bitcoin to gold ratio, the ounces of Bitcoin, ounces of gold equal to 1 Bitcoin. Right now, it's about 35 ounces. That's the same as when it first peaked in 2021. So that leading indicator has been flat for a while. It's a bit wary. And Bitcoin typically trades about 3 times the volatility of gold. So that's where I really compare it to. And so the thing is, they're negatively correlated. But also, it's been a good leading indicator. The thing is, it's been stalled and lagging for a while, that Bitcoin to gold ratio. So I'm concerned it's telling us there's going to be a problem. So as we tilt towards the end of the year, this Bitcoin to gold ratio needs to go up, or it's telling us there's a problem that is more likely to go down. And that's why I point out, with volatility this low in the stock market and on a record high, Bitcoin to gold, I think, is a good leading indicator. For now, I'm worried, and that's why I'm sticking with gold versus Bitcoin this year.
Hey, Mike, we heard from Deere today, and they called out that the U.S. farmers a little bit challenged there with the economics of the business. Yesterday, on this program, we spoke to a farmer in South Dakota who's got 3,500 acres, and he's got a big seed business, and he said the same thing. He said, crop price is down and his costs are higher, really putting a dent on profitability here. How do you view kind of the U.S. farmer these days, and what's the outlook, do you think?
Well, you nailed it, Paul. Right now, it's the first thing you remember, superabundance is a wonderful thing. The only way for farmers really to get out of this price decline is to create more and more crops. Right now, at 189 bushels, the latest estimate of U.S. corn production this year per acre, that's the highest ever. It's just the technology is bringing on, we're bringing on so much supply, it's pressuring prices. Yep. The key question is where the prices bottom. I think corn's more likely to get to down to $3 a bushel than stay above $5. It has to get to that low price cure, but it's not alone. Crude oil's doing the same, natural gas is some in there, the grains are all in there, so they're all heading to those low price cures.
Mike, great stuff. As always, appreciate getting a few minutes of your time. Mike McGlone, Senior Commodity Strategist for Bloomberg Intelligence. He grew up on a farm in Illinois. He was back on the farm earlier this summer. So not only does he trade these commodities historically in Chicago and various other pits, but now he writes about them from a research perspective, but he lived it back in the day here. So he's gone from doing corn and soybeans to Bitcoin. I mean, somehow he's evolved his coverage.
How do you make that transition? I have no idea.
Yeah, I mean, you can talk cattle, pigs, anything with them. I occasionally will do a pork belly special, a segment on pork bellies, but we'll see what that. Coming up in just a moment, Chuck Roberts, he's the CEO of Cisco. He's going to be speaking with Bloomberg Television anchors Ed Ludlow and Caroline Hyde. Cisco had their quarter yesterday. I thought it was a good quarter stock, kind of hanging in there, not really doing too much here today, but as Woo Jin Ho told us earlier, it's all about trying to get a piece of that AI expenditure, and they've been growing their business. Now let's go to this discussion right now. In progress, Chuck Roberts, Cisco CEO.
Now, by Cisco CEO Chuck Robbins. And actually, Chuck, I'm going to ask you something that I felt like the analyst community didn't really get to. And that is that there is this big product refresh happening, near term over coming years. And I feel like you've been trying to talk about Cisco as a platform offering for a while. And if we look at that fiscal 26 outlook, is that baked into that, where Cisco is a platform offering and you folded security into it? That's kind of what I think people want to know.
Yes. Well, first of all, thanks for having me. And I want to thank the team and all of the Cisco folks for just a great year. We obviously had good order growth in Q4. We had the great performance in the AI infrastructure orders. We actually reported that we had taken down approximately $1 billion of revenue from those orders, which was something that everybody wanted to talk about. We talked through how we feel the progress, kicking in on security, and then, to your point, this product refresh cycle that we are beginning will happen over years. And honestly,
right.
we just turned on orderability. Large customers take a lot of time to evaluate, put these things in labs before they put it in their critical infrastructure. But the point you make about the platform is really important, because as we get into agentic AI, with the low latency, constant communication that's going to occur, we're going to have to do security in the network. There is no other alternative. You cannot introduce latency by sending it to a security appliance. And we are the only company that has both networking and security technology to fuse it together to create that platform effect that you're describing.
AI is a double-edged sword, Chuck. It's margin dilutive. How do you think about that?
Well, I think we have always had a portfolio of products that had various margin profiles. I mean, we had a point in our history where the telco and the service provider world was as much as 35, 36% of our business, and that was a different margin profile than the enterprise. And so we just manage it the same way we have all along. So I'm not too worried about that.
Meanwhile, Chuck, that massive opportunity ahead that you articulate with AI infrastructure, the bringing in of $2 billion of orders, the $1 billion of revenue already, is it the platform offering that helps you push out and fend against some of the other competitors that want in on that? Of course, HPE is trying to get in, you've got Broadcom. Is that how you set yourself apart?
Well, I think the key to remember with this is that it's networking systems and it's optics. That's primarily what we're selling for AI infrastructure. And there's really only 3 companies on the planet that can deliver the networking silicon that these customers require. And we're one of them. And so, they're looking for low power requirements. They're looking for meeting their dates. They're looking for speed, bandwidth, deployment, and we're hitting that right now with them. And we've really built great relationships. If you go back 5 or 6 years ago, I had to try to convince people that we were rebuilding relationships here. And even if you go back 12, 14 months ago, when we gave them the target of $1 billion in orders, I think there were a lot of skeptics. And the team actually delivered really well. And we have great relationships with these customers now.
We are joined by Chuck Robbins, Cisco CEO, and you beat your things that previously others were cynical of, but the market moves with you. Many wanted even more in terms of your full year revenue guidance. Some are even going as far as to say that maybe you're suggesting a little bit of a cautious IT spend for the next fiscal year. Do you abide by that, Chuck?
No, we don't see that. We haven't seen any sort of slowdown at all. The only place we've seen that challenge, as has been reported, was in U.S. federal. Our product order growth was 7%. If you take out U.S. federal, we grew 10%. And if you think about security, same thing. If we take out U.S. federal, we grew double digits in security on orders. And I also talked about the fact that if we look at the fiscal year that we just entered, our U.S. federal team is actually forecasting a return to growth. So hopefully that won't be a headwind in the next year. So we haven't seen anything meaningful, but we're also cognizant that we're operating in a pretty complex and dynamic environment.
Chuck, we love to talk about the big projects on Bloomberg Tech, the big data center projects. Are there any specific examples of projects you're involved in that you think are really needle moving for Cisco?
Well, all the cloud providers are needle moving. And over time, the neo cloud segment, as well as the sovereign clouds, we think are will be a big part of our business also. We're just getting started in those. If I hit on a few of those, the sovereign AI data centers that we talked about in UAE as well as in Saudi are the early ones. We're having discussions in other Asian countries, in Africa. In Europe, you have this push for on-prem sovereign applications. So from geopolitical perspective and a risk perspective, they want more control over the tech stack that they have in their countries. So that's more of a sovereign play. And we're one of the unique companies who can actually deliver, say, Splunk on-prem, or they're asking for WebEx on-prem, which we can do. So, and then the neo clouds we could talk about as well, but that's another emerging opportunity for us.
I don't think many appreciate the scale of Cisco sometimes. You've got a lot of credit, by the way, on this program at least, about how you've communicated tariffs impact. But you're basically one of the biggest and leading network chip producers globally. And this is an administration that wants more US manufacturing. So you have the volume of gear, you design your own chips, TSMC makes them for you, the economics kind of works in your favor. Have you made some commitment to do what this administration's trying to do, which is take that process that you've mastered, but just bring it to the States in some form?
Well, I think that much like NVIDIA, AMD, us, others, there are a lot of companies that actually rely on TSMC for the fabrication of the silicon, and they've obviously made commitments on their side to actually build out capacity in the United States, and so we're happy to see that happening. The thing that people don't really realize is that we've maintained a U.S. manufacturing footprint all along, and so we have a footprint in the U.S. today that we can look at expanding, but I think it's just important for us right now to wait and see exactly where all this stuff lands. If you go back to 2018, when the China tariffs hit, our teams have made moves and mitigated roughly 80% or so of those. And so we just continue to look at these things as they come out, figure out what the best plan of action is, and then we act.
When you think about planning ahead and business continuity, Chuck, when you see what's happened with AMD and NVIDIA and the deal they've cut to access China, when you think about exporting more broadly, are you thinking that might come your way, a pay-to-play in the future?
I have no idea. We wake up every day and we try to figure out what's transpired and what's happening in the world and how do we react to it. I've talked about over time that the current crop of CEOs in the United States have basically been operating in times of uncertainty or crisis or certainly very dynamic environments. And so we're all used to just dealing with whatever changes are coming our way. There's the old saying that you can deal with the world as it is or how you'd like it to be, and we just wake up and we deal with what comes at us and try to plan accordingly, try to do scenario planning, but then deal with it as it is.
And when you're controlling your own destiny, you've been doing a bit of M&A, and you mentioned the Splunk offering and how that helps you access the likes of Europe, for example. Any more M&A on the horizon, particularly when it comes to AI?
We're always looking. Our strategy hasn't changed. Obviously, valuations are quite frothy in that space. But if there's something that helps us advance our strategy more effectively, then we're always willing to take a look at it. I would say that M&A is not the strategy. We have our product strategy and our solution strategy for our customers. And if there's an acquisition that helps us accelerate that, then that's what we're really interested in. And you think about places like AI infrastructure or security or observability and those kind of areas, they're always interesting to us.
Chuck, how's the relationship with NVIDIA evolving since it was all announced?
It's great. Our team and their team's execs had dinner last night, and we're working on architectures for NeoCloud, architectures for the enterprise. We're working on go-to-market, joint go-to-market together. So I'd say it just continues to get stronger, and we're really on the front end now of a lot of the technology integrations that we've been working on, and we're on the front end of the real enterprise wave of this AI. If you think about it, it started in the back-end networks of the cloud providers. It's obviously going to have an impact on the front-end networks. It's going to have an impact on the enterprise, and even the telco business that we saw this quarter. We had telco and cable. Our orders were up greater than 20%. And a lot of that was attributed to their preparation for AI.
Chuck Robbins, Cisco CEO, been fantastic to speak with you today. Thank you very much indeed.
All right, that was Chuck Robbins, Cisco CEO, speaking with Bloomberg Television anchors Ed Ludlow and Caroline Hyde, talking about Cisco. They just reported their quarter. Stock's off about 1.5%, but generally, as we spoke to Woo Jin Ho earlier, Bloomberg Intelligence, pretty solid advancements being made in their business. All right now let's get a little bit of a reset here. We'll go to Charlie Pellet for a Bloomberg Business Flash.
Hi, thank you very much, Paul. Here's what's going on. The Dow, the S&P, NASDAQ, they're all lower. And this Bloomberg Business Flash is brought to you by Oracle. Attention, growing businesses. Oracle's offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure for new U.S. customers with minimum financial commitments. See if your company qualifies at oracle.com/Bloomberg. We've got stocks lower across the board right now. The Dow, the S&P, NASDAQ in the red. S&P down 7 to 64.59, drop there of 0.1%. Dow down 115, decline there of 0.3. NASDAQ lower by 0.1%. The 10-year at 4.27%, with the 2-year currently yielding 3.72%. Bond yields are rising as traders pair their Fed bets after the PPI report. We've got spot gold down $18 the ounce, down 0.5%. An advance for West Texas Intermediate crude now up 1.4%, 63.55 a barrel, and Bitcoin falling 3.7%, 118,384 on Bitcoin. Cisco again after earnings, after that Chuck Robbins interview that you heard live on Bloomberg, down now by 1.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. Lisa Mateo, Paul Sweeney live here in our Bloomberg Interactive Broker studio and streaming live on YouTube as well. Looking at Deere, they reported numbers. Guidance a little bit weaker than expected. Stock down about 8% here trading today, but it's still up about 11-12% year to date. Check in Chris Ciolino, Bloomberg Intelligence. He covers all the big machinery companies. Chris, what's the takeaway from Deere today? They called out the U.S. farmers facing some economic challenges here. I guess that's impacting their businesses. What'd you learn?
Yeah, listen, I mean, this really wasn't a particularly great quarter. 3Q results were mixed at best. It was really a low-quality earnings beat, primarily driven by a lower tax rate. And as you alluded to, they did cut their 2025 guidance. But to be honest, I don't think that really changes the investment thesis here. We still expect earnings to bottom this year. We're still looking at a very, gradual recovery as 2026 unfolds. The reduction in the outlook was really driven by weakness in their construction business. And it appears to us that it was really more of a function of some of the higher tariffs and costs coming through. We knew that construction and forestry was really going to bear the brunt of the tariff impact, but this quarter just came in, a little bit more of a headwind than we anticipated. It doesn't appear to be that there's been much of a change in terms of, farm fundamentals and their appetite to go out and buy equipment.
Hey, Chris, can you get more into the struggle that farmers are facing that's impacting Deere?
Sure. We've been in this kind of prolonged downturn in the ag economy. Crop prices continue to deteriorate. Farm fundamentals remain weak. Interest rates remain high. We have the overhang or the uncertainty around the trade environment and export market access. Really, there's really no signs, or I would say green shoots yet, that we're at this inflection point. I think the positive takeaway is that inventories are coming down. Deere's not going to have to massively underproduce retail demand next year. So even if we're looking at a flattish type of environment in terms of underlying retail demand, we're still looking at probably higher production and some pricing coming through, which should still generate some operating leverage in the business.
So, Chris, when demand is down for their core farm equipment, what does Deere typically do? Do they let inventories build? Do they get promotional to move inventory out the door? How do they usually manage that?
Yeah, so it's a delicate balancing act, right? I mean, it's almost impossible to time the cycle. And what they've been doing, for the better part of this year and even at the end of last year, they had been underproducing retail demand to bring down those elevated inventories. They've done really a commendable job on new equipment. The big issue right now is still on the used equipment inventory side, particularly on tractors, which are still quite elevated. And you're right, they are allocating more merchandising programs and pool funds to help address that issue and move the equipment. And I think you see that partly reflected in their production precision ag business this quarter, and pricing actually flipped negative, which was a surprise to us. It does appear that this is, relatively transitory. We should expect pricing to bounce back next quarter. But yeah, it's been they've done a real good job of managing inventories. It's just, when you're slogging along through the bottom of the cycle here, it does become quite challenging.
So then I got to follow up. Are you still cautious about the pace of their recovery?
Yes. I would say signs of a recovery are still, pretty elusive to us. And if you just look over the last couple months, you continue to see further downward pressure on crop prices, which at the end of the day is one of the bigger drivers of Deere's business and farmer cash receipts. We had a pretty ugly WASDE report this week. It looks like we're going to get another year of record corn production. So those stockpiles continue to build, which is really going to keep somewhat of a ceiling on crop prices here in the near term. So we think this recovery is going to look much more modest or subdued than what we typically see during a normal cycle. Right now, we're still anticipating, a modest, flat to up 5% next year in terms of underlying retail demand for large ag, particularly in North America.
Chris, excellent stuff as always. Chris Ciolino, senior U.S. machinery analyst for Bloomberg Intelligence. And again, that's tough out there for for the farmer out there who sees rising costs and across the board, across many of the cost centers there. And the top line, as Chris was just mentioning, as we heard from our farmer, Mr. Hefty, yesterday, commodity prices are low. That's a tough thing to get past. And, even Mike McClone said the technology is getting such that they're getting more per acre than they ever have, which is good from that perspective, but that just creates more supply.
Yeah, and the technology is not cheap either.
Due to the technology, right, exactly. And the technology
it's expensive.
Yeah, you go out to a John Deere lot. I mean, they're not giving those things away. There's big tractors in this thing.
Yeah, and the machinery sector in general, it was expected to bottom out this year, but I don't know, with trade talk too and everything, I mean, that just might not happen. It might continue.
Yeah, and we talked to this farmer from South Dakota yesterday, and he called out something which I just kind of hadn't thought about, and I should have, which is farmers tend to use a lot of debt to finance things like buying a tractor, buying feed for the upcoming year. And so they do go to their local banks. They do rely on their local banks. They have mortgages on their land. So when interest rates go from where they were pre-pandemic to where they are now, boom, that's a big hit to their profitability.
Yeah.
I hadn't thought about that.
And the cost of labor too.
Yeah. So anyway, a lot going on there with the farmer, but we love keeping close to the American farmer here. Let's go to Barry Ritholtz. Why? Because it's Thursday, and that's what we do on Thursday. We talk to Barry Ritholtz, Ritholtz Wealth Management. He's also got a little podcast that just crushes it out there called Masters in Business on Bloomberg Radio. Great guests every week and some real good insight into these markets. Hey, Barry, let's talk. I'm just reading your recent missive here. How do you get people to think about concentration risk in the equity markets, where it seems like only a handful of stocks really move the market and represent most of the performance and most of the capitalization? Is that good or bad, or how do you talk about that?
Well, there's been an ongoing concern for, decades, certainly years, that we have a market that's driven too much by a handful of companies until you actually do a little work, as opposed to just repeating what you saw on Twitter or TikTok, and you find out, hey, this is kind of where we've been historically. That's before we get to the issues that these 7 companies aren't doing 7 businesses, as our Bloomberg Intelligence colleague Eric Balchunas has pointed out. Collectively, the Magnificent Seven has made about 846 acquisitions over the past decade or two. And so these are really giant, technological, wildly diversified companies. I know I'm at risk of saying something that when the market crashes, people will point to and say, hey, that was the top. But just looking at this objectively, there's only 3,500 companies in the Russell 5,000. And when people try and figure out why is that the case, well, just these 7 companies are responsible for over half of that shortfall, and there's been a lot of M&A. So, yeah, we have bigger, broader, technologically competent conglomerates, especially considering that, since the Microsoft antitrust case a quarter century ago, we just haven't been exerting a lot of antitrust limitations. We're allowing these companies to bulk up. Think about what Microsoft owns, what Amazon owns, what Facebook owns. These are massive, massive companies they're no longer just their core business. I want to say Amazon is barely a retailer anymore. They're a cloud player with this little side hustle selling crap to people at home.
That's exactly how you put it. One of those who get orders from there. Thanks, Larry. So do you have any concern about valuations? I mean, you're mentioning so many different companies, earnings season winding down too.
Yeah, so we've been hearing for a couple of years now how bad earnings are going to be this quarter, and that, gee, this market can't grow into this valuation. And yet earnings continue to surprise to the upside. Revenues have been really, really solid. You know, I think people have big problems when we hit any sort of inflection point or pivot, when there's a broad technological adoption. I recently wrote about not the Magnificent Seven, but the Magnificent 493. I'm more interested in the rest of the S&P 500. And the reason for that, valuation-wise, is that we go back to the late 90s, leading into the dot-com implosion. Yeah, Metro Media Fiber and Juniper Networks and Pets.com all crashed and burned. But what came after that was, we don't think of companies anymore as internet companies. We're all internet. Hey, we all live on email. We all work with Slack. We all, or Teams or whatever your group thing is. We all use Google Meet and Zoom. Everybody markets through the internet. It made everybody else more effective, more efficient. The chart I showed was just revenue per employee from early 90s to now. I suspect we're going to see the exact same thing happen over the next quarter century as all these companies adapt artificial intelligence.
All right, Barry, thank you. Always appreciate getting a few minutes of your time. Barry Ritholtz, he's a host of Masters in Business on Bloomberg Radio. Highly recommended. Great content there. Great guests, great discussions. He's also got a day job, folks. He's a founder of Ritholtz Wealth Management. And we appreciate getting a few minutes of his time. Looking at the markets here, still a little bit of red on the screen, off about 0.2%, 0.3%, pretty much across the board on the equity indexes. Well, more coming up. This is Bloomberg. Good morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:40 on Wall Street. We do check markets all day long here at Bloomberg, and this Bloomberg Business Flash is brought to you by Oracle. Attention growing businesses. Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure for new U.S. customers with minimum financial commitment. See if your company qualifies at oracle.com/Bloomberg. PPI Thursday, jobless claims Thursday as well. The Dow, the S&P, NASDAQ all in the red right now. The S&P down 17, drop there of 0.3%. The Dow is down 181 now, down 0.4. The NASDAQ Composite Index retreating from a record, down 62, down 0.3%. The NASDAQ 100 Index down 0.3. The Russell 2000 Index particularly hard hit today, down 1.7%. But interestingly, our Mag 7 Index up by just about 0.1%. The 10-year 4.28%, with the 2-year that's currently yielding 3.73%. Gold down $14 the ounce, down 0.4%. The precious metal now at $33.41 the ounce, and crude a rally there up 1.8%, $63.81 for a barrel of WTI. Bitcoin at 118,277 a token, falling by 3.8%. Cisco Systems out with a cautious forecast for the current fiscal year. The stock is down 1.5%. Moments ago, we spoke with Cisco CEO Chuck Robbins, who talked about the quarter.
We had the great performance in the AI infrastructure orders. We actually reported that we had taken down approximately $1 billion of revenue from those orders, which was something that everybody wanted to talk about.
Again, Cisco shares, they are trading lower, now by 1.6%. By the way, you can catch the full conversation on YouTube on the Bloomberg Podcast channel. Apple's blood oxygen tracking feature for its smartwatches returning to the U.S. after a years-long legal fight. The feature, which was removed at the end of 2023 due to a patent infringement lawsuit by Massimo Corp and a U.S. customs injunction, will return for Apple Watch owners who bought the models with the feature disabled. Apple shares today down by 0.8%. So again, recapping, wholesale inflation accelerating in July by the most in 3 years. Stocks lower, S&P down 15 to 64.50, a drop there of 0.2%. The Dow down 0.4, NASDAQ lower by 0.3%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. Lisa Mateo and Paul Sweeney, we're live here with you in the Bloomberg Interactive Brokers studio in New York City. Or streaming live on YouTube as well. We are waiting on an interview with Tom Gallagher. He's the CEO of Miami International, which is a set of crypto exchanges, which is really cool. They're going public today. And I understand the deal, seeing the reporting from Bloomberg, well oversubscribed. The company priced their IPO at 23. It's indicating on my Bloomberg terminal higher, a range of 29.5 to 30.5. So it still has not opened yet. So I suspect he might be busy with that. So we will wait, see if we can get some access to Mr. Gallagher. In the meantime, have you ever been to Atlantis Paradise Island in Bahamas?
I have once.
Okay.
It was fantastic.
It was fantastic. I have not, primarily because I don't like people. And it looks like it is a very large facility with lots of people, but it looks just awesome. And down there in Bahamas, the reason I raise it up is because they've been investing a lot of money in that property, and their Citigroup is doing a $1.93 billion debt refinancing for Brookfield Corporation's Atlantis Paradise Island, the firm's luxury resort in the Bahamas. So in the past 5 years, the property owner has invested more than $260 million in the resort, including a renovation of guest rooms, the Atlantis Casino, and new food and beverage concepts that helped drive record visits to the property in 2024 and this year.
I can't believe you haven't been there. But they have the best, like, I know it's a great family place too. Yeah. They have this water slide that you can go down, and the sharks are all around you, and you're inside the tube. It's really cool
it's
place.
Just awesome, and particularly for kids. But I was able to avoid it. And you're talking to the guy who avoided taking kids to Disney World.
I know.
So I know what I'm doing on this stuff, trying to avoid crowds. So we go more for the boutique hotels where they could snorkel and stuff. But
yeah, but
anyway,
so they're not doing so well. Is that's the basic?
No,
gist of
they're
it?
doing well.
Okay.
They're just doing this bond offering here, which I always,
Okay.
I'm always looking at deals and who's getting paid and who's making money and who's coming to the market here. And you wonder, with interest rates higher here, although they have come down. You look at the 10-year Treasury, it's down to 4.28. We were a lot higher just 6 months ago, 12 months ago. So just any pullback in the rates, we're seeing some of this corporate bond market issuance tick up here. So and as we heard from, corporate bond issuance, even in just look at the municipal bond market, was a record last year, going to be another record this year. And I always ask municipal bond people, why are they raising or issuing debt now when rates are higher versus 3 or 4 years ago when they could have issued debt when rates were much lower? And what I'm told time after time, municipalities don't issue debt when they can, i.e. lower rates.
When they need
They just when they need it.
Okay.
And that's kind of, as opposed to if rates would tick down 10 basis points, I'd be on the phone making 30 phone calls to the CFO saying, hey, let's bang out a deal. Because he could get 10 basis points difference and then maybe you could refinance something else you got on the balance sheet. So we have people on the desk that just do that all day. And they just look at companies' capital structures, what you got outstanding, and when rates move, do you want to make some phone calls and try to get some deals done? That looks like that's what Citi's doing here with Brookfield Partners. So anyway, good deal there.
Well, you're very popular in the bond market
in
New Jersey.
Yeah, we were. Exactly. All right, so we're waiting on this Mr. Gallagher, Miami International CEO. Again, Miami International, these crypto exchanges, and what a way to play, I guess a derivative way to play the crypto markets. You can buy the Bitcoin directly. You can buy some of the exchanges. You could buy Coinbase. You could buy some of these ETFs. And here's just another way to play it here. So we'll see if we can get him back on this. What else you got for us,
All right.
Lisa?
So this one, this is I was talking about earlier when we were talking about Tapestry, right? They have all the fancy bags, like the Coach and the Kate Spade. Well, now there's this article in the terminal. You got to check it out. Bag charms. Those little charms that women are putting on the bags that we were talking about. I know,
so now
you
I'm Googling
don't.
bag
So now you have
charms.
to do it, okay? Bag charms. They're selling for like $1,000. And this is like retail's next like little luxury thing. So this is what I saw someone down in the pantry. They had a little, I forgot, what do you call it? Labubu? Is that, is that what you call those little things?
All right, I see it here.
Someone had one on their little bag just down in the pantry downstairs. So I was talking about it, and I was talking with her about it. Oh, look, yeah, even in the article, there's a picture. If you check it out on the terminal, there's a picture of the little Labubu charm. But this is a huge thing, and they're putting these like $1,000 charms on top of their, $10,000 purses.
But can't somebody just kind of walk up and pull it off, I guess? I don't know.
No, they got to be sturdy. If you're going to pay that much, it definitely has to be sturdy.
All right, and in this article, they have some disturbing pictures of these designer handbags, and dudes are holding them.
Yes, yes.
All right, so I'm missing out on that, right? I don't have my little tote bag?
No. Well, the man purse, it does go on the man bag.
Purse.
Yes, the man bag. A man bag, sorry. There you go. Man bag. It's not the man purse, but I've been told. And yes, they do have them on them as well. So this is like a big thing, but it's a big part for luxury because luxury, it's been having a tough time, right? So this is a little bit something extra that these companies can do to kind of spark a little interest, right? Get some interest going as they don't do so well in the market.
All right, interesting. Well, when you talk about luxury, and, I've always been told that it's all about China. China is the incremental consumer, one way or the other. And if China, how goes China, so goes luxury a little bit. And what we've seen since the pandemic is they have not been traveling as much, number one. And number two, when they do travel, they travel to Japan to take advantage of the weaker yen versus renminbi. But they have not been coming. You don't see them as much in New York as you did pre-pandemic. You don't see them in London or Paris or those types of places. And that on the margin has been a challenge, I know, for a lot of the retailers. So, all right, it looks like we have a little bit of a problem, or the New York Stock Exchange has a little bit of a problem with their phone communication system. So we're not going to get today, Mr. Gallagher, but maybe we can get him in the future. So anyway, that stock priced at $23, indicating 29.5, 30.5. So keep an eye on that. Coming up, we've got some more stuff happening here in this marketplace. Looking at the markets, the S&P off 8 points, the Dow off 125 points, the NASDAQ off 30 points here. Looking at the Bloomberg Dollar Index, that is higher today. So that is good news for the greenback. Yield space, 10-year Treasury yields, they are up about 5 basis points here, giving back everything that they traded yesterday, 4.28% on your 10-year U.S. government bond. WTI crude oil, it's higher by more than $1, just still below $64 per barrel. Bitcoin down by 4%. Thank you, Tom. This is Bloomberg.
You're listening to Bloomberg Intelligence with Paul Sweeney on Bloomberg Radio.
All right, Lisa Mateo and Paul Sweeney live here with you in the Bloomberg Interactive Broker Studio in Midtown, New York. We are also streaming live on YouTube, so head over to youtube.com. All right, here's the story my eyes went to immediately this morning when I came in. U.S. and Canadian banks are summoning staffers back to their offices at a faster rate than European rivals. That was very interesting. And we've got lots of good data in their charts and stuff like that. But to me, it just went right to the difference between the U.S. and Europe as it relates to banking and investment banking, where it just seems like the U.S. banks have just dominated. And I know there's a lot of reasons why structurally, but this one just feels like a part of it. So we want to get right into it now. Tom Metcalf, finance editor for Bloomberg News. He's in our London office. Tom, what you guys find? Are American bankers really coming back more to the office more frequently than the Europeans?
Yeah, it's a very, very clear trend, actually. So what we did, we went back, looked at the biggest 15 US and Canadian banks, and then also the biggest 15 European. And the split basically simplifies down to it's about 3 days a week in Europe compared to 4 days a week in the US. And of course, in the US, there's a lot of very notable examples who are back fully to 5 days, right? The JP Morgans, the Goldmans. So I think it's been a really interesting split. And like you say, it's kind of part and parcel of this divergence really between particularly the US banks and Europe, in that, you know, one of the theories going out, there's lots of reasons why this is happening, but certainly one analyst was saying, you know, one element is the fact US banks are just that much more profitable, and thus they sort of have almost like a little bit more leverage over their employees to effectively go, no, it's going to be our way or the highway, is what Mike Mayo told us. But yeah, as you say, it's one of those stories where, I think anecdotally that was the kind of clearly the sense, but it was quite startling to see it kind of, when you really dive into the data, go, oh yes, it's really basically almost two different strategies, with, broadly speaking, the Europeans kind of viewing it as almost like employee retention tool, and US banks going, we don't care, we think the most efficient way to work is in the office, you're coming back in.
Well, you're kind of leading to what I wanted to ask, Tom. Is this a cultural thing? Is this also playing a factor?
Yeah, and there's obviously no one size fits all, right? But like broadly speaking, there's a little bit more of that, get-go attitude, etc. I'd say at Goldman, whereas the European banks, structurally, there's more retail banks in that space, or certainly investment banks, the capital markets is a bit smaller part of their business. So there's certainly a bunch of different things flowing through here. And, well, the other interesting thing was the academic research we took a look at the same time is not out there going, if you bring everyone back to the office, you necessarily get better stock market performance or even better financial performance. So it's very much, I think, cultural is probably what's driving this, the tone from the top. Someone like a Jamie Dimon, probably the most outspoken executive on this, very, very keen to have everyone back in the office. And then on the flip side, Bill Winters here, who runs Standard Chartered, he's literally taking the opposite tone. So he's just effectively going, look, we believe our employees can make the right decision for their particular teams, and Standard Chartered is a fascinating example of everyone we spoke to. They basically said they don't even have a specific mandate at all. They just truly are sort of decentralizing this and just telling people that there's no policy, just make sure you do what's right for you.
Wow, that's interesting. And I wonder, I'm hearing stories that, back to work schedules and requirements may be used as a recruiting tool to attract and retain talent, i.e. Citigroup. I know Jane Fraser, the CEO there, she thinks it's a recruiting tool for Citi because they're only at 3-day mandate. Are other banks thinking that way?
Yeah, exactly. It goes to show, it's not like kind of a universal monolith here. Like, you go through the US banks and there's a bunch of variety, and Citi's probably maybe the most interesting example, because as you say, it's got that, it's going through a big restructuring, and as part of that, it's offering a bit of flexibility to its employees. Some people think because, that helps retain talent who might otherwise, look further afield, but they can go, well, look, if I'm at Citi, I get way more flexibility, it fits my lifestyle, or it gives me that ability to work from most places. So it's really fascinating, and I think you kind of almost have to go case by case, but broadly speaking, still, if you're looking at a US bank, you can expect a little bit more strictness around RTO.
Hey, Tom, before you go, is there anything that surprised you when you were doing this research where you were like, I didn't know that, I didn't think that was possible?
I think the biggest thing was like, how has it been 5 years since COVID?
Okay.
I was just like, I didn't realize it's been half a decade already. And I think, look, I think that's the sense of, this is still very much a work in progress. And I remember writing about it, during the pandemic and beyond. It was very much felt to be this kind of big philosophical debate about, the future of work. And, I don't think anyone's actually reached a satisfactory argument, I think, I think basically banks have settled into kind of where you think they would. Of course, the JP Morgan, Goldman are basically going, that was all nonsense, let's come back. And I guess in some ways it's just that the firms are living up to their stereotypes, right? Like, it's kind of the classic, we're in August in Europe, guess what, everyone's working from home and stuff like that.
Tom, great article you and your team did. Tom Metcalf, finance editor for Bloomberg News, joining us from our London offices here. When I think back on my 30-year career in Wall Street, great career, very happy. But it all comes down to just the people.
Yeah.
It's just the people. Those are my memories of Salomon Brothers. It's people. Members of First Boston, it's people. And you form those relationships by, I don't know, doing all-nighters with these people,
right.
Cramming into flying here and there, just
yep.
working, grinding together. It's not on, I can't imagine it's the same on a Zoom call, but maybe I'm wrong. But that's just, I'm glad I did it my way, or that's how our business was set up back in the day.
Well, just changing.
Life, it all changes.
Yes.
So the kids, some of my kids are like, I'm not going back 5 days a week. I said, all right.
It's a different thought process.
Exactly.
It's true.
All right. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM channel 121, Access the world's only global audio business network, coast to coast, 24 hours a day. Stay with us. Top stories and global headlines are coming up in just a moment. Market's still a little bit heavy here. S&P down 7, the Dow down 134, and the NASDAQ down 115. And for Tom on the Upper East, 118,000 for Bitcoin. This is Bloomberg.
CBS News on the Hour, sponsored by ZipRecruiter.
I'm Steve Kathan. Cautious optimism from Secretary of State Rubio ahead of tomorrow's Trump-Putin summit.
We're hopeful. We want there to be a peace. We're going to do everything we can to achieve one. But ultimately, it'll be up to Ukraine and Russia to agree to one.
CBS's Nancy Cordes says Trump wants Putin to end the war in Ukraine.
You will see a meeting where it's just President Trump, President Putin, and their interpreters, and no one else. Then the meeting will open up, and their advisors will be involved, more typical for these types of situations. And then there's going to be a joint press conference, Trump and Putin, after the meeting wraps up.
In the Middle East, Jerusalem reporter Linda Gradstein says peace in Gaza seems far off as Israel takes some new steps.
For more than 2 decades, Israel has postponed construction on an open area of land east of Jerusalem called E1. But amid plans by several European countries to recognize a Palestinian state in the West Bank, Gaza Strip, and East Jerusalem, Finance Minister Bezalel Smotrich today announced plans to build 3,000 homes in E1, saying it will bury the idea of a Palestinian state.
Well, CBS's David Schechter has details today of a new climate report.
The American Meteorological Society's new climate report shows 2024 shattered records. Greenhouse gas levels, global temperatures, sea levels, and ocean heat all hit all-time highs. Glaciers saw their worst ice loss ever, and the ocean endured a record 100 marine heat wave days.
Florida is preparing to open a second immigration detention facility at a state prison in North Florida as a federal judge decides the fate of the state's holding center for immigrants in the Everglades known as Alligator Alcatraz. CBS's Michael Wallace tells us it looks like a meteorite may have hit a house in Massachusetts.
Jim Dolan says he and his wife were in their Gloucester townhouse at the time.
We just heard this bam, this pow, and I jumped up and I said, what the heck was that?
They found some strange rocks that smelled of sulfur on their deck and some damage to the corner of their house. Boston College geophysicist John Ebel believes it was a meteorite.
Every day there are meteorites coming into the atmosphere.
But he says the odds of one hitting your house are like winning the lottery.
Air Canada has begun canceling some flights and has plans to lock out flight attendants who threatened to go on strike Saturday. Mark Nasser is an airline vice president.
We recognize this is a difficult situation, and we deeply regret the impact that CUPE strike is having on our customers.
The main issue is money. The union rejected a 38% pay increase over 4 years. Wall Street, right now the Dow Jones Industrial Average is down about 160. This is CBS News. A kid's song that turned into an earworm is in the news.
And you thought you'd heard the last of this kitty ditty. South Korea's top court has thrown out a 6-year copyright claim against Baby Shark's producers. It's ruled against U.S. children's entertainer John Wright, stage name Johnny only, who who sued the Korean brand Pinkfong that turned the tune into a hit that went viral in 2016. Wright claims the music's his because he copyrighted his own version in 2011. Pinkfong insists it's based on a traditional sing-along. The South Korean court says Wright's version is too similar to get its own credit. Deborah Rodriguez, CBS News.
McDonald's Japan has canceled a Happy Meal campaign that included coveted Pokemon cards. Resellers bought them all up, took out the cards, tossed out the food. Steve Kathan, CBS News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
Producers start to feel the pinch. Welcome to the Thursday edition of Balance of Power. As another round of data show wholesale inflation rising by the most in 3 years, raising new questions about whether higher prices are soon going to land on you. We're going to talk about this, gauge the risk with Bloomberg's Ed Harrison, author of the Everything Risk newsletter. Edward will be with us in just a moment. President Trump talking tough ahead of the big meeting tomorrow with Vladimir Putin. We're only hours away from the summit, and we'll get the latest on this. New information coming from Bloomberg's Michelle Jamrisco a bit later this hour. And Governor Gavin Newsom says he's going all in on redistricting. Our eyes on California and Texas with our political panel straight ahead. Bloomberg Politics contributors Jeannie Shanzano and Rick Davis with us. Now it's PPI Day. Let's start with Wall Street. Charlie Pellet has the numbers in New York as we sag our way through this Thursday. Charlie, how's it look?
Well, right now, lower across the board. Joe Matthew, happy Thursday. Not so happy on Wall Street. Stocks retreating from a record, that record-breaking run in U.S. stocks, taking a breather after a pickup in inflation lifted bond yields and the dollar. Traders pairing bets that the Fed will be cutting rates next month. So here's where we stand. S&P right now down 13, drop there of 0.2%. Had been higher earlier in the session, 64.53 where we stand on the S&P. We've got the Dow down 182, drop there of 0.4%. NASDAQ down 43, a decline of just about 0.2%. The Mag 7 index, so holding on to a gain. That's index up now by 0.2%. Russell 2000 hard hit small cap shares selling off down 1.8% on the index. The 10-year 4.29%, the 2-year 3.74%. Spot gold at $33.39 the ounce, down 0.5%. West Texas Intermediate crude oil up 1.9%, $63.82 a barrel. And Bitcoin now down by 4%. Bitcoin tumbling to just over $118,000. So bottom line here, we did have a hotter than expected PPI report. As for the broader economic outlook, Jim Bianco is the president of Bianco Research.
I think that the real growth in the economy is going to slow. I don't have it going anywhere to like a recession. I also think the other thing you got to keep in mind that gets very little discussion is the closing of the U.S. border, because most of the population growth of the United States comes from immigration, whether it's illegal or legal, and that's going to dramatically slow, and that's also going to slow down the economy as well.
Jim Bianco of Bianco Research interviewed this morning on surveillance. Tapestry shares are plunging down 14.6%. Tapestry's brands include Coach and Kate Spade. Its annual outlook for a key profit metric missed analyst forecasts due in part to tariffs, a sign that Wall Street is still adjusting to the full cost of duties on American firms. Again, Tapestry right now, the stock is plunging. TPR on the ticker, it is down by 14.6%. Recapping, stocks lower, S&P down 0.2% with the 10-year right now at 4.29%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. And Balance of Power begins right now. Back we go to Washington once again. Your host, here he is, Joe Matthew.
All right, Charlie, always a pleasure to have Charlie Pellet along for the ride. He's a big part of this program because we keep tabs on the connection here between Washington and Wall Street. And we'll get back to Charlie in about 20 minutes, even less than that, for the latest on the Thursday trade. It's PPI day. Could be worse. We're sagging a bit coming off of very recent all-time highs, so we don't want to paint a picture like Wall Street is freaking out about the data, but it is raising questions here about the trajectory of inflation. Different questions every day as we kind of find our way with a new wrinkle here, filling in the blanks on the way this is starting to take shape here. We're going to talk to Edward Harrison about that in a moment. Thanks for being with us on the Thursday edition. You made it to Little Friday here on Bloomberg Radio, satellite radio channel 121. You can watch the radio on TV by going to Bloomberg Originals or YouTube, where I encourage you to search Bloomberg Business News Live. It's the coolest thing we have going. All of our shows from Washington to New York throughout the day. You can pause it, back it up. When you hear something good, there's nothing like it on YouTube. An hour from now, we may be walking you into the Oval Office. At least that's what the White House is telling us. Could be the big event of the day here for the president. He had his intelligence briefing a little while ago, and he's set to, quote unquote, deliver remarks. And we've gone through this before. That could mean a lot of things. And when they bring the pool into the Oval Office, featuring Lindell TV today, I just had to take a look at the pool assignment. Anything could happen, right? Questions start popping, and I suspect we are going to hear about the big meeting tomorrow. And we'll talk more about that later this hour with Michelle Jamrisco. The president will be wheels up first thing in the morning to Alaska to meet Vladimir Putin. This is going to be something, and we're going to have special coverage throughout the day on that. So we begin with the PPI. You've been hearing the story here, warming up, overheated, whatever term you want to use. And Scott Bessent, the Treasury Secretary, may be rethinking his thought of 150 to 175 bips interest rate cut in September. He says we should have at least 1.5 points lopped off the top. That was yesterday on Bloomberg. Remember, we talked about this following his great interview on Bloomberg Surveillance. Showed up on Fox Business with a slightly different tune today. Listen.
I didn't tell the Fed what to do. What I said was that to get to a neutral rate on interest, that would be approximately 150 basis point cut. I did not call for them to get there. The other thing that I said was that perhaps because they had bad BLS data in June and July, that perhaps a 50 basis point cut in September was warranted.
Okay, we'll see about that. He's not telling them what to do. It's about the neutral rate. Of course, the market, by the way, it's not just like Scott Bessent is some sort of outlier. The market's been pricing in basically what he suggested yesterday, 1.5 points. Maybe not so much today. As I point you to the Everything Risk newsletter, the great Edward Harrison writing that for us here at Bloomberg, bringing us back to the president's Truth Social post about Goldman Sachs a couple of days ago. Edward, maybe Mr. Solomon is not going to just start working as a DJ, as the president suggested. It's great to have you. Welcome back. Your newsletter touches on the big concern right now in Washington and on Wall Street. And the question is, how long are producers going to keep carrying the weight here for consumers?
Yeah, that is the question, Joe. I think that Goldman, they laid it out pretty well. Mm-hmm. They said that it's about less than a quarter now, but at some point it's going to be about 2/3 that they're going to pass on to the consumers. Mm-hmm. And so we're seeing now that inflation that's hitting them is showing up in the statistics, and likely, therefore, will increasingly show up for consumers in final demand.
PPI feeds PCE. What will that tell us when it comes out, knowing that's the Fed's preferred gauge?
You know, it'll be interesting to see how the investment banks mark up their numbers, but clearly the number has to be higher than we had initially anticipated. So the numbers are not unfavorable for a 25 basis point cut, but they're completely unfavorable for a 50 basis point cut, which is what Scott Bessent was talking about. You know, the market actually, there were bets that were being placed for 50 basis points. I think that's off the table now, and now it's a question of, do they cut it all, or do they go 25?
Wow, do they cut it all?
Yeah.
You don't want to be around the White House in September if they don't cut it all. I want to put you back on the August 12th, Truth Social, the post that you mentioned here about Goldman Sachs. The president said it has been shown that for the most part, consumers are not even paying these tariffs. It is mostly companies and governments, many of them foreign, picking up the tabs. But David Solomon and Goldman Sachs refused to give credit where it is due. They made a bad prediction a long time ago, he says, on both market repercussion and the tariffs themselves. And they were wrong, just like they are wrong about so much else. I think David should go out, get himself a new economist, or maybe ought to just focus on being a DJ. Now, Peter Navarro sat in that very same chair that you're in a couple of days ago and made a similar point. He said foreigners are picking up the tab for inflation. Is there any truth to that?
You know, there is some truth that the likes of Walmart, they have pricing power with their lines, the people who they're sourcing from. However, it isn't true that the overwhelming majority of the tariffs are going to be taken up by foreigners.
Yeah.
It's going to be a combination of the suppliers, the companies, and the consumers. And now that we actually have a policy, we have a framework in place. 15% as the baseline. Companies can work with that, and they're now going to increasingly pass that through. This is what Goldman Sachs was saying.
Yeah.
And this is what we're starting to see.
So they probably won't get a new chief economist.
No,
I guess,
they're
Edward, I
not
thought
going
maybe you had something going there. They'd be lucky to have you. I have to mention IPO. We got another IPO today. This has been a daily thing here lately. The new issues market is happening. MIAX, Miami International, just opened $31.65. The IPO price was at 23, so we've already got a nice bid underneath the stock. It's up 34%, 33% right now from the IPO price here. Yeah. BOP, BO, IPO. We're specializing in IPOs around here. Producer James tells me every morning what's about to go public. We don't buy the IPOs because, well, you can't do that when you work in this business. But there you have it. Miami International, 31.65. We'll keep tabs on it, 31.10 if you're playing along in your home game. That's a pretty nice 35% pop, Edward. I'll tell you what, if there's everything risk, people are embracing it at the moment, and that's kind of what I want to ask you about. When you consider the risk that you're describing with where we could be in 6 months, it's almost impossible to gauge. What do you make of the market at basically an all-time high?
You know, I think that the market has discounted all tariff news until it affects the economy. I mean, when we look back and we think about what's happened, we had a spike in the VIX to 40, and that was, you know, all-out panic. And the reason is because stocks are fully valued. Bank of America, they had a survey recently. 91% of fund managers said that they think that U.S. equities are overvalued. So it's very difficult to go higher on those expectations unless you leg into it as a result of the economy. If the economy falls apart, then you have a big problem. And that's what we see. And the market is going to boil over. It's going to continue to drift higher until we have any sort of hiccup that suggests that you know, the economy is about to fall apart.
Drift higher is an interesting way to put it. And you know, we're looking at a VIX right now of 15. The S&P 500 is down 0.25% in this environment. Is pretty remarkable. So the investor's saying, call me when it matters. Exactly.
So it won't matter unless it affects the overall economy. I think that what we saw with March 2020, and you know, the ability of the Fed and of policymakers to paper over cracks in the economy. Even then, when we had a very short recession, stocks were able to power higher after that. And so that's an ingrained behavior. It's almost like Pavlov's dogs, who understand that this is where things are. Until bad things happen, they're going to keep on going higher.
You're great. Edward Harrison. Look for the Everything Risk newsletter to follow up on the conversation we're having. Always great to have you, Edward. Thank you so much for the insights as we watch Wall Street and Washington together. They cannot be separated these days. We'll look ahead to tomorrow's meeting with Putin next on Bloomberg.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. Miami International, the exchange operator, off and running, and the stock is up right now, advancing by 38.3%. Miami International specializes in options, futures, and derivatives through its MIAX exchanges. Again, first day of trading opened minutes ago. You heard Joe give the initial numbers. Shares right now advancing by 38.2%. This on a day when the Dow, the S&P, and NASDAQ are all lower. A record-breaking run in stocks taking a breather after a pickup in inflation-lifted bond yields and the dollars. Traders are also paring bets that the Fed will be cutting rates next month. Again, the S&P down 13 now, 64.53, a drop there of 0.2%. We do have the Dow down 187, down 0.4, and NASDAQ on the composite index down 0.2%. The NASDAQ 100 index also down 0.2%. But on a down day for the rest of the market, our Mag 7 index is advancing by 0.4%. 10-year right now 4.29%, with the 2-year 3.74%. Gold down 0.7%, 33.32 the ounce, and West Texas Intermediate crude up 2%, 63.92 for a barrel of WTI. Peloton down 2.6%. Peloton Interactive is planning its biggest product upgrades in years, according to people familiar with the situation, including refreshed hardware, new accessories, and artificial intelligence, set to be introduced as early as October. Again, first day of trading for Miami International Holdings. It is up now by 38.4%. Balance of power continues right now. Back we go to Washington. Once again, your host here is Joe Matthew.
All right, Charlie, many thanks. Watching Wall Street and IPOs once again today. We'll keep tabs on MIAX for you as we get our way through the hour here, and we'll check in with Charlie again about 15 minutes from now and see how things are going. At this time tomorrow, the stakes will be high. We're going to have our eyes on Anchorage, Alaska, as President Trump prepares to sit down with, and it might well be right around this time, a little bit later than this tomorrow, when he's face-to-face with Vladimir Putin. We know it's Anchorage. We know it's the Joint Air Base in Anchorage. We don't know a lot else about the actual arrangements and what the optics are going to be, but we'll, of course, have special coverage for you. And now introducing the idea of a bilateral news conference that's coming from the press secretary now. I don't know how they know this in advance, but it does appear that Donald Trump and Vladimir Putin will together face the media, and we'll bring that to you live when it happens. It's been quite a few years since they've done this, and the stakes couldn't be higher for either side. Interesting idea, just to throw one more log on the fire here. The president was on the radio this morning talking to Fox Radio and floated the possibility of President Zelensky of Ukraine showing up in Alaska, maybe joining this little powwow. Said it would be, quote, by far the easiest way for the three leaders to hold talks. Trump also cautioning the meeting with Putin could go poorly. He put the odds of failure at 25%. It's like Nathan Dean is in here. Now, he was asked about the big meeting yesterday. You heard it, saw it live right here. In fact, on Balance of Power, the president went to the Kennedy Center, to roll out the nominations. Sly Stallone, Kiss, etc. Also asked about war and peace. Here's what he said.
If the first one goes okay, we'll have a quick second one. I would like to do it almost immediately, and we'll have a quick second meeting between President Putin and President Zelensky and myself, if they'd like to have me there. And that would be a meeting where maybe it could be absolutely work.
Will Russia face any consequences if Vladimir Putin does not agree to stop the war after your meeting on Friday?
Yes, they will. Yeah.
What will the consequences
There will be
be?
consequences.
Sanctions, tariffs?
There will be, I don't have to say, there will be very severe consequences.
Severe consequences? I thought this was a feeling out kind of a thing. To get a sense of what was on his mind. Agree to meet again. I'm having trouble following the beat on this because we keep hearing that they're tamping down expectations, but talk like that makes you wonder. That's why we thought Michelle Jamrisco could shed some light on things. She's with us right now, Bloomberg White House National Security Editor. Great to see you, as always.
Great to see you, too.
We don't know exactly what we're in for tomorrow, but what's with the double talk on the stakes going into this meeting?
Yeah.
Is it a ceasefire or is it a
a feel me out session.
I think you're seeing where Trump has to really strike this difficult balance. He has been burned before by Putin, and his frustration has been growing over the past few months. I mean, during the first term, he had meetings with Putin. He showed up in public with Putin, and he was blasted by both parties in Washington for some of the ensuing remarks that came out of that. So I think there's been this long-held, obsession that Trump has with, he has to beat this guy in some way. But he's coming into this meeting, and as you remark, he's downplaying expectations because he knows the stakes are high. He knows that it's going to be very difficult to get something substantive out of this quick meeting. Yeah. So he and his administration officials all week have been talking about, well, this is on Europe and Ukraine also to eventually be part of the conversation. This is just a feel-out meeting, as you mentioned. We'll have to hear what Putin is willing to do, all of these sorts of things. And then in the meantime, also blaming media for, overplaying certain aspects. So it's, you can see this sort of campaign to set up the meeting as this is Trump's earnest effort to be that president of peace, to figure out what's going on here. He wants to end the war, but it's not on him if things go awry. So we'll see how that plays out.
See if we can have both. That was a blast from the past. We were just showing tape of their meeting in 2018, and that was a tough one for Donald Trump. There they are again. That was the moment as he was asked by reporters about intelligence surrounding the 2016 election, that it wasn't Russia, and that he took him at his word. Folks who were in the room, including John Bolton, cast that as one of the worst days of the first Trump administration. Are you surprised they're doing this again? We thought Donald Trump would come out alone after this meeting, but they're going to do a bilateral.
I don't think so. I think it really fits into, and this is what we've been hearing all this week too, it fits into his sort of transactional diplomacy, his personal diplomacy. What we've been hearing from Marco Rubio all week, as well as this morning, is, this is a president who values the phone calls. He's had 3 or 4 with Putin recently, but also sees the in-person meeting as something that can carry it a little bit further. Successive presidents, I mean, we can think back to, George W. Bush talking about looking Putin in the eye, and others, looking Putin in the eye and trying to figure him out. Yeah. Successive presidents have not been able to kind of crack this leader of the Kremlin. And so we'll see if Trump can take it any further, but he does think he can get somewhere if he's there on American soil with Putin side by side.
I think we can agree, though, that while it's being framed as a win for Putin to get this meeting to begin with, it's an extra layer to have a joint news conference like that. You're going to have 2 podiums set up there. It puts him on the same level as Trump while Zelensky's watching this from Kyiv.
Yes, but Joe, you used the word floated earlier, and I want to underline that because there have been a lot of things being floated this week.
The Zelensky thing, you mean?
And the Zelensky, but also the joint news conference that you mentioned.
So don't take it to the bank.
Well, we heard from Caroline Leavitt that this is going to happen, but Trump in that radio interview that you were citing also seemed to not be fully committed to it being a joint news conference, and maybe it was just going to be himself. So, and then there's all these questions around, will he call the Europeans afterward? He joked in that same interview, if things don't go well, I'm not calling Zelensky, I'll just go home. And, and he said, maybe I'll call Fox News instead. So, there is some sort of lighthearted, banter about what may ensue, but there is a tremendous amount of uncertainty, and even on the part of Trump and Putin, they're not really, I don't think they're really sure what will come out of it either. And they want to play this game.
So there's a certain element of improv here.
Yes.
We're talking about 25% chances of failure.
I'm surprised it wasn't 50.
50, well, I guess why not? Lower the bar. Yeah. Tonight, tomorrow, you're going to see strings of cuts of him, video of him talking about solving this on day 1.
Right.
Well, you can see it coming. We'll have one at 5 o'clock. I'm sure, and there's a reason for that.
Right.
At one point, he said he was kidding about that in an interview with Time Magazine. But is this not haunting him?
It's nagging at him, and he's obsessed with all of these conflicts. He's continuously, you hear him list the conflicts that he's helped end recently, 5 or 6, he says, in the last few months. Always tied to these sort of negotiations around what can America get out of it, trade deals or resource extraction or the like. So this one has eluded him, and we heard this morning again from Rubio saying, this is a long war. This takes a long time to end. And by the way, again, pointing to the previous administration, it started not under Trump but under his predecessor, which is something that they want to kind of underline. Also, this wasn't our problem. it is our problem now, and we're trying to solve it. So we'll see if they can get anywhere.
As we spend time with Michelle Jamrisco here in Washington, I point you to the Kyiv Independent. Producer James put this in front of me. This is really interesting. Putin to present Trump with historical materials framing Ukraine as an artificial state. Now, this is coming out of Kyiv, of course, and in this case, Ukraine's Center for Countering Disinformation. But they say that this package will include geographical maps intended to justify Russia's territorial claims and ongoing military aggression in Ukraine. Vladimir Putin is hoping to move the needle here, too.
That's right. And it's hard to be surprised at anything that's coming out of both sides and what they might present tomorrow. But in addition to that,
Are they showing up with props? I mean, we're not going to see the meeting itself, but we'll hear about it.
Perhaps. Maybe we'll hear about it at the press conference if Putin attends. But it also just shows that each side, and Putin especially, is throwing the kitchen sink at this. I mean, aside from the territorial issues, which the U.S. side has said needs to include Europe and Ukraine in the discussion eventually. They're also looking at economic benefits. They're trying to play to Trump, and Putin has been on this charm offensive the past 24 hours, talking about, well, maybe we'll talk about nuclear arms treaties and
how about that?
What did
you
economic
make of that headline?
deals. It's not surprising. Again, this is a man
trying to
who,
recall some Reagan spirit here.
Yeah, this is like a former
Nobel
KGB
Peace
guy,
Prize.
really knowing how to get at what his his counterpart wants.
Yeah,
I mean, I think this is what Trump wants to hear. What can you give me?
So he's going to
this?
be charming at the table. You're not the first person to suggest that. That's what you
I would think so. From everything, I haven't met Putin myself, but from everything we read and understand from history, I mean, this is going to be a further charm offensive with a lot of things that, shiny objects perhaps here and there, but also perhaps these earnest historical arguments that he believes deeply that Ukraine should be his.
We still don't know about staging here. We know it's at the air base. Have you heard anything in terms of optics, what the backdrop would be?
Well, I think for security purposes, the officials have been pretty buttoned up about that. I know our reporters who cover those agencies have been speaking with,
I'm sure they are.
the appropriate.
They never tell me anything, these guys in the newsroom. I mean, are we serving sandwiches? You wonder what kind of accommodations and how welcoming we'll be to a man who's seen as a pariah around the world.
Well, I think we'll have further details today on that. But yeah, if you can imagine, Anchorage is not the sleepy place that maybe sometimes it usually is.
That's for sure.
And it's bustling.
The advance must be wild
already.
up there right now with
sure.
both sides, right? I suspect there are Russians and U.S. advance workers bumping into each other in Anchorage this
on
weekend.
top
It's pretty wild.
Schlubs like us in the media who are trying to figure out how to cover it.
That's right. We're all coming. We're going to have special coverage, I'll remind everybody, tomorrow. It's going to be a long day tomorrow, and we could find ourselves here on Bloomberg Radio at 10, 11 o'clock at night by the time, did I just say that out loud? By the time this is done, because that's what we're here for, and this is about as important as it gets. Michelle Jamrisco, always love having you on. Thank you.
Great to be here.
And we'll
Thanks,
be looking
Joe.
for Michelle's reporting and editing, of course, as this all unfolds here on Bloomberg. We'll assemble our panel next. Rick Davis and Jeannie Shanzano are with us here on the Thursday edition of Balance of Power. I'm glad you're with us, too, on Bloomberg Radio, satellite radio channel 121. Get us up on YouTube because the president will be speaking, well, they tell us at least a half an hour from now, 1 p.m., delivering remarks from the Oval. Search Bloomberg Business News Live. I'll meet you on YouTube. Stay with us right here on Bloomberg.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. A record-breaking run in stocks is taking a breather today after a pickup in inflation. The S&P's down 15 at 64.50. Still close to a record, down today by 0.2%. The Dow lower by 203, down 0.4%, while NASDAQ is down 38. For NASDAQ, a decline right now of 0.2%. On a down day for the rest of the market, the Bloomberg Mag 7 index is pushing higher, up by about 0.3%. 10-year at 4.28%, with the 2-year currently yielding 3.73%. Gold down $22 the ounce, 33.33 the ounce, down 0.7%. West Texas Intermediate crude up 1.9%, 63.82 a barrel on WTI. And Bitcoin now down 4.2%. Selling off to 117,846. Wholesale inflation up the most in 3 years last month. That's got investors dialing back bets on a rate cut next month. Producer prices in July rose 3.3% from a year ago. Economists surveyed by Bloomberg were looking for 2.5%. Neela Richardson is chief economist at ADP and a Bloomberg contributor.
This inflation surprise is something that should be considered with a whole bunch of other data that was leading up to this point showing no smoking gun when it came to tariffs and inflation. So the big picture is it's an economy that continues to perform. It's just not as dynamic as we're used to seeing.
ADP chief economist Neela Richardson. Costco Wholesale has decided not to dispense the abortion pill mifepristone at its more than 500 pharmacy locations, a decision hailed by a group of faith-based activists who urged the retailer to avoid selling the drug. Costco shares, they're up today by about 0.7%. First day of trading for the exchange operator Miami International.
Close to on time when he speaks, of course, we'll bring you there. Unclear exactly what the topic is going to be, but we're counting down to the big meeting. He may well be in Alaska by this time tomorrow, as the president plans to fly away early tomorrow morning to meet with Vladimir Putin in Anchorage. And I want to point you to a conversation I'm really looking forward to in our second hour, also at 1 p.m., because, well, I guess that event will probably start a little late. We're going to talk to the governor of Alaska, back with us on Balance of Power. We've got a thing going here. Mike Dunleavy is going to join us to talk about preparations and exactly what is happening right now. There's got to be a scene right now in Anchorage. Limited hotel rooms, a small rental car market, I read on the Bloomberg. Vehicles and other assets have to be flown in or driven in some cases, from other parts of the state and the country. Motorcade SUVs are arriving from the lower 48 on cargo planes. Imagine being the real estate agent who got a phone call from the Secret Service. And I'm talking about this because Miles Miller has a great story out today on the Bloomberg. Secret Service rushes to make Alaska City safe for Trump and Putin. Yeah, we're the host nation, which is why the Secret Service actually has to protect Vladimir Putin as well, along with the whole production, which is going to take up the better part of the day tomorrow in Anchorage. Great story, and we'll talk to Miles about this on the late edition. You get a phone call from the Secret Service. Most of my short-term rentals are booked, but I did manage to put some of them into one home. Pack your sleeping bags for this one. The advanced crews are up there already, and be interesting at dinner this evening in Anchorage to see who's floating around and what country they're from. Looking forward to that. Mike Dunleavy, the governor of Alaska, coming up in about 15 minutes as we turn our attention to what's happening today in California. Yeah, not Texas, but California. There's going to be a news conference a couple hours from right now. Gavin Newsom set to kick off Democrats' reciprocal effort to gerrymander. It's apparently happening here as Texas Republicans move forward with their plan to add 5 seats. Now, we've talked about this until we're blue in the face, no pun intended, with our political panel. I think we've talked about redistricting every single day here for the last 2 weeks, right? We're going to do this again right now because as California gets involved, the cycle begins. Some think it would be a spin cycle that involves maybe even up to a half a dozen states. Add Indiana, Missouri, Florida. What's the congressional map going to look like
by the time this whole effort is done. There they are on YouTube and with us live on the radio, Bloomberg Politics contributors Rick Davis and Jeannie Shanzano. Rick is our Republican strategist partner at Stone Court Capital, and Jeannie is Senior Democracy Fellow at the Center for the Study of the Presidency and Congress. You ready for this, Jeannie? I don't think you wanted to see it happen, but it looks like Governor Newsom is going for it.
He absolutely is. And, you know, I have to say, as a political scientist, there's nothing we like more than talking about the boring old issues of redistricting. So I've been in my glory the last few weeks. Thanks so much to Governor Abbott and President Trump. Yeah, he's going to go for it, despite the fact that we've seen polls which suggested it is widely unpopular. And that's something I don't think any of us are surprised by. People don't trust politicians. They certainly don't want them drawing districts. For Californians, twice now they voted for an independent commission. Quite frankly, I was surprised the numbers weren't even higher against it. And yet, when you look at and talk to people in focus groups and elsewhere about whether they should do this because the Republicans are doing it in Texas, they sort of shrug and say, this is like an arms race. One does it, the other has to do it. So it's going to be interesting to see what voters feel about this in the end if California goes forward with it.
It's interesting because apparently California doesn't really want to go forward with it. This new poll that I'm reading about here is Citron Center poll in Politico today. Rick Davis shows voters in California prefer keeping an independent line drawing panel to determine the state's House seats by nearly a 2-to-1 margin. Is this a mistake for Newsom?
Well, you know, look, I mean, there's a generic issue here, which is voters really dislike their own members of the legislature, right? So it's not like they want to give them more power, especially California voters, where the legislature has been usurped by all these ballot referendums, whether it's making tax decisions or drawing lines. A commission's always going to beat a legislature, but this has to be done through a campaign. They're going to have to run a campaign to convince voters that this, you know, retribution to the Texas redistricting is worth it for them. And, you know, frankly, I think it's going to be an interesting campaign because if I were running the Republican Party right now, I'd say, let's get in there and mix it up with those guys, right? I mean, like, this is a good thing for Republicans to try and run a campaign against Newsom because it's his credibility that's at risk here, right? If Newsom stumbles on this, it will hurt his chances of being the nominee of the party.
Okay. Well, you've talked about dummy mandering, not to be confused with gerrymandering, Rick. And I'm wondering, Jeannie, if you see that as a risk, just like it is in California. Republicans can't count their chickens here until we actually have these seats. They assume they're going to be Republican. Should Newsom assume that they'll all be Democratic?
No, and that's the thing. This is a risk. You cannot assume, because let's not forget, no matter how well you try to draw these districts and how much data you have, you still have to run a campaign. You still have to have candidates. There's still a whole environment of issues going on, including the passage of a most unpopular big, beautiful bill. And so, you know, we look in Texas and we see that Republicans are banking on the fact that Donald Trump will do as well there as he did in 2024. But you look back just one cycle earlier in 2020, Joe Biden won many of those districts, and Trump, the ones he did win, he won by a lesser margin. Same thing goes on the other side with California. So this is full of risk. You know, they are trying to play this game. I think they might be better off putting, you know, redistricting aside and focusing on passing bills that are popular and putting up candidates and running campaigns that are well-funded and popular. So it can be seen as a waste of money if you look at it from that perspective.
It's been quite an exercise watching Gavin Newsom on Twitter this week, Rick, the last couple of days, including, well, just one today, right after we woke up this morning, we saw this one. Your favorite governor, Gavin Christopher Newsom, he's writing all of these as if Trump was writing them, and they're in all caps. Offered the best, most amazing deal in history. Stop rigging Texas maps, and California won't make ours more beautiful. Sadly, but no surprise, Donald was too weak in Perren's little hands to even write me back. What's going on with the Gavin Newsom experiment, Rick Davis? You've run presidential campaigns. Is that all this is about?
Look, it's all part of the Gavin Newsom campaign for president in 2028. it's a dangerous game. Donald Trump has a history and a personality that can sustain this kind of demeaning of people. He's proven it over time. When Republicans were running against him in 2016, some of them tried the same thing, and it was a disaster for them. And so I think there's a big caution sign out there for Gavin Newsom. And yet, at the same time, the one thing the Republicans in Texas are doing is unifying the Democratic Party around Gavin Newsom. And so, you know, there's a situation where the Democrats were in complete disarray until the Republicans in Texas decided to start playing with maps.
How does this hit you, Jeannie, this kind of talk? They're funny. As many know, he said in a different tweet, Donald Taco Trump, author of Art of the Deal, a book he should return to the library, just missed the best deal in history. He always chickens out. Tariffs, China, but even a chicken should know a good deal when he sees one. Is he making you laugh? Is he making you take him seriously as a presidential hopeful?
Yeah, that one was to me a bit cringy. You know I'm not the audience for it, but, you know, I think there's a danger for Gavin Newsom, and Rick just talked about it. And I would just add that people want authenticity. And if this doesn't come off as authentic, and certainly just look back at our current Secretary of State, Marco Rubio tried this in 2016, not authentic at all. You need to be who you are. That is what people want. So Gavin Newsom trying to be Donald Trump probably isn't going to resonate with too many Democratic voters. And I think that's the danger here. So he's going to have to watch out for that. He should be Gavin Newsom, and he should run as the person that he is, and to see if that resonates with voters. So I think in this regard, I would say Pritzker in the 2028 sweepstakes so far is doing a slightly better job in that regard, clearly running, but not necessarily trying to be Donald Trump.
Well, it certainly reinforces the idea that the next presidential election begins the day after the election. There's J.B. Pritzker right now, surrounded by Texas Democrats who, of course, went to places like Chicago, and it looks like they're coming back home, which is why we're talking about this. It'll allow Republicans to move forward with the plan in Texas. Guys, we're going to be hearing from the president, the actual president of the United States, presumably 8 minutes from now, although these are frequently not on time when it comes to White House events, as we realize he's going to be in the Oval Office to deliver remarks, as says the presidential schedule today. We have really no real sense of what he's going to be talking about. And when we consider the importance of tomorrow, Rick, what will you be looking for and listening for when Donald Trump starts his address, whatever he's talking about, from the Oval Office? He's about 24 hours away from sitting down with Vladimir Putin. What will you be looking for when it comes to his demeanor and his posture today?
Yeah, look, I mean, a kind of angry Donald Trump is a good thing if going into a meeting with Vladimir Putin, right? If he's happy and playing the deal game, then it's probably advantage Putin, disadvantage Zelensky. If he's mad at Putin for gaming him, and I mean, like, I hope someone in the White House has explained to him that all this flowery language that Putin's pushing out there about giving him an arms control deal, and, you know, we got all this economic stuff we could do together. You know, don't pay any attention to that war on the Ukraine border. You know, think of us as a partner in power. You know, I hope he actually reacts to, like, what kind of dummy do you think I am? Because one, it blows Putin's strategy, and two, it puts him in the right frame of mind to go into that meeting. Because if he's going in just to say, I have to come out with a deal, then it's likely to be a bad deal for Zelensky.
Really interesting. Jeannie, we only have about 30 seconds left here, about a minute, I should say. The president floated the idea on Fox News Radio today of Zelensky taking part in this meeting in Alaska. Is that just part of the ropey-dope going into this thing, or could we actually see the Ukrainian president there?
Certainly Zelensky wants to be there. I can't imagine Vladimir Putin has changed his mind about sitting down with the three of them, so I doubt it happened.
Yeah. All right. They'll be back with us in our second hour, as always. Bloomberg Politics contributors Jeannie Shanzano and Rick Davis the best we have and the best analysis as we lead up to this very important session tomorrow. We're going to talk more about it with the governor of Alaska coming up at the top of the hour. Mike Dunleavy making his return to Balance of Power right here, only on Bloomberg.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
Counting down to the summit in Alaska. Welcome to the Thursday edition of Balance of Power on Bloomberg TV and radio as President Trump prepares to meet with Vladimir Putin tomorrow in Anchorage. We're going to look at the logistics ahead of this meeting and discuss with the governor of Alaska, Mike Dunleavy, making his return to the program just a few moments from now. We'll have analysis from Bloomberg Politics contributors Rick Davis and Jeannie Shanzano, and we expect to bring you live remarks from President Trump. We'll bring you live into the Oval Office
as soon as he starts talking this hour. And we start, as always, with a look at Wall Street. Stocks sagging a bit today on this PPI day. Charlie Pellet takes a look from world headquarters in New York. Charlie?
Thank you very much, Joe Matthew. Indeed, as we come to where we did have NASDAQ up briefly, but right now looking at little changed on the NASDAQ Composite Index, swinging between gains and losses. We got the S&P keeping it all in context, lower by 6, down 0.1%. Dow Industrials down 170 right now on the Dow, a decline of 0.4%. That record-breaking run in stocks taking a breather after a pickup in inflation lifted bond yields. Right now, the 10-year 4.28%, with the 2-year currently yielding 3.73%. Spot gold is declining by $21 the ounce, $33.34, a decline of 0.6%. West Texas Intermediate crude up 1.8%, $63.78 a barrel, and Bitcoin now down by $5,000 a token with a $117,000 handle, $117,855 on Bitcoin. That is a drop of 4.1%. Coming up after the close of trading today, we will be hearing from Applied Materials. Ahead of that report, Applied down by 0.6%. Peloton Interactive said to be planning its biggest product upgrades in years, including refreshed hardware, new accessories, and AI to introduce as early as October. Peloton down by 2.7%. And it is the first day of trading for Miami International Holdings, another IPO up by 30%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie, many thanks. Charlie Pellet will have more about 20 minutes when we keep tabs on the markets here. Live from Washington, thanks for joining us on Balance of Power on Bloomberg TV and radio. We're standing by to hear from President Trump. He's set to speak any moment now from the Oval Office, delivering remarks is all we've been told from the administration. We're not sure what the topic will be, and it could include many. As the press pool gathers in the briefing room, they'll be called upstairs to the Oval at some point soon, and we'll bring you in the room with them for this conversation with the media. This, of course, all coming just a day before President Trump meets with Vladimir Putin, as the world's attention shifts to Anchorage, Alaska, where it's not only political drama, but logistical drama ahead of this meeting. A remarkable story here on the terminal from Miles Miller. When the Trump administration announced this meeting only a week ago, the lone agent assigned to the Secret Service post in the last frontier began preparing to host hundreds of reinforcements in the days ahead. The agency's mission was unusually complex. Consider this. As the host nation here, the Secret Service tasked with protecting both the American and Russian presidents at the same time. We're going to talk in a moment with the governor of Alaska after Donald Trump was asked about this meeting yesterday in his news conference at the Kennedy Center. Here's what he said.
If the first one goes okay, we'll have a quick second one. I would like to do it almost immediately. And we'll have a quick second meeting between President Putin and President Zelensky and myself, if they'd like to have me there. And that would be a meeting where maybe it could be absolutely work.
Will Russia face any consequences if Vladimir Putin does not agree to stop the war after your meeting on Friday?
Yes, they will. Yeah.
What will the consequences
There will be consequences.
Sanctions, tariffs?
There will be, I don't have to say, there will be very severe consequences.
Some pretty tough talk from the president, even as we've also heard him lower the bar ahead of this meeting, suggesting that it might be a feel-out session. We're not going to know until they get in there, and there will be a bilateral news conference afterward. We'll bring it to you here tomorrow night on Bloomberg TV and radio. But when we consider Alaska, as I mentioned, the last frontier, as the staging ground for peace talks, we have a great opportunity to bring back the governor of Alaska, Mike Dunleavy, with us on Bloomberg TV and radio. Governor, welcome back to Balance of Power. It's great to see you, and as I think I've made clear here, you had very little notice to put all of this together, so I understand it's been a busy couple of days. Is Alaska ready?
Oh yeah, Alaska's ready. We have the venue already selected. The White House has already done that at our joint base Elmendorf, Richardson, here in Anchorage. So it's going to be pretty secure. The president's going to land there, and they've got a lot of space for meetings, and so I think it's a location that works well.
Will you be greeting the president on the tarmac?
I'll be meeting with the president Friday morning briefly, and so yes, and we'll have probably a very brief conversation about things such as our Alaska natural gas line and other things happening here in Alaska.
Understood.
really incredible reporting here about the logistics going into all of this. Anchorage has a limited number of hotel rooms to work with here, a small rental car market. So we're trucking in all kinds of resources here, whether it's vehicles being flown in from the lower 48 or from other parts of your state. How much of this has been a logistical experiment for your office?
Well, again, most of this is being handled by the White House itself, and they're doing a great job. They've interfaced with us. They've interfaced with our troopers and city police here in Anchorage. And so the vast majority of this is being handled by the White House. It is tourist season. We're in the height of tourist season, so hotels are tight, cars are tight, as you mentioned.
Right.
But again, having this on the base alleviates a lot of issues. And so it's going to be on the base. Tourism will continue here. There's going to be a lot of reporters here, a lot of others with their eyes on this great state. So we're prepared.
Well, I should think that that's a pretty good thing for Alaska. You're going to be seeing all weekend. Lots of beauty shots of your state, I'm sure. And a lot of tourists will have stories to tell when they come home. We know the Secret Service is on the ground there, Governor, and I don't know to what extent you can answer these questions. Are there Russian agents in Alaska right now?
I don't know. I don't have the answer to that. That again, would be something the White House would know. But if there are, it hasn't been made known to us.
Interesting. As you mentioned, this is taking place here at the joint base, which gives you, the logistical cover here to keep that sort of self-contained. But when you consider the number of folks coming into the state, it's pretty interesting to imagine what it's going to look like in Anchorage. Is this the biggest thing to happen to Anchorage ever?
This is one of the This is one of the biggest things to happen. I mean, we've had the Pope and President Reagan here at one time years ago, obviously. But this is a huge issue, a huge deal for Alaska. It makes sense when you look at the globe. We're only 2.5 miles from Russia. The president of Russia just has to fly a few miles across the Bering Sea to get here. President Trump has to come up from the lower 48, go through Canada. And so we're closer. I think we're closer to Moscow by about 2.5 hours than Washington, D.C. is going the other way. And so makes sense to be here. We're glad to host it. Whatever we can do to help, especially with this issue of peace, hopefully in Ukraine sooner than later. Alaska is standing by.
Well, that's great. And it's a pleasure to spend some time with you here as we wait to hear from President Trump. I will let you know that they're mobilizing reporters. So at some point here this hour, we'll end up in the Oval Office, and I suspect he'll have some things to say about this visit. Governor, he's also likely to talk about his big, beautiful bill, which is something that he's and other members of the administration are trying to remind people of now that it's actually being enacted, trying to highlight what they see as the benefits of the bill. Alaska played a pretty big role through your Senator Lisa Murkowski in the final shaping of that bill. She talked about feeling cheated, even though she voted to pass the legislation and had carved out some pretty interesting things for Alaska when it comes to rural hospitals, when it comes to even, I believe, tax credits for whaling captains. And I suspect that you would probably tell me about the energy enhancements in the Arctic that are going to be coming to your state. What's the most important part of the big, beautiful bill when it comes to Alaska?
Well, it's a huge bill. It's got a lot of implications. I mean, there's some tax relief in there for almost everyone. As you mentioned, rural hospitals, they got a big win, not just here in Alaska, but across the country. But really for us, it's the approach to energy. It's the approach to critical minerals, our resources. We are a resource state. Under the previous administration, and we talked about that in the past on Bloomberg, we were not treated well, to be perfectly honest with you, by the Biden administration. As a matter of fact, we had more, we call them sanctions, about 70 sanctions by the federal government on Alaska during that time. Well, at the same time, the Biden administration was having conversations with Venezuela, Iran, and others for resources, oil especially. So President Trump has been great for the state of Alaska. In my opinion, the best president ever for the state of Alaska. He's allowing us to do what we do best. And so that bill is very large, very complex, impacts everyone in this country, all the institutions you can think of. But again, when it comes to resources and energy, it's not just that bill, but the work that the president's done on our Alaska natural gas line, the executive order for Alaska. In his first term, he opened up ANWR, which, frankly, was very difficult to get open in the past. But he's done a great job for Alaska. And so, again, I think there's a lot of things in that bill for everybody.
You ever talk to Senator Murkowski about the role that she played in framing that legislation in favor of Alaska?
Well, we were following it. I mean, Senator Murkowski, Senator Sullivan, Congressman Begich, they all had a hand in it. And of course, as you're trying to craft a large bill like that, there's going to be some things in there that the people aren't going to agree with, but you got to look at overall in the balance. Does it help Alaska? Does it help the country? And our three federal officials came to the conclusion that it does. And so that's why they voted yes on it.
Yeah. Governor, while you're still with us, I just want to ask you if you start seeing secondary sanctions against countries that buy oil from Russia, even existing sanctions on Russia right now. The president has threatened more if this meeting does not go well tomorrow, or if there are no outcomes that benefit Ukraine. What does that mean for production, for energy output in Alaska?
Well, obviously, if there's sanctions on oil, and personally, I think that is a tool that could be applied. When you look at what's really happening in the world, it's interesting because many European countries are advocating for a tough stance against Russia, yet at the same time, they're buying oil and gas from Russia, which doesn't make any sense at all. In essence, they're helping to fuel the war effort on the part of the Russians. What it does for Alaska, for any oil-producing sovereign anywhere in the world, it's going to probably help in the short run, because if Russian oil is taken off the market, if Russian gas is taken off the market, it's certainly going to help the United States, but it's going to help other producers as well. But again, sanctions, I think, are a tool that the president is thinking about implementing, and maybe stronger sanctions, longer-lasting sanctions to help bring this war to an end. And from a security issue, a strategy issue, it's a tool that makes sense.
Governor, what's the most important thing you're going to tell the president tomorrow?
I'm going to thank him for what he's doing for the state of Alaska. I'm going to talk to him about the progress on our natural gas line, the $44 billion project, which is moving ahead. And I'm going to wish him luck in his discussions with the president of Russia. And we're all going to hope that there's a peace, a just peace, the war ends, and we can get on with investments. We can get on with being good neighbors to each other. And so I think the president's going to there's something going to come out of this. Maybe not any final decisions, obviously, in the 4 or 5 hours he's going to be talking with the president of Russia, but I think it's going to set the stage for, I hope, a long-lasting peace and that benefits everybody in the world.
We'll be watching for you, assuming we can see his arrival at the airbase tomorrow, Governor. It's good to have you back, and I hope the summer tourist season has been treating you well. That's Mike Dunleavy, the governor of Alaska.
It's been great.
Here on Bloomberg TV and radio. Thank you, sir. It could be right around this time tomorrow that he's touching down. We'll bring all the stages of this visit to you live here on Bloomberg. It's going to be a remarkable day if you're interested in politics, if you're interested in history. This will be the case tomorrow as the president sits down with Vladimir Putin, and it's going to cascade into the evening. We'll be here overtime for you tomorrow on Bloomberg TV and radio to not only capture what we can around the meeting itself, but the bilateral news conference that is now apparently expected, with both of these leaders facing the press. As we wait for the president, he's going to be facing the press any moment now. The press pool is just outside the Oval Office waiting to go inside to hear remarks from President Trump. We assemble our political panel. Bloomberg Politics contributors Rick Davis and Jeannie Shanzano with us right now. Rick is our Republican strategist, partner at Stone Court Capital, and Jeannie is Senior Democracy Fellow with the Center for the Study of the Presidency and Congress. I'll apologize in advance, guys, if we get cut off by the president. But Jeannie, what do you make of this development? Bilateral news conference that has emerged today, sort of casting some, I guess, or projecting some optimism over the outcome of this meeting. What if it doesn't go well?
And that's possible, given, what happened in Helsinki that we all remember. Some people say one of the lowest points in Trump's first term. When I heard this, my first instinct was Vladimir Putin has once again gotten the better of President Trump. We know one thing about President Trump. Everybody does. He can't resist a press conference. So the minute that Putin put that out there, or Russia put that out there, you knew Donald Trump was going to jump on it. And I suspect that we will see something like that. But it is not a good idea for Donald Trump, because we still are unclear where he stands, given he's been pretty much all over the map in the last 6 months as it pertains to what his objectives are going to be as in these talks. And so I think it's not a good idea. It also gives Vladimir Putin, the ability, as somebody who is really been pushed aside by most countries given what's happened after he moved into Ukraine. And he is certainly known as, or at least indicted as, a war criminal, puts him on the stage with the President of the United States once again.
Is it a mistake to share a news conference with Vladimir Putin, Rick?
Yeah, I think you only have news conferences with foreign leaders, especially those at odds with your foreign policy, if you have something positive to announce. I can't imagine a scenario where they're going to come out of this, short meeting with no prep for the summit and shake hands on a ceasefire deal. And that is the expectation that Trump has put on himself, is it's his job to get a ceasefire deal. Now, he's been working the media overtime in the last 48 hours to lower expectations. But at the end of the day, he will be graded on his ability as a peacemaker, what he is claiming some jurisdiction over, to make something happen in this meeting. And I wouldn't be surprised if there's some forced event, but I don't think it's good for the United States to be standing next to a leader like Vladimir Putin, who's really just a thug, working as an attendant at a big gas station, to think that somehow, that's going to help world peace.
Really interesting reporting on the logistics going into the visit, Jeannie, from Miles Miller on Bloomberg. Reciprocity is the key here. According to State Department protocol, each courtesy extended to one leader must be matched for the other. Russian security will control Putin's immediate movements. The Secret Service will control the outer ring. When it comes to security, neither side will open the other's doors or ride in the other's vehicles. If 10 American agents are posted outside of a meeting room, 10 Russian agents will stand on the other side. Everything will be matched body for body, gun for gun, according to a source talking with Bloomberg. The choreography here is going to be remarkable, Jeannie. How much ad-libbing are we going to see around that by this president?
Well, they've all got to be ad-libbing to a certain extent. I mean, so much credit goes to the people who have put this in place and are working hard to put this in place in such a short time period. These often take months to come together. And we've had, a week or less than a week, a few days. And it was fascinating, your conversation with the governor, what a big deal this is, obviously, in Alaska to welcome these two leaders. I guess it's not a summit, it's a listening exercise. And Joe, I have to tell you that I thought Jimmy Fallon made a good point when he said those are two things Donald Trump doesn't like. So we don't know how it's going to come out, listening and exercise. But that aside, credit for the choreography here, because they haven't had a lot of time to put this into practice and into place. So, I think we could see missteps as a result, but hopefully not.
Everybody's a comedian. Hundreds of agents descending on Anchorage. Rick, downtown hotels full, as I read, rental car lots cleared for convoys. Agents in suits and earpieces posted at intersections. Plain clothes blending into coffee shops and parking garages. This is not a normal Thursday in Anchorage. I asked the governor if there were Russian agents in his state. He didn't seem to know. What do you think?
Well, if he knew, he wasn't going to say anything on public TV, that's for sure. Yeah. The reality is that we're only going to get a tidbit of the real news that the planners are working through. I mean, enormous issues, but at least the fact that it's on a military base gives the planners total control on the logistics. And I have no doubt there's barracks being used to house folks working on the summit and lots of space there, right? I mean, it's a massive military base, 6,000 personnel, all of whom are going to have some advanced work experience over the course of the next 24 hours. So it's a great pool of activity. Trump's been there a couple times, so it's familiar turf to him. Right. And I'll be honest, I mean, I am stunned that Vladimir Putin is going to go on a U.S. military base to have this meeting. It's really quite an extraordinary move.
What do you think of that, Jeannie? I mean, I've stopped asking questions about it. I was kind of blown away when I first heard that this was the case. The man known as a pariah on the world stage, touching down with the full protections and courtesies of the United States on one of our military bases? Should this be at a hotel somewhere?
Yeah, I mean, that was just such a fascinating development because people I talked to prior to this announcement said that if there's one thing we know, it won't be at a military base because they're not going to welcome Vladimir Putin to a U.S. military base. And yet, where do we find him at a military base? So it is surprising. It does make sense given the availability of spaces in Alaska. And as we heard the governor say, this alleviates some of the pressure on Alaska and on his government in such a short period of time. But boy, is it fascinating to imagine those two. And that's why when you were talking about reciprocity, it makes good sense. And I also wanted to, Joe, say, I thought the governor made such a good point in your conversation about the impact of potential sanctions or secondary sanctions, as they're calling them, how that would be a good thing for Alaska. The other part of that, what he said was so true, which is that where is Europe? They are buying Russian oil. So as we talk about sanctioning India and China, Europe seems really hypocritical in all of this. And I think he made a very good point on that.
Really interesting. Spending time with Rick Davis and Jeannie Shanzano as we wait for the president. The press pool's just outside the Oval in the colonnade, waiting to go inside. And when he delivers remarks, we'll bring them to you live here on Bloomberg TV and radio. I'm Joe Matthew in Washington. Glad you're with us on the Thursday edition of Balance of Power. As we keep our eyes on Wall Street, we've been bouncing around, at least in terms of the broad market, a little bit on this PPI day. A little up, little down kind of a session as we hear from Charlie Pellet. Let's get an update on Wall Street as we stand by for the president, live from World's headquarters. Charlie?
I thank you very much indeed. Here's what's going on. The Dow, Dow right now down 140. That's a drop of 0.3%. It is the S&P 500 index that is a little changed now, lower by 3. Record-breaking run in stocks, taking a breather today after a pickup in inflation this morning. That lifted bond yields and the dollar. NASDAQ back in the green with the NASDAQ Composite Index higher now by 10 points, up by just about 0.1%. On a down day for the S&P, our Mag 7 index is advancing by 0.6%. We've got the 10-year currently yielding 4.28% with a 2-year 3.73%. Spot gold at $33.38 the ounce. Gold down $17 the ounce, tumbling 0.5%. We heard the Alaska governor talking about the price of oil. West Texas Intermediate crude up 1.5%. Brent, the global benchmark, up now by 1.3%. Bitcoin trading lower by $5,100, below $118,000. Bitcoin right now at $117,847. Bitcoin down by 4.1%. Earnings news, Tapestry's annual outlook for a key profit metric missed analyst forecasts due in part to tariffs, a sign that Wall Street is still adjusting to the full cost of duties for U.S. firms. Tapestry's brands, by the way, include Coach and Kate Spade. Tapestry, again, now lower by 14.4%. It is the first day of trading for Miami International Holdings. That's stock surging now by 32%. Again, recapping, looking at a mixed market with the Dow, the S&P, they are both lower. NASDAQ is higher. NASDAQ up 0.1%. The S&P keeping it all in context, down by 0.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Back we go to Washington. And once again, your host, here he is, Joe Matthew.
All right, Charlie, many thanks. Things warming up today in Washington, literally, in terms of the weather. And it's starting to feel a little different on the streets around our Bloomberg Bureau and elsewhere on the National Mall. You can see the difference after the president sent not only National Guard troops to the streets, but also federalized the Metro Police Department and put hundreds of agents from federal law enforcement agencies, from the Park Service to the FBI, out on the streets. Park police have been awfully busy. They always are around here, but their movements have been notable. As you drive into town today, there are sirens everywhere. You can't always see where they're coming from, but they're kind of roving in groups through the city, closing down intersections for a minute. In the case of last evening, they put up a checkpoint on 14th Street in Washington, D.C. They were yelled at by protesters coming out of restaurants locally there, and a lot of New York plates, a lot of federal officers with their faces covered, not to suggest that they were not identifying themselves. If you're with us on Bloomberg TV, there's a shot. There were, I believe, 2 arrests that came from the checkpoint. It looked kind of like a DUI type of checkpoint, but it was ICE agents, immigration officials, in some cases questioning people who were inside their vehicles driving through town fairly early in the evening, about 8 p.m. Eastern time. Interesting reporting by the Washington Post as they asked these federal agents who was in charge, what their mission was. They didn't refer people back to police or their agency. They're referring the media to the White House. This is very unusual to see this kind of activity. Washington Post also breaking news that the D.C. police chief is expanding cooperation with immigration enforcement. Police officers here in the city now may assist federal immigration enforcement by sharing information about people not in custody and by transporting Federal Immigration Agency employees and their detained suspects. According to a new executive order that was just issued by the D.C. Police Chief, Pamela Smith. I'll add more. It's happening right outside the Kennedy Center. A homeless encampment was cleared out earlier today. Members of D.C.'s Health and Human Services team clearing an encampment on what they refer to as a grassy no man's land near the Kennedy Center. And we have a couple of those here around town that were frankly being cleared out by the Biden administration as well. We're standing by to hear from President Trump. I suspect he's going to be asked about all of this as well as his meeting tomorrow with Vladimir Putin. The press pool has been assembled and they're standing by waiting to be allowed into the Oval Office. When they do, we'll bring you in there. In the meantime, we have a chance to catch up with our political panel. Bloomberg Politics contributors Rick Davis and Jeannie Shanzano are back with us now as we stand by to hear from the president. Rick, I don't know if you got into D.C. yet today, but it does seem noticeable what we were kind of waiting for, to actually see the impacts of troops and federal officers on the streets of D.C. The president yesterday suggested that he may try to seek an extension well beyond 30 days that he's allowed here as president of the United States. Will Congress allow him to do it?
Yeah, I think he's got a blank check from this Congress. I mean, he's had more controversial things to get them to walk the plank on, and in a straight line party vote, they've given him pretty much everything he's asked for. So I had no doubt to question his resolve on this, and it makes sense that he'd need more than 30 days to do what he's talking about doing. Look, everybody wants this to work. Now that it's happening, let's make sure it turns out the way that everyone hopes it will, with a more peaceful and safer District of Columbia. I have noticed a ramp up. I mean, it took a couple days to start seeing people from federal police to military units in and around town. But I would say now there's no quadrant of Washington that I've been in that I didn't see some. So I think that the federal invasion is complete, and we'll see what kind of impact that really has over time.
Jeannie, what do you make of this executive order, if I can call it that, this order from the D.C. police chief, marking a pretty significant change in policy for D.C. police, which before now said that officers shall not assist ICE with arrest or transport of individuals solely based on ICE warrants or detainers. Chief Smith's new policy is reversing that order. We've got a city here that's listening closely to this president and trying to keep him happy. Is this a good idea?
Yeah, I don't think that the police chief has any choice, really. Given the situation that DC is in, the way that Congress passed this law in the early 1970s gives President Trump the legal right to do this. And so I think the police chief is right. You've got to partner with the feds. And so in this specific case, it's not shocking. What is going to be, I think, particularly concerning is, to your point, if he spreads it out to other cities, because this notion of federalizing our cities is something that makes most Americans very, very uncomfortable. Going right back to the Revolutionary War and the Third Amendment, which says no quartering of soldiers in homes, we have a sense that we should have freedom from the federal government in particular. And Donald Trump is going directly in opposition to that.
They just let reporters into the Oval Office, so we'll be hearing from the president shortly here. Rick, this is an opportunity for Donald Trump to massage things a bit before he gets on a plane tomorrow morning to meet with Vladimir Putin. What will be his message?
You know, I think that it's probably going to be consistent, although consistent and Donald Trump in the same breath is a little dangerous. You know, he's been trying to lower expectations to the point where, you know, he even indicates that one of the outcomes could be him coming home and, you know, nothing changes. So I think we'll continue to hear that from him today. He has been echoing some of the concerns that Europe has given him on what needs to happen with Ukraine's borders. And yet at the same time, his administration has not been bashful about talking openly about the fact that Ukraine's going to have to lose some territory. So I think he'll probably touch on a lot of these issues. You know, he loves to negotiate against himself before these big events, and yet he never seems to feel obliged to implement any of those. So he really has a different negotiating style that we constantly have to learn from, and I think we'll see that in full display today with this presser in the Oval.
Well, let's find out. The president just started talking. He's flanked by SSA Commissioner Frank Bisignano. He's going to be talking, it seems, about Social Security, but they will get to questions and a lot of the topics we've been discussing right here on Balance of Power. The Oval Office now live on Bloomberg TV and radio.
Social Security Administration, Frank Bisignano. Oh, in the world of business, in fact, I wrote some of the little things down that he's had an amazing. He was chief operating officer of J.P. Morgan Chase. He worked for Jamie Dimon. And Jamie Dimon said that he was amazing. So think of that, chief operating officer, J.P. Morgan Chase, had a storied career. Then he went to First Data. For those in the business, you'd know it's the largest payment company anywhere in the world. And worked for Henry Kravis, and it was in big trouble. He took it over as CEO. He made it incredible. They merged with Fiserv, and he became CEO of that, and that became extremely successful. I was in Milwaukee. I guess they had the Milwaukee Arena, and where we had some good success and some good speeches. But he's a really legendary guy, and he wanted to do this. I mean, he just wanted to straighten out Social Security because he loved the country. And what he's done in a few months is amazing. Almost 60 million American seniors rely on Social Security for peace of mind and a life of dignity and retirement. These Americans paid into the system, and they deserve leaders in Washington who are going to protect the benefits they've had and protect Social Security. Under Biden, Social Security went down like nobody's ever seen it, deteriorated. There's never been anything like it. The 4 years of Biden were very, very destructive. It couldn't have gone on much longer. Social Security was going to be destroyed. It was being destroyed. The average call wait time reached an all-time high of more than 42 minutes. Field office wait times were at 32 minutes, which is unheard of, and the disability claims backlog was the longest ever in recorded history. In other words, it was run just like the country was run. It was run really badly. But I'm pleased to report that under our leadership, and Frank in particular, the changes he's made and what he's done is sort of a miracle. Sort of like what happened with the country as a whole. Field office wait times are now down 30% since last year, and it looks like it's going to a total record number. And the record was set in a long time ago when the world was a lot different place. So we're gonna beat that record. Call wait times are down 73% while serving twice as many customers per day. The disability claims backlog is down 26%, and seniors now have 24/7 online access to their accounts, which they never had before, whereas under Biden, the website was down 29 hours a week for maintenance purposes. It was essentially not open very much. They were always maintaining it, but they didn't know what the hell they were doing. They had a person running that had no idea what they were doing. Among my very first acts was to order all government employees to return to the office or be removed from the job, which means our Social Security offices are now open for full business hours 5 days a week. So unlike being shut down all the time, we're open at record levels also. We're making it really great for the people that want and demand Social Security, and they paid into the system. They deserve it. Last month, I signed one big, beautiful bill and allowed no tax on Social Security for our great seniors, okay? So how's that? Not bad, right? No tax on Social Security for our seniors. And to protect our benefits, we've already kicked nearly 275,000 illegal aliens off of the Social Security system. These are people Many of them have already left the country, and yet we were sending them checks all the time. And 275,000, and that number is now even larger than that, frankly. It's an unbelievable job. And what that's doing is making the system strong. It's making it strong. Biden never kicked anybody off. Everybody joined. And we're carrying out historic deportations to remove many more illegals committing Social Security fraud. It's the Social Security fraud that was taking place at levels that nobody's ever seen. We cleared 12.4 million names listed in the Social Security database over 120 years of age. Think of that. So we had 12.4 million names where they were over 120 years old. Is that right? That's a hell of a statement. I have a feeling, Dan, that's not really really didn't happen, did it? So you have 12.4 million names listed.
President Trump is reading from behind the Resolute desk here about Social Security and some prepared remarks, I guess, from the Oval Office just a day before his meeting in Alaska with Vladimir Putin. As he goes through this update on Social Security, we'll get back to the president when they get to questions and answers, presumably, about the meeting tomorrow, about the law enforcement efforts, the federal law enforcement efforts today on the streets of Washington, D.C., and so many of the other stories that we're looking to update here. So stay with us on Bloomberg as we reassemble our panel. Bloomberg Politics contributors Jeannie Shanzano and Rick Davis have been listening along. Jeannie, is this a strategy? You know, we're waiting for some pre-game posturing here ahead of Alaska tomorrow, but is the whole point Donald Trump showing that he's not worried about it?
Yeah, I think it could be. I also was wondering, Joe, if this is some type of effort to clean up after Scott Bessent's remarks not that long ago about privatizing Social Security, which, of course, is really, really wildly unpopular with so many Americans, and Donald Trump knows that. And I also think, to your point, you know, if he doesn't come out in a joint press conference with Vladimir Putin tomorrow, he cannot be accused of having not spoken to the press about it. So I think it does make sense for him to come out today and you know, make sure that people's expectations regarding tomorrow are not quite too high, because of course he himself has said even early today that there's about a 25% chance of failure. I think if what he's after is an agreement, I would say there's about a 99% chance of failure, but that's me. He's at 25%.
Yeah. Rick, what do you think of this? Is part of the strategy to show a relaxed president, not worried about sitting down with Vladimir Putin, in fact, occupied with other issues like domestic issues, Social Security, and so forth?
Yeah, look, I mean, number one, I do think they're playing a little bit of damage control on this issue of Social Security. You know, it came out in June that the old age and survivor benefits run out in 2033, I believe. And that sent a shockwave through a lot of constituents that, especially older Americans who want to be sure that their Social Security will be there in the future. If nothing is done on Social Security between now and then, those benefits will be reduced by about 20%. Nobody wants to be the president when that happens. So it's not that far off. And then in addition to that, you had really bad debt news. The federal deficit hit a all-time high, I think $34 trillion, quicker than anybody thought it was going to. Of course, a lot of that dates back to the pandemic era, when a lot of heavy spending was done there and it's accumulated. But these are two bad news items for Donald Trump, both of which nothing positive happened in this latest congressional round of reconciliation. Donald Trump says hands off of Social Security. Not sure that's a good option for him for the next 3 years. And even though Republican rhetoric about wanting to reduce the deficit, you know, was everywhere, nothing actually occurred. If anything, the deficit's now been increased over the next 10 years by $4 trillion. So at the end of the day, he does have some exposure on these issues domestically, and it's a smart move to get out there and get ahead of it a little bit. But two, I agree. I mean, like, business goes on. This is not all about Vladimir Putin all day at the White House, and that's a good signal to send.
Yeah, really interesting. Jeannie Shanzano and Rick Davis, Bloomberg Politics contributors in our great panel today. Many thanks to you guys, as always. We'll, of course, bring you into the Oval Office when the president, as I mentioned, starts taking questions here. He has been making a couple of remarks, kind of side remarks, as he's talking Social Security here and generating a couple of headlines on the terminal. As the president says, 401ks, stock market are soaring, recalling that following his Liberation Day and the immediate swoon that we saw in the markets, he wasn't talking about Wall Street. In fact, said he wasn't consumed with the markets at all. Hardly any inflation at all, the president said. Inflation, quote, is down to a perfect number. And that follows news today on producer prices, wholesale inflation warming up more than expected to the point where a lot of folks are wondering if this is about to fall on consumers. And as we wait for the president to start taking questions, it's a great pleasure to talk to Betsy Stevenson, professor of public policy and economics at the University of Michigan, former member of the Council of Economic Advisors, former chief economist at the U.S. Department of Labor. Betsy, welcome back. I'm loath to start a conversation with you when I'm about to go to the Oval Office, so I mean that in the best way. I don't want to interrupt you when the president speaks, but we will go back to the White House when he starts here. Donald Trump says inflation is at a perfect number. Do you agree?
Well, I think that no, I do not agree. It's not at a perfect number. We want to see inflation down to about 2%. And what today's PPI print showed us was that, everything we've been saying about how tariffs can cause rising prices is true. It's tricky because what's happening is the tariffs lead to higher prices for businesses that then have to decide how much they can absorb, and not just how much they can absorb right now, but for how long they can absorb it and what to pass along to whom. And so what we saw here was some pass along that has happened among producers. And the question will be, when does this pass along start to happen to consumers? It was always a pipe dream that tariffs wouldn't cause inflation. I think the most important thing to realize is tariffs will cause higher prices, but they don't have to cause ongoing inflation. So we got a jump up in prices. And the Fed has to figure out whether people can look through the increase in prices and realize, okay, we're going to move to a new equilibrium where everything's a bit more expensive and then stay there. Or will they start to get worried about ongoing inflation because people's inflation expectations have not been quite as well anchored in the post-COVID inflation era?
Well, when you combine some of the comments that we've heard from companies this earnings reporting season, Betsy, it sure makes you wonder. People not buying breakfast as often at Wendy's and McDonald's because they're not driving to work. In some cases, not working at all. Sweetgreen says they're not lining up for salads at lunchtime. But then you've got the Procter & Gamble's of the world that are passing on higher prices. And you've got the Black & Deckers who are trying to absorb it. They're all warning investors, though, that something is coming. And when you put that composite together here, what does it tell us about where we'll be, say, in the fall or winter?
Look, this is just, our bread and butter economics that you learn in an intro econ class, which is, if the input costs go up, if you're a business, you might sell less if you raise your prices. But if you don't raise your prices, you might not make enough profit to make it matter how much you're selling. So you have to figure out how much of the price increase do you pass on and what does that mean for how much you sell. And if you do that in an environment when consumers' incomes might be declining, or at least their willingness to spend is declining because of fear of rising unemployment or fewer job opportunities, that makes things even more complicated because you've got consumers' willingness to pay has gone down, and you have to navigate how much to pass on in that environment. It's not going to be static. It's something that is, every business out there is trying to live and learn, adjust their prices a little bit, see what happens, figure out how long they can hang on without raising their prices. The one thing I think I'll say for certain is companies don't like Procter & Gamble to announce an increase in prices and then say 6 months later, we're just kidding. Tariffs are gone. We didn't need that price increase. Sorry, we did that to you. It costs them too much in terms of loyalty. So companies are slow to pass along price increases. And I think we all need to keep that in mind.
Well, and it's something that we're going to be watching, obviously, here. We're watching it with every data point, Betsy. But how would you respond to the Peter Navarros of the world who say, no, you're wrong. Wages will keep up because of growth, that growth is the answer to all of this. And we heard that in the first term as well. In fact, they frequently point back to the first term as evidence to say you're not painting the complete picture here. You're going to see wages skyrocket because of reshoring. You're going to have growth that helps us get beyond higher prices. Bring me back to Econ 101 and the response to Peter Navarro.
That's a great question. So first we have to ask, where does economic growth come from? Economic growth basically comes from being more productive. So if we can produce more using the same amount of resources, we have economic growth. And one of the things that's true about tariffs is they lead us in the opposite direction. Because what they do is they put a wedge between choosing what's optimal in terms of producing things at the lowest cost and what we end up doing, because now there's this wedge, the tariff, and it's might make it better to produce iPhones in the United States, even though they're very, very expensive to produce in the United States. So we go about doing that. We're going to have very, very expensive iPhones. That's not going to lead to economic growth, because phones are going to be more expensive. There's going to be something else we're not doing with our resources, which might have been something we were producing for export that we were actually quite good at doing. So I think this question is, they say economic growth, but you have to actually say where the economic growth is coming from. Now, one thing they are telling us is, that one big beautiful bill had a bunch of incentives in there to try to get, increase maybe capital investment, invest in research and new ideas. And so they're hoping that spurs some growth. I don't know that there's a lot of evidence that the problem businesses had was that, they didn't have, strong enough tax write-offs to be able to do new ventures. So I'm not convinced we're going to see a lot of economic growth out of that. And then there's something else, which is one of the things that's going to hurt economic growth, besides the tariffs, which will hurt economic growth, is growing government debt. Growing government debt means if you're a saver, should you loan your money to the government or a business? Now you've got, government in there competing in the market for loanable funds with businesses. That's going to drive up the cost of borrowing. And I think that's another reason why, the research shows you drive up the cost of borrowing and you're going to slow economic growth. So I just don't see this evidence for faster growth.
Going to school with Professor Stevenson today. Betsy Stevenson, University of Michigan. It's always great to have you, Betsy, on Bloomberg. We thank you so much for the analysis as we bring you back to the Oval Office. President Trump has just begun taking questions from the press, which means I'll probably meet you on the late edition of Balance of Power. Let's go live now to the White House on Bloomberg.
And he's got it turned around so well. The proclamation helps. All of the things we've done help. And he's finding such tremendous fraud where we have illegal aliens. We have people that don't even exist on Social Security now. They don't exist. And what it does, it makes it totally secure and powerful for the people that are on it and need it. And we're very proud of the job he's done, one of the best.
Kara Castro from Lindell TV. How are you today, sir? Democrats like Bernie Sanders and Elizabeth Warren continue to peddle the lie and the claim that you're trying to cut Social Security, despite your repeated promises to protect it. Why do you think they keep pushing this misinformation and literally terrorizing the elderly in America that sadly keep watching the very misleading mainstream media?
I love your question. I should have called you almost first, but I love his questions also, always. But it's such a good question. It's so vicious what they do. Elizabeth Warren said she was an Indian. We call her Pocahontas. She's a liar. She lied her whole career. Based on the fact that she was an Indian, she was able to get into certain colleges, get certain jobs, get into certain universities to work there. She's a liar and a mean person. She's a nut job. I watched her the other night. She's all hopped up endorsing a communist in New York City. And she was all excited and jumping up and down. She's got to take a drug test. She really does. She's got to take a drug test. There's no way somebody can act that way and be normal. What she's done to our financial institutions, he destroys people. You know that you had a lot of great banks in the Midwest and banks that loaned to farmers and others, and they went out of business. She put them out of business. Stone cold mean. banks that were open 150 years, family banks that supplied the farmers and manufacturers and others, and she put them out of business. She's a mean, horrible human being. Bernie Sanders is Bernie Sanders. I don't mind him so much. He's just a liberal guy, very liberal guy. He's a wacky guy. He's still sharp. I got to tell you, you know, he's 86 or 87 or something. He's still sharp. You compare that to Joe Biden, it's, you know, sort of what happened. So I don't mind Bernie Sanders. With him, you know what you're getting. You're getting a guy, he's a nasty guy, but he's somebody that, I don't know if I call it a fastball, but he's able to throw the ball pretty well. He's okay. I watched him the other day. He was totally on the opposite side of things. I will say this, the biggest issue right now, and an issue that's really taken hold, is crime, stopping crime in the cities, and the Democrats are fighting the stopping of crime. So I think that's like men playing in women's sports is okay, or transgender for everybody okay. But this is a bigger issue. This is the biggest of all issues. Crime is rampant in D.C. It's rampant in our generally blue-run cities. And they've got to do something about it, or they're never going to win another election. And instead of calling me a dictator, they like to say Trump's a dictator. Trump's a dictator. Well, I had calls from many, many friends, including Democrats. I have a lot of Democrat friends, but they're normal people. And they were thanking me so much for what I'm doing in D.C. They feel so safe already. And, you know, at the border, we had 0 people come in, and this is done by a liberal group. They're the people that do it. I have nothing to do with it. 0 people in 3 months. We had 0, 0, and 0 for 3 months. And last year we had millions of people pouring in from all countries, from jails, from drug addicts, gang members, drug dealers by the thousands and thousands. 11,888 murderers, half of whom committed more than one murder. They flowed into our country. And for the last 3 months, we had none. And I didn't remember when Joe Biden used to always go, I need legislation. I had no legislation. I just said, we're closing the borders. And the whole world understood it because they respect your country again. They really respect this country again. They didn't respect it. When he said it, it didn't mean anything. But now they know it meant a lot. And Mexico does what we tell them to do. And Canada does what we tell them to do, because we have the 2 borders. We have the northern border, the southern border. And they were both horrible. But now it's some people say it's a miracle. Well, what Frank has done with Social Security also is something very special. But what we're doing with crime, which will be your next question, I guess, that's because everyone's they're afraid. Half of the people here, maybe all of the people here, most of you live in D.C., you are petrified to go out. And you're liberal. And if you're liberal, you're going to have to change. You're Democrats. You're going to have to change your ways. So we will have crime under control very shortly in D.C., but they're record numbers. And sadly, what I guess the mayor did, but whoever it was, they asked the numbers to be fudged so that it would show less crime than the fact. The fact is, it's worse than it's ever been, and we will have it just like we did at the border, where with borders are totally in great shape right now, the best ever, record-setting shape. We'll have the crime situation solved in D.C. very soon. And we're also going to beautify the city. We have a beautiful city, but you can't have graffiti, and you can't have roads with potholes, and you can't have the medians, the dividers in the roads falling down on the street. We're going to be beautifying the city, making it really beautiful. We're going to be getting the criminals the hell out of here. We don't want the criminals in Washington, D.C.
Mr. President, one on your Putin meeting and then one on D.C. crime. Are you prepared to offer Vladimir Putin access to rare minerals to incentivize him to end the war?
We're going to see what happens with our meeting. We have a big meeting. It's going to be, I think, very important for Russia, and it's going to be very important for us, and important for us only that we're going to save a lot of lives. Look, we have, we're not paying any money, as you know, to Ukraine. We're supplying equipment. We're being paid 100% plus for that equipment by NATO. And I got NATO up from 2% to 5% of GDP. They now have billions of dollars. NATO is a very rich group of countries, and we make the best military equipment anywhere in the world by far. And they're buying our equipment, and they're paying 100% for the equipment, 100%. In fact, they owe us about $2 billion now. They're going to send a check. Another one was sent recently for $1 billion. So we're not spending any money anymore. Biden gave him $350 billion, got nothing for it. And if you look, and by the way, we also signed a rare earth deal where we get, years of rare earth to get our money back, the money we spent. But what I'm really doing this for is to save thousands of soldiers a week. You have Russian soldiers, you have Ukrainian soldiers, and then you'll have missiles dropped into various cities and towns in Ukraine. And they're losing last week they lost 7,251 people, mostly soldiers, Russian and Ukrainian soldiers. I'm doing it for that reason. We have a meeting with President Putin tomorrow. I think it's going to be a good meeting, but the more important meeting will be the second meeting that we're having. We're going to have a meeting with President Putin, President Zelensky, myself, and maybe we'll bring some of the European leaders along, maybe not. I don't know that it's going to be very important. We're going to see what happens. And I think President Putin will make peace. I think President Zelensky will make peace. We'll see if they can get along. And if they can, it'll be great. I've solved 6 wars in the last 6 months, a little more than 6 months now. And I'm very proud of it. I thought the easiest one would be this one. It's actually the most difficult. We had one war raging, as you know, for 37 years. One in the Congo with Rwanda was raging for 31 years. We solved 6 of them, made peace, not just solved them, we made peace. If you look at Pakistan and India, planes were being knocked out of the air. 6 or 7 planes came down. They were ready to go, maybe nuclear, we solved that. I thought this would be maybe an easier one. It never made sense, this war. It would have never happened when I was president. If I were president, this war would have never happened. But millions of people have been killed. And I'm there for one reason, to see if I can solve. This was Biden's war. This isn't my war. I want to see if I can stop the killing. Yeah.
Rare earths, do you plan to offer him access to that at all?
We have great rare earth. We made that as payment for all of the money that we've spent so foolishly in Ukraine. We spent $350 billion. Now Europe spent $1 billion. That's a lot of money. They spent $100 billion. That's a lot of money, but we shouldn't be spending a lot more money than them, and they understand that. And I think that's maybe why we're not spending money anymore. We're not spending any money. They're paying us for everything. So people are shocked when they hear it. They don't even understand. They don't even write about it. But we're not spending money, but we are spending a lot of time trying to get the war solved. If we can get the war solved, we'll be very happy. As far as rare earth, that's very unimportant relative to, I'm trying to save lives.
And on DC crime, sir, on DC crime.
Do you have a message for the Democrat lawmakers like Nancy Pelosi or media who are saying, after living here for many years, that there is no crime and you're trying to start a new news cycle?
It's another reason why the Democrats lost the election in a landslide. They lie. It's just lie. Look, the crime is very bad. I think they'd be much better off saying, we want to help President Trump with the crime because it's an epidemic. It's a tragic situation. It's the worst it's ever been. And we want to help President Trump with the crime, as opposed to, he's a dictator. He's a dictator. People are so happy to see our military going into D.C. and getting these thugs out. As you know, we arrested a lot of people yesterday. We arrested a lot of people today. We're getting people that have arrest records that you wouldn't believe. 28 arrests, 15 arrests, brutal, brutal people. And we're going to have to do something about this cashless bail, because people shoot somebody, they kill somebody, and they're out on the street in less than an hour. Now, that's when it's all started, in New York, in Chicago, Los Angeles. You take a look. If we didn't go to Los Angeles to help this incompetent governor and a mayor that doesn't know what the hell she's doing, if we didn't go to Los Angeles, you wouldn't have a big part of it burned down. The other part of it would have burned down too. You would have not had, I don't think you would have been able to have the Olympics. We have the Olympics. I have a lot at stake with that, because I'm the one that got the Olympics. I got it in my first term, and I was saddened because I got it for what would be my third term, okay, which turned out to be second term. And the Olympics, it's a great honor, but I felt badly because I said I won't be president when the Olympics came. Well, through circumstance, I am president. I want to make sure the Olympics is great, the World Cup is great, and the 250, maybe the most important of all, is the 250-year celebration is great. So what's happening is we will work very hard. You would not have had, I don't believe that if I didn't send in the troops, I don't think you would have had Los Angeles in condition to have the Olympics. I think you would have had to tell them, I'm sorry, you're going to have to go someplace else. And if you look at the police commissioner or the sheriff, he said, we really needed them. Thank God they were here. We really needed them. That was the first 2 or 3 days. After we solved their problems, then he said, well, I think we could have maybe done it. No, he was told what to say. He said, you go back to your files and see what he said. He said, thank goodness they came. If I didn't go and put our military there, or National Guard in that case, and we'll go military if we have to, but the National Guard went there. They were very effective. If we didn't do that, I don't think you would have had the Olympics in Los Angeles. The place would have been just like the 25,000 houses that burned down, where, by the way, the governor ought to focus on getting their permits. You know, the federal permits are given. Those are the hard ones, and they were given a long time ago. People can't rebuild their house because they can't get permits from the state and the city, and they ought to focus on that because it's very upsetting. I went there right after the fires. I walked the streets, and I met a lot of great people that want to rebuild their homes. We took care of it from the federal standpoint, but they're not taking care of it from the city, the mayor and the governor. They're not getting their permits. They can't build their houses.
Mr. President, on DC crime.
Go ahead, please.
Mr. President, thank you. Do you think this summit and the incentives for peace you are putting on the table could end up rewarding Putin for his invasion of Ukraine? And what kind of signal do you think that could potentially send to other aggressors?
No, I don't think it's a reward. I think that what we have is a situation that should never have started, should have never started. It didn't start under me, and for 4 years it wasn't even discussed. And I could see it was going to happen after I left. I could see what was happening. Everything that we did was wrong. Everything that was done was wrong. Everybody's to blame. Putin's to blame. They're all to blame. This is a war that would have never happened.
The other question on LA, Mr. President, earlier today, the Washington, D.C. police chief issued an executive order allowing metropolitan police officers conducting traffic stops to notify federal immigration and customs enforcement about undocumented immigrants that they encounter. Yet the city has a long-standing pro-immigration policy, including allowing non-citizens to vote in local elections.
Which is ridiculous.
And limiting cooperation with federal immigration agencies. Right. Did your administration pressure the D.C. police chief to review and repeal these policies? And will you require other cities to roll back similar policies to avoid possible federal takeover of local law enforcement?
So what you're saying is that it was a very positive thing. When they stop people, they find they're illegal, they report them, they give them to us, etc. That's a very positive thing. I have heard that. It just happened. That's a great step. That's a great step if they're doing that. Yeah, I think that's going to happen all over the country. We want to stop crime. I think if the Democrats aren't strong on this issue, they won't be able to do it. I think this is a bigger issue than all of the other ridiculous things that they, like open borders. Well, open borders is bad. Open borders has caused a lot of this problem, allowing millions and millions. I think 24 million people were allowed to come into our country. Many of these people from prisons, from jails, from mental institutions. This was the Biden policy. And I don't believe it was him. He was never there before. It was the people that encircled this very beautiful desk, the Resolute desk. Radical left lunatics who were smart, but radical left. And I'm very happy to hear what you just said, because I've heard that.
And Mr. President, on LA, if I may, the mother of a 15-year-old California boy who was briefly detained at gunpoint in a case of mistaken identity. The LAUSD superintendent says that surveillance video shows armed agents wearing police and border patrol insignia. Given the National Guard, the Border Control, ICE agents, they're not trained in local policing. What specific steps are you taking to ensure that young people are not put in harm's way with these types of operations?
Yeah, what they are trained in is common sense, and they're very tough people. And they have great common sense, and they are highly trained. I heard the mayor of LA was saying, oh, they're not trained this way. I heard this character from, where was he from? They talk about him as a candidate. He's got no chance. The governor of Maryland, I watched him this morning saying that the governor of Maryland, yeah, they say maybe he'll be a president. He's not presidential timber at all. But I heard him today talking about how the National Guard or the military is not trained in police. but they're trained in common sense, and they're trained in not allowing people to burn down buildings and bomb buildings and shoot people and all of the things. They've done a great job. Again, if we didn't send them, and very importantly, if we didn't send them into Los Angeles, the rest of Los Angeles would have been burned down to the ground. When you look at Minnesota, Minneapolis, I sent them into Minneapolis because the governor wouldn't make the call. If I didn't do that, you wouldn't have a Minneapolis. It wouldn't be, I don't think it would be existent today. You remember the famous scene burning over the CNN anchor's shoulder? He said, everything seems to be very peaceful. And behind him, the whole city's burning down. So you had the whack job governor who ran for vice president and made a fool out of himself. You would have had, I saved that city, I'll tell you, I saved that city. So the bottom line is these are very tough people that are trained in a thing called common sense, and they're also trained in doing what we're talking about right now. And you watch crime stop, but you wouldn't have Los Angeles, it wouldn't be existent today. We would have had to cancel the Olympics if I let that go on.
Mr. President, will you pressure Israel to allow journalists into Gaza to cover the humanitarian efforts the U.S. is pursuing? And
I'd like to see that happen, sure.
Would you pressure?
I would like to see it happen. I would be very fine with journalists going in. It's a very dangerous position to be in, as you know, if you're a journalist, but I would like to see it.
And on tariffs, Brazil, Mexico, and Latin America are getting closer to China, and they say it's partly because of the tariffs you're imposing those countries. Are you concerned them getting closer to China?
No, not at all. I'm not concerned at all. They can do what they want. None of them are doing very well, and what we're doing in terms of economics, we're blowing everyone away, including China. We're doing better than any other country in the world right now. Brazil has been a horrible trading partner in terms of tariffs. As you know, they charge us tremendous tariffs, far, far more than we were charging them. We weren't charging anything, essentially. And Brazil has some very bad laws happening where they took a president and they put him in jail, or they're trying to jail him. And I happen to know the man, and I will tell you, I'm pretty good at people. I think he's an honest man. I think what they've done, this is really a political execution that they're trying to do with Bolsonaro. I think that's terrible. But they also treated us very badly as trading partners for many, many years. One of the worst countries on earth for that. They charged tremendous tariffs, and they made it very difficult to do anything. So now they're being charged 50% tariffs, and they're not happy, but that's the way it goes.
Mr. President, on DC crime, sir, on DC crime, are you concerned at all that some federal officers that are helping DC police might be being pulled away from other high priority assignments?
Like what? Like what?
Terrorism, for example.
Oh, really? Terrorism? They'll stop terrorism as part of what they're doing right now. No. The soldiers that we have, first of all, we have plenty of them, long beyond what that you have here. We're just using a very small force. You know, in Washington, D.C., they have thousands of police. They have a lot of police, but the police weren't allowed to do their job. We have a lot of great ones, and you have some that weren't so good, to be honest, but they weren't allowed to do their job. But now they are allowed to do their job, and essentially it's only 2 days, but you look at the numbers already, they're dropping. And no, they're not being pulled off for anything.
Mr. President, as you know, there were some very concerning reports about crime statistics. Police are manipulating crime data to downplay crime in D.C. Will the administration release its own crime statistics to counter their misinformation? And will those individuals who are intentionally misrepresenting crime data and fudging the books, like you said, be penalized for endangering the public?
They are under investigation right now. They are giving us phony crime stats, just like they gave other stats in the financial world, but they're phony crime stats. And Washington, D.C. is at its worst point, and it will soon be at its best point. You're going to have a very safe, you're going to have a crime-free city. I mean, I say that. You're going to have virtually a crime-free city. And these are strong men, but the criminals are strong men and women, but they're strong men. And these are people that don't play games. We're not playing games. These are criminals we're dealing with. And they treated people. They took one of the people that worked for us the other day. You saw the beating, the pounding, 10 against 1, and they pounded the hell out of him. He's lucky to be alive. He's barely, almost killed. And we're not going to have that happening, please.
Tulsi Gabbard declassified more documents last night related to the Russiagate hoax.
She's doing a great job, by the way. That was another fake story. I'm very happy with the job she's doing. That's right. They declassified some terrible documents talking about Democrats and what they did. Yeah. Radical left lunatics.
It showed that then DNI James Clapper sent out emails to IC officials saying that it would be a team sport to push then the debunked 2017 ICA report, and that it might need them to compromise on their normal modalities. What's your reaction to the latest declassification? And in your view, sir, what does real accountability look like for the players involved?
It's incredible what we're finding. Absolute proof of guilt. And we'll see what happens. But Clapper and Comey and that whole group of criminals, they're criminals. And they made it very tough. You know, they did the fake Russia witch hunt that lasted for 2 years. And I got totally exonerated. There was no doubt about it. They should have done it in 1 day, not 2 years. But it was a whole scheme to try and demean Trump so that I couldn't win an election. And that is a criminal group of people. They're sick people, and they're criminals, and they should be taken care of.
Mr. President, does Putin have a strong hand tomorrow?
Well, he came to our country, and I heard CNN fake news talking about that was a big win for him. Normally, you would say the opposite, but they said, oh, it's a big win that he came here. Normally, we would say the opposite, he came here. I think that President Putin would like to see a deal. I think if I weren't president, he would take over all of Ukraine. It's a war that should have never happened. If I weren't president, in my opinion, he would much rather take over all of Ukraine. But I am president, and he's not going to mess around with me.
Mr. President, on Russia, Mr. President, would you support or agree to reducing NATO troops in Europe, in countries like Poland, in order to get Russia to agree to a peace deal?
That hasn't been put before me, and I'll think about that for later, but it has not been put before me. Go ahead.
Is anything less than an unconditional and immediate ceasefire a victory for the U.S.?
Tomorrow?
Yes.
Well, tomorrow we'll see. I say, I don't know where that comes from. It's sort of not a good question. I would say that tomorrow, all I want to do is set the table for the next meeting, which should happen shortly. I'd like to see it happen very quickly, very shortly after this meeting. I'd like to see it actually happen maybe in Alaska, where we just stay because it's so much easier. But I think that it's going to be very interesting. We're going to find out where everybody stands, and I'll know within the first 2 minutes, 3 minutes, 4 minutes, or 5 minutes, like we tend to find out whether or not we're going to have a good meeting or a bad meeting. And if it's a bad meeting, it'll end very quickly. And if it's a good meeting, we're going to end up getting peace in the pretty near future, okay? How about one more?
Thank you, Mr. President. On the Smithsonian, I know that your administration is seeking to weed out a lot of this left-wing spin that's in the museums, but we're seeing from people like Brian Stelter or other commentators that they're insinuating that you are trying to change history according to your narrative. What's your response to that, and is there anything you particularly like to do?
Well, we want the museums to treat our country fairly. We want the museums to talk about the history of our country in a fair manner, not in a woke manner or in a racist manner, which is what many of them, not all of them, but many of them are doing. Our museums have an obligation to represent what happened in our country over the years, good and bad, but what happened over the years in an accurate way. Thank you very much, everybody.
Thank you, Press. Thank you, Press. Thank you. Thanks, guys. Headed out right here. Thank you, Press. Thanks, guys. Head out right this way, right this way. Thanks, guys. Keep coming. Let's go.
All right, everybody, you have been listening to and watching President Trump live there at the White House, a range of topics discussing as he also took questions from reporters in the room. Very good afternoon, everybody. Across Bloomberg platforms, radio, TV, YouTube, Bloomberg Originals. Carol Master, along with Tim Stanovic, live here at Bloomberg headquarters. He did take questions on a lot of things, but we should remind everybody that he started speaking about Social Security, which we know in the past we've heard from the Treasury Secretary talk about the possibility of privatization for Social Security. So I feel like some reassuring words, perhaps, maybe, from the president in terms of the nation's Social Security system. He talked about the stock market and more.
He did, including talking about Brazil, but also about tomorrow's meeting. He said the more important meeting will be the second meeting that we're having. He said we're going to have a meeting with President Putin, President Zelensky, myself, and maybe we'll bring some of the European leaders along, maybe not. Carol, he said, I don't know That's going to happen. It's going to be very important. We're going to see what happens.
It's certainly front and center for us, and we're going to actually talk about the macro, the geopolitical. We've got a great guest with us, the Minister of Finance for New Zealand, Nicola Willis, will be with us. We also have to talk about the inflation print today because we had a narrative yesterday off of CPI, Tim, and we have a new narrative off of today's PPI.
Yeah, the president did say the inflation numbers came in perfect, but
it's not 2%.
No, and also if you look at what happened with PPI today, I think a lot of people would argue that's not necessarily the direction that you want to see.
We're also going to talk a little bit about specialty insurance. They're probably watching the rates market as well. So we've got the CEO of Access Capital Holdings. Right now, though, we want to stay with what we just heard from the president, an array of topics. We've got with us our own Jenny Welch. She is with us, joining us from our bureau in the nation's capital. She is Bloomberg Economics Chief Geoeconomics Analyst. Jenny, good to have you back with us. There was a lot from the president. I'm always curious because he certainly says things that might be strewed as opinion or thoughts and speculation about things. What is it that from what we just heard from the president, anything in terms of new messaging that is something certainly the Bloomberg audience wants to know about?
Well, I think in particular as it relates to geopolitics and the summit taking place tomorrow between him and President Putin, that what especially European partners are likely paying attention to is the fact that he just once again tried to set expectations low for that meeting. But I think the new element was indicating he might be open to having European partners join some sort of subsequent summit that he hopes to be able to arrange between Putin and Ukrainian President Zelensky. I think we would say the odds of that coming together are rather low given Putin's previous opposition to meeting with Zelensky. But nevertheless, that seems to be a goal that Trump is very much keen to get across the finish line in tomorrow's conversation with Putin.
Jennifer, nobody has a crystal ball here, but we're thinking about possible and probable outcomes at this meeting. How are you thinking about these? What could end up happening post-meeting tomorrow?
So we see three broad potential pathways for the meeting. As you noted, it's hard to say for sure, so we develop multiple scenarios and hope that one of them pans out. I think the first one, and what we would consider to be pretty unlikely, is that talks collapse in such a calamitous way that Trump actually feels embarrassed and feels he needs to follow through on his previous threat of sanctions against Russia, which he's been lobbying since he returned to office in January, but hasn't actually taken any steps on. A second potential pathway is that they do make enough progress for Trump to declare victory of a sort and walk back those previous threats, which is probably his preference. But we remain rather skeptical that the two sides will be able to reach some sort of agreement that leads to lasting, sustainable peace. A key reason behind that is that Putin thinks time's on his side and that he's winning on the battlefield. And so his incentives to negotiate are pretty low, which means the third possibility that they agree to something that will actually put them on the path towards a full peace deal with Ukraine, we see is still relatively low at this point in time.
Is there any chance if there is no kind of peace deal worked out in a first or even second meeting that what ultimately happens is the U.S. steps up its efforts and support of Ukraine?
I think there's certainly that possibility out there, and that's what Zelensky and many of the European partners are hoping, that certainly that Trump doesn't make any agreements with Putin without them being there. And if he doesn't agree to anything with Putin that will lead them to the negotiating table as a sort of a unified force, that at the very least he'll follow through on his threats to up the pressure on Russia while backing Ukraine stronger. I think my skepticism comes from we've been here multiple times since January and have yet to see Trump actually follow through on those threats. He certainly has a number of sanctions options at his disposal, but they all come with additional risks and costs, especially to the global oil market and to his relationships with other key countries, namely China, which is a major economic partner for Russia.
It's hard not to think about tomorrow's meeting in the context of when we've seen these two leaders meet in the past, and Helsinki in the first term certainly comes to mind, and everything that came along with that, Jennifer. What do we know about the relationship between these two leaders and what we could see, like, and from a negotiating perspective, from a behavioral perspective, from the way that we could see gifts to or from one another?
Yeah, the relationship between these two leaders is of high interest, especially here domestically in the United States, subject to previous inquiries, and I think will continue to be subject to a lot of skepticism. They also have extremely different negotiating styles. Putin is a former KGB intelligence officer. That really shines through in how he approaches diplomacy, focusing on control, psychological manipulation, playing the long game as part of these talks. We've seen him, for example, before play out international negotiations, pretending like he's interested in peace while continuing to make gains on the battlefield, most notably in Crimea in 2014 and 2015. With President Trump, he is a deal maker. He comes from New York real estate. He's interested in creating some sort of win for himself, especially something that he can sell publicly. At the same time, he's someone who has shown he's willing to walk away from the table if he doesn't get what he wants. That was apparent in his first term with negotiations with North Korean leader Kim Jong-un. And I think that's something he's trying to sort of put down a marker for he's willing to do tomorrow. I think the question is, will Putin sort of outmatch him and outmaneuver him on that front and be able to provide him some sort of tangible win that Trump says this is a victory, or play into Trump's longstanding skepticism of Ukraine?
We are living in interesting times. A headline just crossing the Bloomberg of a 5.2 mag earthquake, 132 kilometers southwest of Nikolsky, Alaska. So this is just crossing. It looks like probably from the U.S. Geological Service. So I'm just putting it out there because it all kind of is this big whiteboard and it all just connects, doesn't it? Hey, Jenny, one last question. You mentioned about, I think, people moving ahead, forging agreements and so on and so forth. The president was asked specifically about Latin America and China getting closer and cozier. How are you looking at that, continuing to look at how things are changing when it comes to important global relationships? And is the U.S. increasingly being left out, or no? Is the president showing that he definitely has strength and still has a seat at the big table?
Well, certainly China's efforts to court Latin America and other global South countries are longstanding. I think Beijing is making a lot of this moment where a lot of those countries, in particular Brazil, are facing a heavy weight of U.S. tariffs and trying to gain the most that it can from those relationships, positioning itself as sort of the rock in Trump's storm. I think from the U.S. perspective, and really from Trump's perspective in particular, he has kind of brought back this theme of almost a Monroe Doctrine approach to Latin America, where this is considered the U.S.'s traditional sphere of influence, and he's going to push back on China, especially in places like the Panama Canal that are regarded as kind of strategic choke points. I think for many countries in that region, though, the question is, what is the U.S. going to do to give them an alternative? Because tariffs as sort of the punishment, the stick, might not be enough.
All right. One of our rocks. She is a rock when it comes to what's
rock
going
star,
on
too.
Out of the White House. Totally. And putting geoeconomics into perspective. Jennifer Welch, thank you so much. Joining us there from D.C. She is Bloomberg Economics Chief Geoeconomics Analyst. We're going to stay with news from the Capitol, talk a little bit about economic news in just a moment, but we got to get a check on trading.
Yeah, let's get a check on trading with Charlie Pellet. He's also got a check on the top business stories happening. Hey, Charlie.
Well, hello there. Here's what's going on. Right now on PPI Thursday, we have got the Dow, the S&P, NASDAQ, all trading lower. Looking at a 6-point drop right now at 64.60 on the S&P, a decline of 0.1%. Dow Industrials down 94, decline there of 0.2%. NASDAQ down 24 points right now. That is a drop of 0.1%. The Mag 7 index up by 0.4% on a down day for the rest of the market. 10-year yield 4.29%. Gold down $18 the ounce, 33.37, a drop right now of 0.5%, and a rally for crude WTI West Texas Intermediate up 2%, 63.92 a barrel. Major move today downward for Bitcoin, tumbling 4.5%, 117,326 on Bitcoin. Tapestry is plunging 14%. Its annual outlook for a key profit metric missed analyst forecast. Its brands include Coach and Kate Spade. And briefly, first day out for exchange operator Miami International, and in its first day of trading, MIAX on the ticker up by 33.3%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. We promised we want to get to the day's economic news. Came out of the nation's capital. It is that stronger than anticipated inflation reading. It spurred a rise in bond yields and the U.S. dollar. And traders trimmed bets that the Fed will cut interest rates next month. Man, what a 24 hours we've had. Separate data today also showed U.S. jobless claims edged lower last week. That suggests, Tim, that employers remain reluctant to lay off workers.
This as U.S. Treasury Secretary Scott Bessent yesterday on Bloomberg TV and radio, again on Fox Business this morning, shared his view on U.S. rates and that he's not pushing the U.S. Central Bank on cuts.
I didn't tell the Fed what to do. What I said was that to get to a neutral rate on interest, that would be approximately a 150 basis point cut. I did not call for them to get there. The other thing that I said was that perhaps because they had bad BLS data in June and July, that perhaps a 50 basis point cut in September was warranted.
That's U.S. Treasury Secretary Scott Bessent earlier today on Fox Business. With more on the U.S. economic backdrop, with us we have Bloomberg News economics editor Molly Smith. She joins us here in the Bloomberg Business Week studio in New York. Ira Jersey, our Bloomberg Intelligence chief U.S. interest rate strategist. He joins us from Bloomberg Intelligence headquarters in Princeton, New Jersey. Molly, I want to start with you. The data that we got this morning, the PPI inflation print, it was hotter than expected. Is it bad? It's just a reminder that inflation is still pressuring these businesses?
Yeah, I think that's a fair way to think about it, because you look at the market reaction after, which, yeah, of course, the stock market's giving up the gains that it had from yesterday, and, treasuries as well, but everyone's still expecting a rate cut next month. Maybe the odds were like 102% before the report, and now they're like 97%. So that hasn't really changed. But yeah, definitely a reminder that inflation is still very much there at the wholesale level. But really what I think the bigger signal was from the report today, there's a part of the PPI report that describes margins, and that's what really drove a lot of the increase. So that's maybe more sign of getting that tariff pass through, that companies aren't absorbing as much of those costs as they were originally.
That's what Tom Barkin of the Fed, I think it's the Richmond Fed, right? Mm-hmm. Thanks.
Yeah.
Who was speaking at a virtual event, and he said that manufacturers are still struggling with margin pressures. Like, it's got to go somewhere. Either we're paying for it, right, or companies are going to pay for it. But is there a point in consumer sentiment where we kind of get used to it and we're kind of okay with it, and everybody figures out how to work in a higher cost tariff environment?
Well, that's the thing, though, is that it hasn't really substantially hit consumers yet. And I think that's the concern then, that since there has been so much of companies absorbing a lot of the costs so far, yes, we have seen some select goods prices come up in recent months, but it hasn't really been as severe or as widespread as we thought it was going to be. So I think this is more the concern, that if you are in the camp that producer prices are a leading indicator of consumer prices, then that there's more concern that this is going to ripple over to the consumer side.
So, Ira, we've talked about the equity market reaction briefly with Molly. Take us into the rate reaction, not just with today's PPI print, but also what we saw with CPI earlier this week.
Yeah. I mean, the market's gone nowhere.
That's one way to answer it. Yeah.
I mean, it's for sure.
Why do we come in every day, Ira, if it just goes nowhere? But anyway, go.
Well, there's always these short-term gyrations, and then obviously we have longer-term trends to think about as well. And to Molly's point, we're no longer pricing the 100% chance of a cut. But keep in mind, when you look at what the options market was doing, particularly after Secretary Bessent's comments yesterday, we actually did have people buying options on a 50 basis point rate cut in September. So the idea that we could have a 50 basis point rate cut, I think, was predicated on the idea that we'd have pretty benign inflation measures. And today's data certainly suggested that maybe there will be some upward pressure on inflation, and that just muddies the waters for both the timing and pace of Fed cuts. So for the long end of the curve, like the 10-year, the 30-year bond, the Fed starting to cut cuts in in September versus October versus December doesn't really matter that much. But where are they going to get to? And that hasn't changed at all. They're only going to cut to about 3%. So, unless they're going to cut to 2.5% or something, the long end of the curve probably isn't going to move very much.
All right. Is it fair to say that at this point, I mean, all bets are still kind of off, only because I think, don't we have more inflation readings? We have another jobs report we have Jackson Hole, Ira, before we actually get to that September meeting?
Yeah, well, all of these things are going to matter, right? And the thing is, Jackson Hole is going to be before we get the PCE deflator for July and before we get those first reads on August data. So, you know, we still have a long way to go. So I suspect until then, every single little data point that we get, we're going to see these 5, 6, 7 basis point moves in the front end of the yield curve. You know, yes, we're on again for 50, or no, we're definitely not getting a 25. That's going to keep jumping around, but we're basically going to go nowhere. And you know, so someone on my team suggested, you know, hey, you know, people who are selling vol right now on rates might actually make for an interesting trade, because short-term rate volatility, while yes, we're moving 6 basis points today, we're pricing for 6 basis point moves every day. So as long as we don't get much more than that, it's not going to be a big deal.
Molly, anything you want to say in terms of, like, there's a lot to happen, or could still happen, before that September meeting? And from what we get from Fed Chair Jay Powell, he sits down with the team and, okay, what are we looking at on that given day?
Right, and like what Ira was just saying, so we've got the PCE print for July coming at the end of this month, and the data today kind of helped to round out a lot of what those estimates will be. Going to get some more inputs tomorrow with the import-export price index, but a lot of them looking for the core PCE on the annual basis to pick up. So that's definitely going to be a bit more of a firmer print. And then I think what the Fed is really arguably watching maybe more at this point is more the labor market data. And we're going to get a couple looks at that early in September before that September meeting. We've got the August jobs report on September 5th. And then right after that, perhaps even more fireworks with the benchmark annual revisions, that first guess of it. So Trump has looked at this before. He's come after it when he's talked about job revisions. And this one will definitely get a lot of eyeballs.
What do you make of some of the commentary, Molly, that the payrolls report that this is commentary we've gotten in the last 10 days or so, that the payrolls report is not important anymore because of the way the data is gathered? Oh, you've had a lot of folks. You've had a lot of folks. I mean, you even had the nominee for to head up the department come out and say, well, maybe we suspend it. This was pre-nomination.
Right.
Maybe we suspend it before and improve the data gathering process before we move forward with it more.
Right. So I would say the jobs report is absolutely still very important. And yes, what you're saying here about E.J. Antoni, who's Trump's pick for the next BLS commissioner, who, by the way, is still subject to Senate confirmation, and Senate's out through September right now. So nothing really moving on that front at the moment. But yeah, the payrolls report is definitely still important. And I had a story out yesterday outlining what a BLS commissioner can and can't do. One of them is that he can't suspend the jobs report. It's considered one of these really important economic indicators. We don't need to get into the acronym that describes it.
Right.
But by law, data agencies are required to put out those principal reports, and the jobs report is one of them.
All right, good to know. Last question to you, Ira. I do think about the White House, the president, putting pressure on things or saying things with what we just kind of take for granted, that we're going to get these economic reports, that the Fed is going to be independent. I am curious, as you watch the rates market, if you're hearing from traders and members of the community, the pressure on the Fed and Fed Chair Jay Powell in particular, and the constant commentary by the president that I'm going to, here's my list of maybe who I'm going to, announce for the next Fed chair, or I'm going to announce it soon. Is that impacting Fed policy? Do they think it will ultimately impact Fed policy, put pressure on Jay Powell to do something that he might not want to do?
I don't think so. I mean, certainly, I think Jay Powell's going to treat himself as a lame duck. It's pretty clear that he's not going to get reappointed, right? So I think for him, it's like, I'm going to do the best job that I can, and I'm going to keep on doing what I think is right. The president can have his opinion. I mean, just like we all can, as to what the Federal Reserve should be doing. It's my job as an analyst to try to determine what they will do. And I think this Fed, right, until we get more nominees who are likely to be much more dovish, that President Trump appoints, this particular Fed is going to probably continue to be somewhat cautious about cutting interest rates, because they don't want to make the same mistake they made last year, right? This time last year, the economic data was actually pretty bad, and then they cut rates 50 basis points in September, and then the economy turned around, right? So I think they are worried about inflation. And so unless we get an absolutely terrible jobs data, it's, you know, maybe you can make the case that the Fed is going to cut 25, but cutting more than that, like you'd need to have something astounding on the employment situation to make the Fed and all of the committee, right, or a majority of the committee think you should do more than 25 basis point move in September.
Ira Jersey, he's Bloomberg Intelligence Chief U.S. Interest Rate Strategist at Bloomberg Intelligence headquarters in Princeton, New Jersey. Also a big thank you to Bloomberg News Economics editor Molly Smith, who joined us here in the studio. Taking a look at equity markets on this Thursday afternoon, just about 90 minutes to go until the close of equity trading. The S&P 500 down 0.1%, the NASDAQ down 0.1%, the Dow down 0.2%. The economic data that we got this morning, everybody's talking about PPI and jobless claims. Tomorrow, though, retail sales is what we'll get.
All right, everybody. And we should remind everybody that that PPI number coming in at a 0.9% increase. So it did come in hotter than forecast, and core also coming in hotter as well. Year over year, PPI 3.3% and core is at 3.7%. So it's definitely ticking above what the Fed likes to hit in terms of that 2% number. As for the president, just off a press event at the White House, he did say inflation is down to a perfect number. He said hardly any inflation at all. He also mentioned the stock market soaring, 401ks soaring. He also talked about something that is certainly a focal point for us, and that is the meeting between the United States President Trump and Russian President Vladimir Putin. The president saying that he thinks President Putin will make peace, and also talked about a second meeting will be more important than tomorrow's, and talked about potentially European officials being part of that meeting. And that is kind of where we want to start. Getting an end to that more than 3.5-year-old war will likely take time and more than one meeting, as we just heard from President Trump moments ago.
We have a meeting with President Putin tomorrow. I think it's going to be a good meeting, but the more important meeting will be the second meeting that we're having. We're going to have a meeting with President Putin, President Zelensky, myself, and maybe we'll bring some of the European leaders along, maybe not. It's, I don't know that it's going to be very important. We're going to see what happens. And I think President Putin will make peace. I think President Zelensky will make peace. We'll see if they can get along. And if they can, it'll be great.
All right, that, of course, was President Trump just earlier this hour, talking from the White House, talking about meeting President Putin, talking about expectations for a second meeting, talking about bringing European leaders in, and saying that he thinks President Putin will make peace. He also said he thinks President Zelensky of Ukraine will make peace. So we are going to be watching that certainly tomorrow. All right, let's get to our guest, because this is kind of our big backdrop. We welcome to our studios. She's been patient as we go through all of the news today. And here at Bloomberg headquarters, Nicola Willis. She is Minister of Finance for New Zealand, joining us here in studio. There is a lot going on. Thank you for your patience. Welcome, welcome. How do you see kind of the macro environment? There's so much going on for so many different countries. We have a very active White House. We call it an activist White House. And I'm just curious, how would you describe the state of world affairs today?
Well, I think that there's considerable uncertainty in world affairs today, where there were once things that were given and were very predictable. We are now seeing more volatility in policy decision making, which has implications for investors and for sovereigns in terms of the way that we go about things. For our part in New Zealand, we tend to want to be a beacon of stability amidst all of that, to say, you know what, we're going to continue to be rules-based. We have low, stable inflation. We have declining interest rates. We're going for growth. We trade with many countries around the world and wish to continue to pursue freer trading relationships. We have prospects for growth. And so we aim to be stable, predictable. We have secure institutions, and we think those things will be at a premium in the coming years as there is more volatility.
Mr. Willis, whenever we have officials from other countries visiting the U.S., which is a big part of your job, we always ask the question about a particular trip. Why are you in New York right now? Why are you visiting us right now?
We're here because we value very much both our economic and security relationship with the United States, and I'm pursuing more economic growth for New Zealand and New Zealanders, and we believe it's in the interests of both of our countries to forge stronger trade and investment ties in pursuit of that.
So how does that work in an America First environment, in an environment from Washington, D.C., where the communication has been very strongly, this is an administration that is looking at the priorities of the U.S., whether or not it affects other countries in a negative way.
Well, quite simply, our proposition is it's in the United States' interests to have a strong and growing relationship with New Zealand. We're part of the Five Eyes security partnership along with Canada, the United Kingdom and Australia, and we continue to believe that's very important for the United States. We also have a very complementary trade relationship. We export primary products, tech services, which Americans value, and equally we import significant amounts from the United States, and we'll continue to do so. We, like many countries, are increasing our investment in defence, and it's likely that some of the kit that we will be purchasing in future will be manufactured in the United States. Similarly, when our national airline replaces its fleet, it's likely that some of those planes will be produced in America. We have very strong and long-standing people-to-people ties. Our two countries have got along well for many, many decades, and we think it is in the interests of both countries that New Zealand continue to be a strong relationship that the United States can look to and rely on.
So is this White House, though, impacting the relationship, the strong relationship that New Zealand has had with the United States in any way?
We continue to view the United States as our friends. Now, of course, we would prefer not to be facing additional tariffs. Find me a country that says, yeah, we really like additional tariffs. And we're not in that, we're not in that situation. And we have a history of pursuing freer trading agreements. We have very, very low trade barriers for United States imports. And we feel we've treated American exporters very well. So we would prefer to be on a lower tariff rate. We've ended up at 15% as a base rate, which reflects the fact we have a small trade surplus with the United States. We're talking very marginal New Zealand dollars, 500 million. So it isn't big. We don't really think...
But it's disappointing that it wasn't maybe the 10% that folks were thinking initially.
We would have preferred that. We understand the rule that's been applied, but it's hard to conceive that New Zealand, a country of 5 million people, is any kind of threat to the manufacturing or industrial base of America.
Does it lead, though, and I guess we're trying to figure out, we talk a lot about the geopolitical world order changing around. We talked about, the president was just asked about maybe closer ties between China and Latin America. China already has a presence, we know, in Latin America, but maybe they are increased as a result of what's going on. Are you forging different relationships because of some of the strained relationships out of the United States or strained relations out of the U.S.?
I wouldn't characterize it that way. New Zealand has always looked to forge relationships around the world and to reinforce the rules-based system wherever we can and to work through multilateral institutions because we're small and our voice will never be the loudest. Like the United States, we have a strong and important economic relationship with China that we've been able to maintain while also taking very different points of view on many matters, and we've been able to balance those two things.
So not strengthening them with China because of maybe what's going on?
No, today? I would not characterize it that way, but continuing to lean into our relationships where we have common interests. So we are members, for example, of the CPTPP trade relationship, and we have welcomed the EU's interest in becoming a dialogue partner and looking to reinforce that trade arrangement. We've recently signed free trade agreements with the United Kingdom, with the European Union, they're important, with the GCC, the UAE, and we're pursuing a trade relationship with India. We think it's very important as a small exporting country that we have options in who we trade with, and wherever possible try and open more doors. We've got a grand history of doing that. We were one of the first countries in the world to drop subsidies to ensure that we were genuinely open to the world. We won't get rich selling to ourselves. We're too small for that. So we do well when the world welcomes our goods and services.
Minister Willis, are you meeting with any U.S. officials on this trip?
Not on this trip. 36 hours only, I'm afraid. But I look forward to returning to Washington later this year for some of the annual meetings. And at that point, I would hope to meet with some people from the administration.
At that point, will part of your job be to try to reduce the 15% tariff on goods from New Zealand?
Well, look, we're realistic about the fact that the Trump administration have set a clear parameter that countries that have surpluses are unlikely to get reductions in their tariffs. But we will continue to advance our case, which is that we have a very complementary trade relationship with the United States built on a security partnership and a very long history. And we will press the case for our exporters that we would we think, be fairly facing a lower rate. And we will continue to share that message with our friends in the United States to make sure that if there is reconsideration of the current tariff regime in future, that we're front of the line for reconsideration. We think we should be. We're Kiwis. We play fair. We play by the rules. We sell you Sauvignon Blanc tourism experiences and lean red meat that Americans love. And we would like you to be getting it at fair prices into the future, and a lower tariff rate supports that. And we expect to continue buying huge amounts of American goods into the future. So there's nothing to fear from giving New Zealand a lower tariff rate in the future.
You're also great sailors. I'm just going to point it out as a fellow sailor myself. We're talking with Nicola Willis. She's Minister of Finance of New Zealand here in our studio at Bloomberg headquarters in New York City. What are you guys doing to encourage foreign direct investment?
Yeah, well, we're very big on this. So we've set up a new entity, Invest New Zealand, to connect international investors with New Zealand. We're reforming our legislation to make it easier for foreign investors to make investments, and administratively we've sped up the process by which they can do that. Particularly, we've introduced golden visas, the Active Investor Plus, which means that investors can get residency rights in exchange for making investments, either actively or passively in New Zealand assets.
Is it working?
It is working. We've been delighted by the response, a really high degree of interest. Hundreds of people have applied for those visas within the first few months, pledging over $1 billion in New Zealand funds. And I think that reflects two things. One, New Zealand is a safe, secure place in a world that increasingly is less so. And people like the idea of having that residency in New Zealand. But second, they can see that many of our investment opportunities are currently undercapitalized. Investing in New Zealand is a good bet.
Can they buy real estate in New Zealand, though, if they get residency?
Not currently. That is excluded. Our government, which is comprised of 3 parties, has been in discussion about loosening those regulations so that those who get an active investor visa may in future be able to purchase a property in New Zealand.
How far into the future? What are we talking about for a timeline here?
Well, those talks have been underway, and you would expect that a decision would be made by our cabinet in the coming weeks.
Okay, in the coming weeks. So, Carol, get ready. You can buy
I'm in.
Your little slice of paradise. We're surrounded by a big fat ocean.
I know.
We have huge amounts of land. It's beautiful. I think the world should be looking at New Zealand. We have great prospects.
Will the U.S. tariffs impact growth in your nation?
Well, as I said, we'd always prefer not to be facing those tariffs, but as a proportion of our overall trade, it is actually quite small. The more significant impact for us is the same as it is for many other countries, which is a lower rate of global growth resulting from tariffs and retaliatory tariffs.
Are you worried about a global recession then?
Well, no, not a recession, but just a lower rate of potential growth than would have otherwise been the case, particularly out of our trading partners. That then affects prices for our goods and demand for our goods.
And it can slow enough to feel like a recession, right?
Well, it can slow enough to feel like we're not meeting the potential that would have otherwise been realised. And that's been reflected in our forecasts for the New Zealand economy, in which we did pare down our growth expectations for the future based on what was developing with tariffs. You know, obviously there's a lot of water to go under the bridge to see how all of this does play out globally, how countries are affected and what it means. For New Zealand's part, we continue to forecast strong growth, low inflation. That will remain the case, but a tariff-free world is one in which we grow faster.
Do you think that might come back if there's a different president in the White House?
I think countries will always continue to pursue their own interests, as they should.
Yeah.
And that's why I will keep singing the song for freer trade, because that is in New Zealand's interests.
So glad to get some time with you. Thank you so much. Tim and I both enjoyed it. Nicola Willis, she's Minister of Finance for New Zealand, right here in our studio.
Hey, let's get an update on today's trade and the top business stories. Charlie Pellet is standing by. Hey, Charlie.
Hi, thank you very much. And here's what's going on. We do have U.S. stocks trading lower right now, with the Dow, the S&P, NASDAQ, all in the red. S&P little changed as a pickup in inflation this morning lifted bond yields and the dollar. Traders are paring bets that the Fed will cut rates next month. So here's where we stand now. S&P 500 index down 3 at 64.63. That is a drop of under 0.1%. We've got the Dow Industrials down 69, a decline of just about 0.1%. The Nasdaq Composite Index down 13, a drop of just about 0.1%. On a down day for the rest of the market, our Mag 7 index pushing higher, up by 0.4%. 10-year 4.29%, with the 2-year 3.73%. Gold is down $17 the ounce. Spot gold right now lower by 0.5%. A rally for West Texas Intermediate crude up 2.2%, $64.03 a barrel. And Bitcoin is now slumping by 4%, holding just above $118,000. So again, the Dow, the S&P, NASDAQ all in the red. Peloton Interactive planning its biggest product upgrades in years, including refresh hardware. Peloton Interactive lower by 1%. And Apple's blood oxygen tracking feature for its smartwatch is returning to the U.S. after a years-long legal fight. Apple shares today, they are trading lower by 0.2%. Recapping stocks lower, Applied Materials coming up after the close of trading. And for on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, the specialty insurer Axis Capital Holdings reported earnings late July. Second quarter revenue matched Street estimates. It was up 13% year over year. Company highlighting AI in its press release. The stock, I should point out, sold off about 3.5% in reaction, but it is up nearly 9% year to date and up 30% in the past year. They also had some news today. So let's get to it with Vince Tizio, President and CEO of the $7.5 billion market cap company, Axis Capital Holdings. Good to have you back with us. How are you?
Thank you, Carol. Great to be with both of you.
We talked with you in mid-March.
Indeed.
A lot's happened since then.
For sure.
How has your world changed?
Well, it hasn't changed. The company is performing exceedingly well. As you mentioned in your outset comments, we had a very strong second quarter, culminating the first 6 months of 25, really well positioned. Today we announced a planned succession of Pete, my partner, our CFO. We've been working on this collaboratively for a number of months. We're really excited about having Matt join our company in 26.
You're talking about Matthew Kirk, who's going to join the company next year, CFO of NStar Limited. Right. He's been in the business he's been an executive for quite a bit of time, 3 decades. We'll get to a little bit more on that. I want to get to what Carol said about AI and the way that you guys are using AI when it comes to analytics, when it comes to underwriting policies.
Yeah.
What are you doing differently now that you weren't doing a year ago?
Yeah, so first it starts with what's our objective? What's our purpose, right? We want to enrich the experience of our customers, our employees. We want to bring innovation to our policyholders. What does that translate to? It includes bringing in insights through data recognitions that we haven't had access to in our historical past, creating not only predictive insights, but bringing greater predictability to our policyholders.
Does that mean lower costs?
Over time, it can. For
lower
better
costs
risks.
For customers?
For customers, for
or higher margins